down 64 points. The British FTSE was down 1%. And in some macro cues, Sweden's central bank, Riksbank, cut interest rates by 25 basis points to 3.5% from 3.75%. Okay, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in, as always, bright and early to tell us exactly that. Good morning, guys. Thank you so much for joining in. Let me come across to you, Vivek. What is the market setup looking like today?
Well, good morning. After almost 8 sessions of continuous rally and very strong overnight cues today, slightly subdued cues. US markets have snapped the 8-day losing streak, but it's not been a sharp fall. It's just been around 0.15 to 0.3% fall across all of the US indices. Now, coming to oil prices, they continue to be quite supportive given the fact that Brent prices again yesterday were down almost 0.6%. WTI prices down almost 0.5% yesterday as well. Now, talking about Indian markets continue to see very strong up move yesterday. Nifty at one point, trading above the 24,700 mark. Financials were the sector that actually outperformed in yesterday's trading session, led by large private banks. Advanced decline ratio on the back was that firmly in favor of the bulls and firmly in favor of the advances, which was the sectors that outperformed. The Nifty IT index, a record high, continued to see very strong buying activity. Along with that, life insurance, remember that had seen a sharp knock on Monday, recovered very sharply yesterday. A lot of positive brokerage notes coming in there, aiding the up move. Shipbuilders, however, on the other side, continue to see downward trajectory. Some of the names there seeing very sharp cuts from the recent highs. What is it that we'll be watching out for today? Very large share offerings will be on offer today. So, Cyan, DLM, PNB Housing, expect large trades over there. Asian markets, Gift Nifty, all of them indicating a muted start to our own markets today.
All right, so that's the market setup. Let's talk about the stocks and news. Sudarshan is joining us with that entire list. Good morning, Sudarshan.
Morning, Sonal. So we'll start with L&T. Bombay High Court has ruled in favor of the company in service tax case. The court has quashed and set aside GST's show cause notice of more than rupees 2,200 crore. Keep an eye on telcos. Telecom regulator has released telecom data for the month of June. Reliance Jio has added 19 lakh users. Bharti Airtel has added more than 12 lakh users, while Vodafone Idea has lost almost 9 lakh users in the month of June. Dr. Reddy's has signed non-binding agreement with US-based company Kinomix for development of anti-malaria drug, but this MOU remains subject to signing of a definitive agreement. Cyient board has approved sale of 14.5% equity in Cyient DLM via block deal that is expected today. Sources say issue size of the deal is almost 861 crore and floor price is at rupees 748.65 per share. Also for PNB Housing Finance, sources say General Atlantic Singapore is likely to sell its entire 5.1% equity via block deal today, and for this floor price is rupees 775 per share and offer size is 1,033 crore. Petronet LNG has signed MOU with Sri Lanka's LTL Holdings for supply of LNG for 5 years. Keep an eye on Exide Industries. It has further invested rupees 75 crore in its arm Exide Energy Solutions on rights basis, and with this total investment now stands at more than rupees 2,600 crore. GE T&D India, promoters are in process of reviewing its shareholding in the company, and promoters will also evaluate possibility of a minority stake sale if required. Genus Power has bagged 3 orders of almost 3,600 crore. Ola Electrics, its scooters, 3 scooters have got PLI certificate, PLI's production linked incentive scheme.
Okay, all right. That's a long list. Thank you so much, Sudarshan, for joining in. Let's talk about the cues from the F&O space. Mangalam is joining us now for that. Good morning.
Good morning. So yesterday was a decent day of trade. You saw gains across the board on the Nifty, the mid-cap index doing extremely well. The Nifty Bank was the one that led gains as well, though towards the end we did see some bit of a sell-off, maybe on account of the Nifty Financial Services expiry and some technical reasons as well. But having said that, the Nifty Bank, the 20-day moving average is close to around 50,754. It closed above that, a little around that 50,800 mark. The day's high was 51,025, which coincides with the 50-day moving average of 51,381. So now that it's crossed and closed above that 20-day moving average, does it go past that 50-day moving average is something that we will have to watch out for. Why is it that we're talking about Nifty Bank so early? Well, because it's Wednesday and the Nifty Bank weekly options expiry plays out today. For the market yesterday, we've been making this point that it's not just the flows that matter from the FIs, but the net flows by the institutions. And yesterday as well, the reason that the markets were higher despite an FI selling of 1,400 crores is because the DII buying was 2,250 crores, telling you that there was net inflows of close to 800 crores in the cash market. Now, while the FIs must be selling in the cash market, they were forced to unwind some of their short positions in index futures given the ferocity of the up move, and that's what we saw yesterday. They bought 2,000 crore worth contracts in index futures, of which 18,000 contracts were short covering contracts itself. So from August 14th to August 20th, if you look at the FII positioning, you know, from net contracts of minus 30,000, they've gone all the way up to plus 26,000, making a swing of almost 56,000 contracts. And the longs have also increased to 52%. The 24,600 call writers covered their position, and now we are seeing action at the 24,700 call, telling you levels closer to 24,800 may face some resistance on the Nifty, though the support has moved as high to 24,600 as well. Just keep an eye out on Nalco. It's entered F&O ban today, and we have 4 stocks which have exited F&O ban. So watch out for Chambal Fertilizers, India Mart, PNB and NMDC.
All right. Okay. Thank you so much, Magnam, for that. So those are the F&O cues, and this is our Power Prep segment. With that, we'll step into a break. When we come back, we'll get you excerpts from an exclusive conversation we had with the former RBI Governor, Raghuram Rajan. Stay tuned for that.
Let's say 15 years back, previous cycle, which is perhaps the first main cycle that we saw, and this sort of investment community was also smaller and perhaps just starting to understand how to professionally look at equity markets, used to be very embarrassed to put 20x Ps or 25x Ps on stocks. That's a fundamental reality. We have tried doing that during that phase in the peak of the cycle. We used to get slammed, both by investors who used to actually question us on the rationale of a high P such as 20-25x. Now, the difference with this time is that people are a bit more liberal. I don't feel embarrassed putting 100x P rate on stocks. Nobody questions me. People feel happy about it. And the same is the situation 50, 70, 80x P. So now we don't really need to keep very high earnings for the next 2 years.
Dr. Deshpande, you know, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that are...
Welcome back. You're still tuned into Power Breakfast. Here's the CNBC TV18 exclusive. The Central Board of Direct Taxes has laid out a detailed action plan for this fiscal year to tackle tax arrears, which have soared to 43 lakh crore rupees. Timsi Jaipuria is here with the details. Timsi.
In what could ease the litigation burden for the industry and aiming to create a more efficient, transparent and taxpayer-friendly system, the Income Tax Department has unveiled its yearly Central Action Plan for the current fiscal. According to sources, the plan lists out clarity for all its field formations and officers, proposing to align policies with broader objective of economic growth and fiscal stability. As per the plan, the roadmap of the department is to have initiatives to enhance tax administration, optimizing revenue collection, reducing arrear demand gap, and yes, improving the taxpayer services. The plan, sources shared, has enlisted strict timelines for field formations for achieving budget targets, reduction in cash collection out of arrears from pending demands, litigation management, and improving service delivery standards, along with a special focus on redressal of grievances. The action plan has specifically focused on having a targeted approach for managing the tax demands, asking fields to have a clear focus on top 5,000 arrear cases, which constitute to about 60% of the total demand which is pending in the books of the Income Tax Department, which is of about 43 lakh crore rupees. And to address this real-time challenge, it has envisaged to form a special team by each jurisdiction to analyze these cases. Experts say this move will help in litigation burden reduction, and yes, something which is important right now for both the industry and the government. To be seen is how soon these measures actually result in reducing litigation and enhancing collection. Let's see how the tax department works on this proposal. Back to you.
Thank you, Timsi, for joining us with all those important details. So moving on now, former RBI Governor Raghuram Rajan has said that US Fed Chair Jerome Powell should display masterful uncertainty at his Jackson Hole speech later this week. Speaking to CNBC TV18, he also said that the US Fed Chair should not guide the markets on a rate cut. Also warned that China's slowdown is serious and structural. Let's listen in.
I suspect that in his Jackson Hole speech, Chairman Powell will, try not to lock himself into a course of action in September. The prediction is there will be a cut, but the question is how big a cut, and a lot of that depends on the, jobs report for the month of August. To paraphrase Dr. Reddy, masterful uncertainty is what I'd leave it at. I wouldn't try and guide the market more than I have to. The Chinese slowdown is serious. It's a structural slowdown because their basic growth supporters, the real estate sector is in deep trouble and still hasn't found a bottom. So there will be price falls are significant. Since 2021, housing starts are down 65%. So this is an economy which depended a lot on construction. That has been taken out of the equation. I would not focus too much on what those growth numbers are. It's important they look healthy, but I would look at the quality of that growth, and that is why the jobs issue becomes really important. We've had a very capital-intensive growth in our manufacturing sector. If you look at the segments of the IIP that are doing particularly well, they're typically the more capital-intensive segments, and the labor-intensive segments are not. We are getting the China +1 flows. Why is it that they're not creating many more textile jobs, many more leather jobs?
Okay, we'll slip into a break now. When we come back, we'll talk about the commodities market as always. Stay tuned for that.
Turned towards in the past couple of years.
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically, if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Our broader philosophy is to stay invested, but then alter your portfolio in such a way that you don't end up taking risk on low quality companies. Right? That's like a tricky thing. We're okay with high valuation companies as long as they're high quality or have a visibility for growth. So do remember that when liquidity is there, liquidity finds a way to get sucked, which primarily means you're going to see an acceleration in fundraising cycle as well. And not all of the fundraising will be high quality.
Welcome back. You're still tuned into Power Breakfast. Let's talk about the commodity space. A lot of action there. Manisha Gupta is joining us to get us up to speed. Hi, Manisha. Good morning.
Morning, Sonal. Thank you for that. Well, the copper prices continue to hold around 2-week highs, and the latest gainer clearly has been aluminum, trading at a 6-week highs right now. There is increased fund buying coming back in metals. Also, for China, aluminum imports gaining by 11.5% for the month of July has been yet another reason for people to start going long in case of aluminum. The other area that continues to do very well is the gold prices. We've yet another hit in all-time highs overnight at $2,520 an ounce in case of gold. Well, the markets are pricing in rate cuts from US Fed in the month of September, and then more policy restrictions from Sweden, European Central Bank, Bank of England, and that continues to support the gold prices. One thing that hasn't done so well overnight has been the sugar prices globally. They are now trading at a 2-year low. There is weak China demand, decline in crude oil prices, and a strong crop expectation in India. All of that seems to be weighing on in case of sugar.
Okay, all right. So that's what's happening in the commodity space. Thank you so much, Manisha, for joining us today. With that, we'll do one thing. We'll take your leave on this edition of Power Breakfast. But do stay tuned. Bazaar Morning Call comes up next with all the action.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI/ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
In a very constructive meeting with Prime Minister Netanyahu today, he confirmed to me that Israel accepts the bridging proposal, that he supports it. It's now incumbent on Hamas to do the same.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. Markets are a little tepid, globally speaking. They've had an up and up kind of a journey. The US, that is specifically here in India, we saw a bit of a breakout move. So can that sustain? That's the question. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, good morning.
Morning.
And Nigel, good to have you back. I guess we're dealing with global cues that are not fully supportive today. There's been some profit taking across the board. We'll see how it goes. Because even yesterday, I remember in the last half an hour, we started giving up a little from the top. So interesting right ahead.
Well, that's right. So that buy on dips thesis will be tested. Let's get straight to the action.
Absolutely. And actually in the US markets, it was not really this way or that way. It was a little lower. So obviously lower is lower. But it was not backed by volumes. For example, I didn't see the volumes last night, but the day before volumes were 50% lower, as compared to what we had over the last 20 days. I mean, the 20-day average. And I suspect yesterday as well, it was far lower than what you usually see. So these moves that you're seeing in the US, and by the way, that holds true for the move up as well, and of course this pullback as well, is not really backed by all of the market participants really sort of pulling their weight. But in any case, I mean, you know, price action is what it is. So US markets ended lower after 8 consecutive daily gains. S&P down about 0.2, the Nasdaq down about 1/3%, Russell 2000, there was a bit more sort of damage there, 1.25% lower. Now, a fair bit of moves on, you know, yields, etc. The Treasury market, the 10-year yield lost about 6 basis points. We're at about 3.81. So that's interesting. The euro rallied. The euro USD reached a new 2024 high of 1.1125. As a result, as a consequence of that, the dollar index, which is essentially the dollar as against a basket of currencies, that slipped once again to 101.39. Again, I mean, something which I think is good for emerging markets broadly, but I think yesterday's impulse move was, of course, on the back of what we saw on the euro, which has got a large outsized role on the dollar index if you look at the dollar basket. Up ahead, we will see the US, that is, will watch for data. There is some later today, but nothing of consequence. I think Fed minutes come out later today, tonight in the US. But the big ones are the flash PMI numbers, which will give you a sense of how the economy is doing. And then, of course, the Powell speech at the Jackson Hole Summit, that is only on Friday. And, of course, markets will, unless and until it's really, you know, it's not Jackson Hole, a lot of attention which is paid, and the snowy mountains and, you know, the speeches and the programming, etc., which happens from there. But it's not something which has moved markets that much. Or if you go back last 10, 15 years, maybe once or twice. I think 2021 was one of those Jackson Hole summits where markets moved meaningfully. But are we at that stage? We'll see. I don't think so. Gold rallied as well. It set a new record high. I think it got to about 25.34 and then pulled back to about 2,500. And that's, again, something which is worth noting, especially here in India. Oil prices, they're now down to about $77 a barrel. They've been on the back foot. OMCs, oil companies, etc. were in focus yesterday. Now, where does all of it leave us here in terms of levels? So the Nifty yesterday closed above the upper end of the gap area. Although by close, we did give up about 40 points from the day's high. The day's high was about 24,738, 740-ish was the high, and we left off at about 24,700. So a little off the highs. But we've sustained above that gap area, which is the most important thing, and we need to do that. Not give gains, not let the Nifty sort of slip below that once again. On the way up, and I said this yesterday as well, the path to a new all-time high and the earlier all-time high, which is 25,078, clears up. You can broadly see the outlines of it. It perhaps will take time. It's not very far away. In booming markets, it's a two-day job. In not-so-booming markets, it may take a little bit longer. Supports come in at the 20-day moving average, which is the 24,500 mark roughly, 488 to be precise as of yesterday's close, and then the 40-day exponential moving average under it, which is 24,218. The Nifty Bank finally got its head above the 20-day moving average. It had struggled under it for a while. Yesterday we got a close above it. Not a very decisive close, but a close above it nevertheless. And here, you're basically looking at next targets as the 40-day exponential moving average, which is 50,865. And there is a falling trend line, and the Bank Nifty will meet that trend line at 51,410. So these are the two next levels on the Nifty Bank. Supports come in at the Monday's low. That's a simple kind of, a low that you look at on a daily basis. 50,283 is that number. GIFT Nifty will indicate what the start is going to look like. It's a flat, absolutely flat start, 18, 19 points lower. Surabhi.
Absolutely, and I guess flat is not bad looking at how a lot of the Asian markets have opened out, because many of them are down between 0.5% to as much as 1%. I was actually looking at the move in the currency space in a little more detail, and there are all kinds of narratives. One narrative on this dollar's persistent weakness is that perhaps, this is a bit of a, Kamala Harris winning, Trump losing kind of a, build-up that's happening, because the market seems to be believing that Trump's policies are going to be more inflationary and Kamala Harris's won't, and therefore that could have a bearing on Fed policy. Anyway, when it's election season in the US, all kinds of theories doing the rounds. But the short point is that the index, the dollar index, is at an 8-month low. The last time we were below 101 was in December. So we're still not below 101. Let's see how this one goes. The DXY is down about 2.5% in August. And this is despite the improvement in data that we've seen. That same data helped the equity market snap back, but not the currency. Jobless claims, what we saw in services, and of course the retail sales print. So that repair did not happen in the USD. It happened only in the equity screen. So that's something to keep in mind. By the way, the dollar yen remains in focus as well. And the dollar yen, I mean, there versus the yen, the dollar continues to weaken even more. I mean, we're seeing levels of about 145 once again on the dollar yen, so need to watch that. We've had export-import data out of Japan this morning. It's a little mixed for the month of July. Exports have grown, but not as much as expected. They've grown about 10.3%. The number looks really good, but the expectation was over 11%. Imports have surged in Japan. Imports are up almost 16.5%, which is more than expectations. So that's just a bit on the Japanese data. Let's come back home and see the cues over here. As usual, FIs are still on the sell side, barring that one day, I think it was Monday, when we had a positive figure come through, which was Friday's number. The rest of it has been negative, so we're still down about 1,500 odd crores on the FII front. Domestic institutions net buyers of about 2,200. In terms of individual pockets, stocks and, corporate action that will be in focus, I'll watch out for telecom because we've got the numbers in. Jio is actually slowed down. The pace has slowed down. The addition, and if you look at it month on month, there's a loss of about 2.8 lakh subscribers. Bharti has continued. I mean, flattish trend, minor increase month on month. Voda Idea still losing customers. It's lost about 8.6 lakh, which is not as much as how many it lost. In the last month, it was 9 lakh, over 9 lakh customers lost. This time, it's just about 8.6. So we'll see how that goes. But the big story and the focus is going to be Cyient. Cyient is going to do a large block trade. It's going to sell about 14.5% stake in Cyient DLM. The rationale is that they need to pare down debt and maybe they'll invest more in M&A. But it's a big block trade, so let's see how this goes. I think it's going to be Nigel, individual stock action, and that has been the case last couple of days. That really keeps the market busy.
Well, that's right. And give and take everything, you'll have to lean towards the long side rather than the short side. Now, going by the Q is the weaker dollar index as well. And this market has been trending up. Well, yesterday was a good trading session. In fact, there was a bout of short covering that did take place. So besides the cash market flows, you saw on the Nifty, the open interest is down by close to 2%. On the Nifty Bank, there was a bigger bout of short covering that did take place because the market moved up and you did have the Nifty Bank that was lower in trade. What did the FIs do? Well, it perfectly ties in with the data points that we're looking at. They covered 18,000 shots. They added close to around 8,000 long. So that's a swing factor of around 26,000 contracts. They remain net long, but mildly so. So if you just pull up, both the FI as well as the clients, both of them are net long on the index with around 26,000 and 35,000 long contracts odd. And on individual stocks as well, they've maintained their long bias. Well, moving to, the options data, there appears there's a bit of a strategy in place at around 24,700 call as well as put. What is that? It's likely to be a short straddle. When you write the same strike, the call and put, you pocket the premium of roughly around 200 rupees and you're bracing for a bit of a range. And this contract expires tomorrow itself. So if you take 200 rupees and you add to the 24,700 and you deduct from 24,700, you're getting the broad band on the Nifty. On the lower side, you're looking at around 24,500. On the upper side, you're looking at around 24,900 odd. And the level should come up for you on the screen as well. The 20 DMA is closer to around this 24,500 mark. If you get past this level, then you're looking at fresh all-time highs, which is above the 25,000 odd mark. But today, the Nifty Bank will particularly be in focus. It had a bout of short covering yesterday. It ended close to around the 20 DMA. You wanted to hold above the 20 DMA. And yesterday's high was important as well at around 51,000. That's the highest you've seen in the last couple of months. Finally, stocks that we're looking at, a few of them came out of the F&O ban, so I'll keep an eye on that. You had Chambal Fertilizer, India Mart, you had NMDC, as well as PNB. All of them came out of the F&O ban. We've been making this point that a large number of stocks in the F&O ban, some of them come out. Expect some action on some of these names.
All right, Nigel, thank you very much for that. So that's a summary of everything you need to know as we begin this Wednesday morning. Rajiv Agarwal is now joining us. He's managing partner and fund manager at Doordarshi India Fund. Rajiv, great to have you with us here on the program. Thank you very much for your time. Prashant this side. Are we looking at a broadly kind of risk-on phase once again for equity markets, especially the best performing markets, which is India and the US? What's your sense?
Absolutely. I think you have seen in the last few weeks, especially as Fed and the various Fed governors have come in and talked about, they are comfortable lowering the rate, the equity market has taken off. And I think as that happens, the world market is also pricing something similar. And therefore, the risk-on trade that you are talking about, Prashant, is something that is playing out in full force right now.
And it takes us to basically looking at newer highs in that sense, both in the US and India, Rajiv, you would imagine?
Yeah, I mean, I think this market, as last time you talked about, Prashant, that, this is a Teflon coated market, and I feel so. And, everything that we are seeing sort of continues to confirm the same. And I feel like, at this point, there is nothing really which is a big hurdle. I think in the past, interest rates were a hurdle, and now that is also being taken out. So at this point, I think, unless in the US, of course, there's a big election coming up, and we will see how that plays out. So that is a big uncertainty, and we'll have to sort of wait on how that plays out. But overall, I think from an Indian market perspective, I think things are looking pretty good.
Hi, Rajiv. Good morning and good to see you. Ben, thanks a lot for joining. And Rajiv, do you think we're getting a little ahead of ourselves, though? This Teflon coated, buy the dips. It's been working. It's become all too easy, actually. Your view, and also you don't shy away from naming a couple of stock sectors that you like. Anything you've added in the last couple of weeks?
Yeah, so I think, I think this is a market one has to be careful. Just because we are hitting new highs doesn't mean that we should let our guards down. And, when everybody is greedy, one has to be fearful, as Warren Buffett says. And so I think that is something that we are sort of doing for ourselves, which is to ensure that we are asking for more margin of safety as the markets keep running up, because it's very easy to let our guard down and just go with whatever the markets are doing. But we are continuing to look for new opportunities. We always do. And frankly, at this point, given how the markets have done, it's very hard to find that many new opportunities. What I have talked on your show in the past has been in the banking and the NBFC space, and that space continues to look interesting vis-a-vis the rest of the market.
Okay, the point is, Rajiv, that the market, at least here in India and maybe even around the world, markets seem to be tiding over every possible issue, every possible hiccup. I'm not even calling it a crisis. And there's just buying at every dip. I don't know, I mean, when was the last time in your career you saw this? Are there any parallels? And how should one navigate a market that basically refuses to fall? And you're saying it's tough to find buy ideas. What should investors be doing?
Yeah, so I think one of the things is that if we don't find good ideas, we're happy to keep cash. And so that is one thing I would encourage investors to do, is to, if they're not finding good ideas, don't be in too much of a rush to chase whatever is working, because when things go down, it's very hard for you to then figure out what to do. And so I think the important thing is really to keep checking your thesis, ensure that you are comfortable with the companies that you own, look at the new data points, and revalidate your thesis. And especially as the prices keep running up, you have to decide from there on what has been the returns. So I will give you an example. Today, I was reading Wall Street Journal, and they were talking about the S&P 500 forward price to earnings is around 25 times. And when S&P 500 is at 25 times price to earnings, the forward return for the next decade is almost zero, is near zero. So really, people think markets are doing well, and therefore it will continue to do well. They extrapolate. But the problem is, as the markets go up, the forward return keeps coming down. And so one has to be very mindful of the fact that the forward return will not be as good if the prices keep going up, and one has to account for that. Now, the momentum may carry on for some time, but at some point that momentum will break if the fundamentals don't support that momentum.
Rajiv, I'm just cross-checking that data point. It was a very interesting one that you brought up. If I heard you correctly, the data says that the last time the S&P 500 was trading at forward earnings of 25 times, it was a zero return decade, the next 10 years that followed. Is that right?
That's right. That's right.
I'm going to remember that.
Around the 2000, in the 2000 period, where the S&P 500 is not high.
Okay.
All right, Rajiv, we leave it there. Thank you very much for joining us, and appreciate you being here on CNBC TV18 as always. We'll take a quick commercial break here, but we'll sort of leave you with some more opinion that we're getting through the course of the day. This is Jonathan Garner of Morgan Stanley, who's weighing in. He says that the EM outlook remains tricky. They see lower targets for China amid ongoing deflation and institutional risks, leading them to downgrade Mexico. They remain overweight Japan and India. Jonathan says that India presents a compelling structural opportunity. He adds, in their view, 11 to 12% nominal GDP growth, the rupee support from improved macro stability, and a rising profit share of GDP in India bode well. Relative valuation stand at 0.2 to 1.3 standard deviations expensive versus history, which according to him is justified by superior profitability and net profit margin and a positive bottom-up and a country sort of outlook.
Let's come to bonds then. Neeraj Gambhir of Axis Bank says the 10-year Indian benchmark bond yield traded in a narrow range of 6.85 to 6.8% for the week. He says US Treasury yields hardened as jobless claims data came in lower than market expectations. Consequently, he says domestic bond yields inched up higher on Friday. He adds that GSEC auction cutoffs were on expected lines. He's expecting the 10-year benchmark bond yield to take cues from Powell's speech at Jackson Hole and trade in a range of 6.8 to 6.9% this week.
Well, a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But let's run you through the list. We're looking at PNB Housing Finance, Petronet, L&T, Dr. Reddy's, Genius Power. All of them will be reacting to positive news flow, while we have Cyient, DLM, Vodafone Idea, NHPC, HG Infra, and Pratap Snacks that will be reacting to negative news flow. For the time being, though, we slip into a short break. We come back. We'll focus on all those top 10 stocks that we're talking about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that including
Welcome back. So let's talk about all the stocks that should be on your radar as we kickstart trade this Wednesday morning. We have our entire team standing by with the CNBC TV18 list of top stocks to watch. Let's start off with the Cyient DLM, which would be in focus because the parent company Cyient may be selling a large chunk of equity via block trades. Abhishek, I know you're looking at Cyient as well as PNB Housing. Let's go to both the stocks.
Well, to begin with, Cyient board has approved the stake sale of 14.5% in Cyient DLM Limited. So sources do tell us that the issue size would be around 861 crore. Floor price is at 748.65 per share, which is at a discount of 5% to yesterday's closing price. Now, promoter holding will decline from 66.66% to about 56.1% post the deal. This is, a lock-in period of 90 days that is there for the residual stake of the promoter. And if you take a look, sole BRLM is Axis Capital. Now again, sources do tell us that General Atlantic Singapore Fund will be selling their stake in PNB Housing. The floor price is at 775 per share, which is at a discount of 4.5% to yesterday's closing price. The offer size is about 1,033 crore or about 5.1% of the equity. Looks like a clean out trade. The entire stake of General Atlantic will be sold in PNB Housing in block today. The sole BRLM is IFS Securities over there. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. Well, let's hop across to Rima. She's here to tell us about the telecom companies that will be in focus post the June subscriber data. Morning, Rima.
Hi, good morning. So TRAI has released the month of June subscriber data, and this is what the numbers look like. So Bharti's added about 12.5 lakh subscribers, similar to what they did in May. Vodafone Idea, despite that fundraise and upping of the capex, continues to lose subscribers. So they've lost 8.6 lakh subscribers, less than what they did in May, which was over 9 lakh subscribers. It's still a big number. Reliance Jio continues to add a healthy bit and leading in terms of subscriber adds at 19.1 lakh. But just bear in mind that these are June data, so they're already captured in the Q1 numbers that we had and the subscriber additions.
All right, Rima, thank you very much for that. There's, of course, some tragic news out of Sikkim. And NHPC is the company which perhaps gets impacted. Vivek has got details here. Vivek, morning.
Well, good morning. That's right. So, on the back of a landslide in Sikkim, what's actually happened is that NHPC that had a power plant over there called Teesta 5, this particular power plant has a capacity of close to 510 megapart. That got affected. The TRT structure, that is the tail race tunnel structure, has actually got impacted. Now, remember, this particular plant is still not operational given the fact that there were flash floods as far back as October 2023. Since then, this particular plant has been shut down. And now what the company is saying is that they're still assessing the situation. Earlier, post the flash floods in October 2023, the company had said that restoration works were expected to be completed by March 2025. Now it remains to be seen whether there is any further delay as far as this particular power plant to be operational again.
Okay, so yeah, tragedy. And NHPC, this plant has been troubled for a while now, as Vivek pointed out. Thanks very much, Vivek, for the updates there. Let's see if there's any impact on the stock. On to Sonal then. Sonal, news on Petronet LNG. They're looking at a long-term contract?
Oh yes, it's a long-term contract, which is a positive for the company. They have gone ahead and signed an MOU, which is with LTL Holdings in Sri Lanka. This is for supply of LNG to their dual-powered power plants in Colombo. It is a 5-year contract, but the company says it is extendable after agreement with both the parties. Now, there are some calculations which ICICI Securities has done. Now, remember, it will be done from the Kochi plant, where already the volumes have been around 0.9 to 1.1 million tons per annum. ICICI Securities says, considering the power plant capacity, there could be additional volumes needed of 0.3 million tons per annum of gas. This would mean additional volumes coming in from Kochi plant, which is a positive, though the EPS addition could be 0.3 to 0.5 rupees per share only on an EPS of around 28 rupees. But this is an overall positive, and that's why the stock could see some green today.
Okay, all right, Sonal, got it. Thank you so much for that. Back to Vivek. He's watching out for some more stocks. Vivek, what's the list looking like?
Well, two stocks where yesterday we saw large block deals, just dissecting the information over there. So HG Infra, again, yesterday we saw a couple of large block deals, almost 2.5% equity exchange hands. So 3 promoter family trusts have actually sold stakes. So Girishpal Singh family, Harendra Singh family and Vijendra Singh family, all of them have paired close to 0.9% stake in the company. All of them held close to 25% stake as well. Now, who are the buyers? The buyers were Aditya Birla Sun Life Mutual Fund, close to 0.75% stake they picked up. Tata Mutual Fund also picked up close to 0.7% stake. On the other hand, Pratap Snacks also saw one promoter actually exit close to 0.6%. Rajesh Kumar Mehta sold 0.6%. He held a total of 2.85% stake in the company. This particular deal was done at a rate at 865 rupees a share.
Okay, all right, Vivek, thanks a lot for that. Well, and let's wind this down with Sudarshan, who's joining us to tell us about some stocks in the news. Morning, Sudarshan.
Morning, Nigel. So I have three stocks with positive news flow. We'll start with Dr. Reddy's. Company has signed non-binding agreement with US-based company Kinomics for development of anti-malarial drug. And this MOU remains subject to signing of a definitive agreement, and commercialization of this drug will be in US, Europe and in low and middle income countries. Second is L&T. Bombay High Court has ruled in favor of the company in case with respect to service tax demand of more than rupees 2,200 crore. High Court has accepted the writ petition filed by the company and quashed and set aside show cause notice issued by GST authorities. Last is Genus Power. Company has bagged 3 letter awards worth rupees 3,610 crore, and under this order, company will appoint advanced metering infra service providers. Also will design, supply, install and commission 4.26 million smart prepaid meters, and with this, total order book size of the company now stands at 28,000 crore rupees.
All right, so thank you very much for that. So that is essentially what you need to know as far as stocks are concerned. Here's a quick recap of our top stocks. Stocks with positive news flow are PNB Housing, Finance, Petro and LNG, L&T, Dr. Reddy's Labs and Genus Power, while stocks with negative news flow are Sign, DLM, Vodafone Idea, NHPC, HG Infra and Pratap Snacks.
Okay, all right. So that's our stock list to watch this morning. That's on the equity side. Let's move on and see what's happening in the world of commodities. We have Manisha with us on the phone. Manisha, good morning. So the falling dollar continues to make headlines. What is it that you're looking out at today?
Well, thank you for that, Surbi. Yes, the declining dollar has been supportive, and most supportive actually to the gold prices, which hit yet another all-time high, this time around at $2,520 an ounce. So we have seen very shallow corrections in gold, and the funds continue to stay invested in gold. That tells you that this rally is quite strong. But crude oil prices have continued to decline. Yet again, there's an increase in U.S. inventories. The ceasefire talks in Egypt also continue to weigh onto the prices. The good gains have continued in metals, though, where you have copper prices holding firm at around 2-week highs. Aluminum is now surging towards 6-week highs. There is increased fund buying. The China aluminum imports have increased by 11% in the month of July. And then there is rising cost of alumina as well, which seems to be supporting aluminum prices. One area that you should keep an eye on today is the sugar prices, though, because overnight in the international markets, we have seen a sharp decline, bringing the global sugar prices now to a 2-year lows. This is on the back of weak China demand, decline in crude prices, strong crop expectations in India and Brazil. All of those factors weighing on prices.
All right, Manisha, thank you very much for that. So we'll keep an eye on sugar stocks here as well. We'll take a break. We are back with our market guest. We'll have Devin joining us a little later. We'll also have the management of Indocount Industries, Kailash R. Lalpuria. My colleague Nimesh spoke with him. So we'll play out some of that conversation on the other side. Stay tuned.
Predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabetes is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
Welcome back. You're watching Bazaar Morning Call and hope you're having a good morning. Well, as promised, let's get chatting with Indocount Industries. The company has given the FY25 volume growth guidance of around 13% on a year-on-year basis, as well as margin guidance in that vicinity of around 16 to around 18%. To talk more on the outlook, we have with us Mr. Kailash Lalpuria, the Executive Director and CEO of Indocount Industries, who's joining in from the 20th Motilal Oswal Annual Global Investor Conference. Hi, Mr. Kailash. Good morning, and thanks a lot for joining in. It's been a while since we spoke. Well, despite a seasonality weak quarter, you have reported a rather good set of numbers, both on the top as well as on the bottom line. Do you expect this sort of a trend to continue for the remainder of the fiscal?
Yes, we reported a very good quarter, which is our best quarter, we would say, with a 27% revenue growth and 26% volume growth. And among all the 4 quarters, this is the weakest quarter, but still we performed very well, thus showing that the trend would continue. We have already given a guidance of 110 to 115 million meters going forward, maintaining the margin of 16 to 18%, and that correlates to almost 20% growth. So we are on track.
Okay, sir, in the near term, the US elections have had an impact on the textile space in it. I mean, there's a lot of uncertainty, right? So do you see any challenges at all once we're through the elections? Will the outcome have any bearing on demand for a company like you?
The US elections are of lesser relevance to us because both sides are good to India, and as a country, to us, we have performed well under all conditions, and we intend to do that in the future as well. India has come out as a strong supply chain manager, so it can perform very well going forward in the textile sector, which not only the US but other countries also realize that India, they should target for bilateral trade going forward in textiles, and we are very confident that whichever government is elected, we will get the necessary support because India is in a sweet spot.
Well, Indocount has maintained the discipline on the debt side, sir. Do you sort of expect, how will you maintain this as you go ahead with some of these acquisition plans, and what can we expect there?
We have never leveraged our balance sheet. You know, that is the last thing which is in our mind, and we will never do it. We are almost a debt-free company, and we allocate our capital into our growth, and we plow back the profits into the company for the growth, and also providing the necessary distribution to all our stakeholders. Our dividend payout is good, and we invest into growth and sustainability, which is the foremost thing a company should do going forward.
All right. Tell us, what is the outlook for the overall textile industry? From an Indian market perspective, how do you see things shaping up?
The textile outlook is very good. Among, say, 5 top textile companies, China, India, Pakistan, Bangladesh, Vietnam, I always say that Bangladesh and Vietnam are labor arbitrage. They do not have raw material. Pakistan has got a saturated supply of raw material, whereas China +1, we are all seeing, they have faltered onto their supply chain and their cost has gone up. India stands out not only from a cost standpoint, but also from a supply chain standpoint, how they can secure the supply chain in this decade. And that's why you see all the retailers and the consumers out there are looking at India prospectively to see that how they can leverage their supply chain to the next level by sourcing out of India. And because India is also having a strong economic backdrop and it is growing, everybody would love to do bilateral trade with India, grow their market share and participate in the economic outfront in India.
All right. Now, in the last few years, a lot of the US retailers have shut down, or they've seen sort of business headwinds. How beneficial is it for you and other companies? Do you see a lot of business coming your way?
Definitely, because you see the US retail has shrunk to a certain extent, and there were big retailers which went out of the business, unfortunately. Their market share is up for grabs. The existing retailers out there have got their share increased to various means by formulating new strategies. We are working on these strategies onto our brands, onto our distribution, and onto our product development, where we are offering them a complete solution, not only on the product mix side, but also on the services side, thereby increasing not only our market share, but the existing retailers' market share. So this is an opportunity for us to grow not only as a company, but India as a country. There is a great demand out there in home textiles and apparel, and India should certainly do well in the coming years, not only in the US market, but in other trade blocs like EU, UK, Australia, UAE, and other GCC countries.
Okay, good conversation, and thank you very much for joining us here with some of that perspective right now. We have Devin Choksi with us, Managing Director at GR Choksi FinServ. Devin, great to have you with us here. Thank you for your time. Appreciate it. You know, let's start straight up with what was on the downside the sector of the day, which is the shipbuilders. You had Mazgaon down 9, Cochin down sharply, Garden Reach down sharply, and these stocks, as Hormuz was telling us yesterday, we'll pull up the graphics as well. They're down between 25 and 35% from their recent highs. You know, in the larger scheme of things, if you got in a year ago, 2 years ago, 3 years ago, I mean, then these look like small pullbacks. But what's your sense, Devin? You know, where from here?
Yeah, good morning, Prashant. Well, my understanding is that on one side, the market probably scaled up significantly on a higher amount of earning growth and the buy earning multiples. So I think it was the last year and the earlier year wherein the lower base effect, I think, was playing a lot. With the new order book coming in for most of these companies, I think obviously on a lower base, I think these companies started showing relatively better performance on the growth side. Now, I think this year the reality has kicked in. Probably we are going to see the real growth coming in on a higher base. And that's where probably I think the premium valuation, which most of the companies have commanded up till now, I think they are up for some amount of correction or rationalization. In my viewpoint, I think not only some of the shipbuilding companies which you have talked about, but there are many other companies where probably the crazy valuations have happened in the market, largely because of this fact of lower base, higher amount of liquidity pushing them. And at the same time, I think now with the higher base coming in, I think these companies would probably see the valuation corrections happening in the marketplace. I would be happy on one count that if market gives a correction, probably the genuine investor would definitely, I think, take a position into this company, because long-term fundamentals of the business of any of these companies which we are talking about, definitely I think remains absolutely strong and convincing. They have a visibility of next 3 to 5 years as far as their order book is concerned. So certainly any correction, meaningful correction in the price, definitely I think would mean some genuine investors entering into the stocks from the investment side.
All right, let's see if the reaction was just over and done yesterday, or whether that continues, because those price targets from that ICICI Securities report, I mean, they really were noted by the market. David, morning, great to have you on as always. Not sure if you look at these companies, but they're in focus today because of the expectation of a large block trade, Cyient selling stake in Cyient DLM. Any views here?
Yes, Shilpi, good morning. I think both these companies are looking brilliant from the perspective of looking at investment. No doubt, I think they've been commanding a valuation which is slightly higher, particularly Cyient DLM, which came into the market subsequently last year. I think the about 8 or 9 different verticals on which I think Cyient DLM is working, each of these verticals are showing distinctly high amount of growth on the business side, be it in the area of manufacturing, be it in the area of defense, be it in the area of medical devices. Wherever I think this company has got the base, I think, for manufacturing using the technology-led development, I think this company is definitely showing distinctly high amount of growth prospects. But all said and done, our markets have been extremely generous in giving a valuation to these companies, I think, on our other side. So that's where probably I think some amount of, I would say, profit booking by even the promoters is happening. And they are using this money for the purpose of repaying their debt in the parent company, which is Cyient Limited. So all in all put together, I think both these companies' business model looks, absolutely promising and convincing. Correction in the price, if at all, I think it happens with the kind of selling which is taking place in the market, would be a welcome opportunity for many of the investors who would like to buy this kind of stocks into the portfolio from long-term investment perspective.
All right. Hi, Devin. Good morning and always good to see you. And Devin, I wanted to ask you about these paint stocks. And let's talk about the leader. Asian Paints is one of those companies from the Nifty that's actually negative, while the Nifty has gone hammer and tongs. It's been looking very, very good. But Asian Paints in the last 1 month or so, it's getting back into its own. I think it's up close to 6%. Though on the last 1 year, it's still down, 2-3% odd. So it's trying to find its own. Now you have crude prices that are weak, so input costs are fairly benign. And the expectation is second half of the year, volume should pick up. And now that entrant, there was that fear about the entrant coming in, that as well has been digested. Your view on the stock at around 3,000 rupees?
Hey, Nigel. Good morning. Well, I think one part of the narrative is getting corrected in the market now. At least happy situation that the new entrants who have entered into the market with the paint business, certainly after seeing the grasping result and the provision in the balance sheet, the books about the expenditure that they incurred in launching this business, does mean that I think next 3 to 5 years is going to be a challenging period for most of these paint companies to even turn profitable, a new generation of paint companies. And that's where probably I think the advantage would go to companies like Asian Paint, who is not only expanding and making the capacity reach, I think as far as distribution reach is concerned, they're creating that kind of expanded reach, I think, into the markets. So that I think time to go to market, I think, is always very important in this kind of activity. They are highlighting the space. At the same time, I think, as you rightly mentioned, on the other side, the crude oil prices are down, and as a result of which all the crude oil derivative prices are going down. So which is a good omen for us, companies like Asian Paint, where the profit margins are to be talked about. So on one side, demand scenario remains absolutely buoyant and convincing, largely because of the fact that I think your entire construction segment, the real estate segment, is looking very promising for at least next 3 to 5 years. The visibility is also very strong. And the building material companies, I think, among which I think the Asian Paint Delight kind of company would come in, they are greatly showing the better kind of a growth opportunity at this point of time. So demand is strong. Competition probably will take more time to get into the profit, and the raw material prices remaining under control. All in all put together, I wouldn't be reluctant in saying that I think this company could possibly give 15 to 20% kind of an upside from the lower base of around 2,800. I think on that base, I think you could possibly see 15 to 20% kind of an upside from the stock pricing 12-15 months from now.
Okay, all right, Devin, stay on. We'll have some more questions for you. Thanks for taking us through the first round. But right now, we do have to get into a very quick break. Come back on the other side. And we'll also have, of course, a technical conversation going with our tech experts, Mitesh Thakkar, as well as Sudarshan Sukhani will weigh in on today's trading setup.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president. And her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the
Welcome back. Well, let's continue our chat with Deven Choksi. Deven, what do you make of the metals pack? I wanted to first highlight the ferrous pack because that appears to be in a bit of an issue, at least just in the near term. Steel prices in China, well, they are seeing a bit of a downtick. I think overnight as well, they're down close to around 3%. The bigger problem from an India perspective is our prices are actually at a premium in comparison to Chinese steel. So at some point of time, that can find its way in there, which calls for a price correction here. Your view on some of these steel companies, the balance sheets are clean, but in the near term, there appears to be some kind of pain, both on demand and pricing.
Yeah, so I think my understanding on the demand side, the situation remains absolutely very convincing as far as India outlook is concerned. Largely thanks to, I think, the higher amount of infrastructure spend which is happening in the country, as a result of which I think the demand signal remains absolutely very strong and convincing. And going forward as well, as we hear, I think more private sector participation happening on spending side, I believe that I think the demand scenario for the metal commodity, I think will remain strong. The fortunately good part is that the crude oil prices are under control, and as a result of which energy cost is remaining under control. So with a lag effect of about a quarter or so, I think you should be seeing the benefit of that also into the books as far as I think the P&L is concerned. So even if I think China price is down at some point of time, I think you might have some correction in the top end prices on the sales side. I would think that I think the margins would remain maintained. Maybe I think 1 quarter gap, and thereafter you should see that. I think most of the metal commodity companies are probably becoming an opportunity to buy into the portfolio, given this kind of technical correction which is happening in the market.
What would be the top picks? Deven, I recall you were quite positive on Vedanta, and that's done. Actually, it's pulled back. It went down to, I think, around 415, 420, and now it's on the verge of going to around 450 odd. What's the pecking order in metals?
So we continue to remain positive, Nigel, on Vedanta, and we believe that I think this restructuring which is happening in the business is also going to play a very positive role going forward for these companies. So we remain positive on the Vedanta as a whole. The other one I think would be Hindustan Copper, I think, which has corrected significantly on the price, along with Tata Steel. So I think these three companies remain absolutely very strong, convincing. Of course, Hindalco probably, I think, Novalis transaction, and then when I think it happens, probably I think would add further to it. But I think in the order of priority, I would think that I think currently the opportunity would be with the Hindustan Copper at this point of time.
Nigel, we had a discussion with a steel analyst. We had a discussion yesterday morning, and one of the things he said is that for NMDC specifically, he thinks there's a adjustment to take place because I know prices have crashed. Under I don't know $100 under $100 now.
Yes.
He says NMDC needs to lower prices by about 20% even from here to kind of maintain that historical gap between where prices here are and where landed import prices are. So I mean, that's a large, steep one, 20% I mean, of course, if international iron ore prices stay where they are, that is.
So there are a couple of parts of the metric actually, Prashant, because prices are already corrected by 17%. NMDC pricing I'm talking about in the last two corrections. I think it was 500, another 500 odd. Also with regard to the port where it's going to is going to be important, because the east has some kind of iron ore coming from Orissa. But on the west, they could still hold prices because on that side you don't have so much. So we'll have to see how the dynamics plays out. But from what I have seen in the past is when steel as well as iron ore prices come to a particular level, the Chinese producer can no longer produce. So at that point of time, it actually hits a bit of a bottom and then it moves up. So iron ore, we'll have to see how it moves, but the steel price fall needs to stop. Currently, it's at around $460, $470, which just a few months ago was more than $600. So steel prices have fallen, which is putting pressure on the iron ore prices because it's the input cost. So at some point of time, the steel price correction is going to stop. I think it has to be somewhere around here. Otherwise, they can't produce, at these kind of prices.
And what we've also seen historically is that China very quickly shuts down marginal steel production.
Exactly. Exactly. So once they start making losses, then after that, they have to shut down, And actually, that's a bit of a spot that everyone goes on debating about. Are they really going to reduce their production? But when the price falls, they'll be forced to reduce their production. And that, in turn, is actually a positive for the global steel prices itself.
No, I was reading another thing. I was reading an article which said that on Chinese ports, there's about 20 million tons of stuff sitting that is to be exported. But as a percentage of what China produces, it's like 1.5%.
Correct.
Annual,
Correct.
So it's
what
China consumes, not produces. What China consumes. I mean, but it's the marginal stuff which sets the prices.
The problem is the exports. Since we're talking about steel, the exports coming out of China is back at 8 million tons, which is the issue. You need to see that number coming down. And if there's so much of inventory at ports, then that number is likely to remain elevated in the near term.
Absolutely. Absolutely. So I guess the watch point is if China shuts off the furnace. I was about to say tap, but you can't say...
No, don't go to tap.
No. But anyway, so steel remains in focus. Let's see if we're somewhere close to the bottom of the cycle in terms of pricing just here and now. We'll watch for that. But they went on to another interesting debate in the market. So there are, of course, we've discussed the stocks like, Mazgaon, and all the other interesting debate is around Ola and what is happening here. Yesterday, after I think 7 consecutive days of buying, we finally had a dip coming in, but this is only after the stock has already doubled from the issue price. What's your sense? Would you be a buyer of Ola around these levels, 140 to 150, or do you think enough excitement has already played out? What is the road ahead looking like?
Yes, my understanding is that I think most of the funds who had been having the challenge of deploying funds because of the significant large amount of cash on which they are sitting, they had to take some amount of exposure, particularly I think in the pure EV space in the automobile. So that's where probably I think they have rushed in after the listing. Fortunately, they got a price on listing at the same price at which IPO took place. So I think that rush took place, and as a result of which, I think we are seeing this particular smart jump in the stock price, double from what it was, I think, at the IPO level. Having said that, I think the fundamentals of the company would take time to shape up. As of now, I think they are seeing about 24,000 rupees per scooter that they are manufacturing. Unless they show the path of, I think, how they will bring down this particular loss, everything else remains, I think, absolutely, convincing as far as the story is concerned. But I think we need to also see that when exactly I think the losses could come down eventually. And if that magic plays out well, then I think it's a good thing to learn about. But at this point of time, I think to me, this is a rush. I think it has already happened. No need to rush into it at this point of time. Maybe correction in the price would once again demand a fresh look at this point.
Devin, good conversation. Thank you very much for your time. Appreciate it here on CNBC TV18. Well, let's move on to some of the technical trades, right? Mitesh and Sudarshan are with us with exactly that. Gentlemen, good morning. Good to have you here. So a little bit of a lower drift in the US markets. Nothing of consequence. Mitesh, how would you look at how we're starting up? And on indices, what kind of trades would you want?
Morning, Prashant. So, as you rightly said, nothing very significant. My sense is that I think, today the markets could be presenting some opportunity to buy on declines, especially I keep a watch on the Bank Nifty. Yesterday, we had some kind of rally and then the pullback happened in the second half. I think closer to 50,600 is where I would want to enter the Bank Nifty. These are spot levels or around 130, 150 points lower. If you see a reversal from there, I think I would want to go and buy the Bank Nifty, which should in turn help the Nifty also sustain and check and test higher levels. So 50,000, and 600, 700 is my buying zone, but prefer to buy closer to 50,600 and we'll take a 200 point stop from there.
Okay, got that, Mitesh. Sudarshan, let's get you as well in the conversation. What's your view on the index? Actually, it's had a very, very good move in the last few sessions. Where do we go from here, though, both on the Nifty and Nifty Bank?
Yeah, good morning. See, we've had 3 very good days, and after a small dip, we had those 3 days. Now, markets move in short-term cycles. So I'm assuming that now, at least for today, the cycle would be either a consolidation, a choppy market, or even a small minor decline. So my view is that if you have long positions, take profits, step aside, and choppy markets never make money for me. So I would step aside for the Bank Nifty and for the Nifty both, not do anything.
Got it. Let's talk about stocks then. Sudarshan, not doing anything. I'll tell you what, let's slip into a short break. We come back. We'll get back to Sudarshan as well as Mitesh and get their stocks. We'll also get a conversation going with market experts. Don't go anywhere.
Life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women fighting for reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. Because, my friends, when a barrier falls for one of us, it falls. It falls and clears the way for all of us.
To be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you.
Welcome back. This is Open Exchange, and we're coming to you live from the CNBC TV18 Motilal Oswal studios. Let's, straight away get to the pre-opening trades when we're at 9 a.m. and those rates would be coming in right now. So in the pre-open, Nifty, the gift Nifty was of course pointing to a soft start, and that's what the indication seems to be, that we'll start lower. The question is whether this dip starts getting bought or not. We still have Mitesh and Sudarshan with us. Mitesh, hi, morning. So in terms of, stock action yesterday, actually the financials as a universe, I just want to take that and get that out of the way first. Financials as a pack moved up. I mean, life insurers, NBFCs, banks, everything was up. Do you see any follow through? Do you have any trades over there? And if not financials, but anything else that you'll play with today?
Morning, Subi. I already talked about the Bank Nifty as the key index to watch out for the day. That apart, I have a buy on Kotak Bank with a stop at 1784 for targets of 1870. HDFC AMC, not strictly a financial, but I think, dealing with capital markets, that's a buy with a stop below 4250 for targets of 4400. A buy on Manappuram around 205, 206. So if you get a mild decline, try to buy this with a stop at 201 for a target of 220. And one sell call, that's Bharti, showing some signs of profit booking. So keep a stop at 1466, look for targets of 1415.
All right. Sudarshan, what about you?
Well, I have an all buy list. That's simply because some stocks will give buy on dip opportunities. Let's see how it works. BPCL is a buy with a stop under 329. India Mart is a buy with a stop under 2860. Infosys, we have seen how IT stocks have gone up, and perhaps that momentum will continue. Is a buying opportunity, Infosys, with a stop under 1863. And another outperformer, Polycab, is a buy with a stop under 6673. The idea being to wait for an intraday dip and then go long in these.
Truly got that. Mitesh, yesterday you had a bunch of these brokers which were rallying. Angel One seems to have found momentum once again. I think 25% in 2 days. Motilal was up higher. There was IIFL Securities which was up and about. Anything you want to sort of weigh in on?
See, I think, I've been tracking a few of them stocks, particularly Angel One, and the stock has had a very good correction, I think, come to an end. So the stock kind of peaked out at levels of 3,800 plus, 3,900 levels, 3,856 odd. And then came down to as low as 2,000. It tested the, 2050, and it tested the level on 4 or 5 occasions in the last 2 weeks, and then has given a reversal. A big breakout. The first target of around 2690, 2700 is done. But I suspect eventually I'm looking at a test of 3,000 and in a good case scenario, even 3,170. So this is now a buy on declines. If you get a pullback, let's say to about levels of 2560, 2580 zone, I think keep an eye on this one. I think the reversal looks very strong and possibly will last for a few weeks to come.
Did you have one of these insurers earlier as one of your ideas? SBI Life was the top Nifty gainer, HDFC Life, ICICI Pru. Again, I mean, these are insurance names which have, were in momentum. They went sideways for a while and then yesterday came back up again. I think there's a Bernstein note this morning as well. Your thoughts, Mitesh?
So I've had buys on HDFC Life and ICICI Pru a couple of days back, not yesterday. But yesterday, I think SBI Life had a very good, sideways breakout pattern, which technically does suggest that we should see higher levels coming in over here. I think the earlier highest closing we got was around 1765 and the stock closed at 1760 yesterday. I think it should see continuation of momentum. Once we see 1760, 70 cleared, then I think the stock is heading towards $1,900 levels from a trading point of view.
Okay, thanks for that, Mitesh as well as Sudarshan. Let's get in Rajesh Palvia, the VP Technical and Derivative Research at Axis Securities. Hi, Rajesh. Good morning and good to see you, Ben. What are the strategies you have for us both on the index and individual stocks?
Good morning, Nigel. So looking at the setup, we are holding our bullish view and we believe that, the continuity of uptrend is likely to be there in both the indices. The way Nifty is holding about 24,600 and most of the put writers are now shifting their, position on the writing side at higher level, 24,500, 600 have attracted put writing. So that clearly shows that, base is now shifting higher. And possibly Nifty may attempt to, cross 24,800 to 850 zone in the continuation of this up move. To play this up move, we are initiating here to buy a call option of 24,700, which was closed at around 78, 79 rupees. So we are projecting target for this call option around 130 to 140 with stop loss of 40 rupees. Bank Nifty is almost now trading near to its major call concentration congestion zone, which is placed at around 51,000 level. So if at all Bank Nifty manages to cross above 51,000 mark, then possibly we may see a good short covering action in the Bank Nifty, and then this momentum can extend to 51,300 to 400 kind of zone also. So on the Bank Nifty also, we have bullish view, and till Bank Nifty is managing to hold above 50,500, 600 zone, one should remain on the buy side of trade. On the stocks front, one PSU bank which we are focusing at this moment, that is Bank of Baroda. If we analyze on the technical front, the falling trend line breakout is already there. In the previous day, short covering action was there on the derivative data. After a consolidation of almost 10-12 days, stock now managed to give breakout of this consolidation range. We believe that Bank of Baroda may continue further more upside. We are projecting target towards 265 to 268 with stop loss of 250. The second stock that we like is from the pharma space, that is Sun Pharma. Continuity of uptrend after a brief consolidation of 5-6 days in a narrow range. Now stock managed to give breakout. Outperformance is there in Sun Pharma. Stock is almost trading at all-time high trajectory. Long built-up is there in derivative data. So we believe that Sun Pharma may continue further more upside towards 1840 to 1860 kind of zone. One can buy this stock with stop loss of 1745. And the third stock is from Midcap IT, that is L&T Technology Services, LTTS. Stock managed to give breakout of its previous swing high. And most of the IT stocks are showing good traction since last couple of days. And IT index is almost hovering around all-time high trajectory. So we believe that IT space may continue further more upside. LTTS can be a buy for upside target of 5460 to 5500 with stop loss of 5320.
Okay. All right. Thank you very much for all of those calls. You have a good day, Rajesh. We'll connect again later. For the time being, let's get you some views from the Motilal Oswal conference. Niket Shah, the CIO at Motilal Oswal Mutual Fund, says that he's quite cautious on markets at the current juncture and has been very selective. He's also sharing his views on the telecom space, quick commerce and the IT sector, where he's getting increasingly optimistic. Take a look.
This quarter, Nifty earnings growth has been about 4 to 5%, which is probably slowest in the last 16 quarters. Mid-cap earnings growth has been about 5 to 6%, again slowest in the last 16 quarters. And we have been slightly more cautious on the markets, being very, very selective. Our focus of this year is to do less mistakes, right? So when we started this year, we could clearly see, earnings growth kind of slowing down. And we want to ensure that we don't do, significant mistakes this year. If you don't do mistakes this year, I think you will end up in a very good outcome at the end of the year. So from a 25, 26 stock portfolio, we're now actually down to about 16, 17 stocks. We're trying to make the portfolio more and more sharper by the day to ensure that, there's no mistake. So that's broadly, I think, what we have been up to. IT hasn't done well in the last 3 years, right? I mean, some of our IT holdings within the mid-cap and the small-cap space have done extremely well. But overall, from an industry standpoint, I think it has gone through some challenges in the last 2 years. We believe post-US elections, some of those challenges are likely to go out as, the pipeline of the IT in terms of the funnel or the deal pipeline that most of the corporates have been talking about is very, very healthy. So that continues to remain healthy. I think most of the corporates or enterprise in US or Europe are waiting for some clarity on US elections to get over, and that the spending will, I think, in next year should come back in a meaningful fashion. Initial part of the year, we did highlight that telecom looks like the sector of the year. And the key thesis was that India has actually seen no major ARPU increases if you take a 10-year back track record, right? So our view was that every year from here on, India needs to take a tariff hike because from the second half of the next year, most of these telcos have to start paying to government for the spectrum that they had bought 10 years back. And for me to pay and for some of these enterprises to go and pay to the government, you need earnings, right? And there is no way you can get earnings without a tariff hike. So I think we will see a tariff hike even next year and in the following year. So we might see a tariff hike every year-on-year basis, which essentially means a very strong growth for the sector. Food delivery becomes a cash cow over the longer term. The real excitement is quick commerce business. In our opinion, for the next 3 to 4 years, you should see at least 125 to 150% kind of a top line or a GMV growth for some of these companies, which is quite staggering, right? And this kind of model is only, at scale is likely to happen in India. Because of the way our supply chains are there, the way our auto penetration is there, and we all have, a budget that we run on a monthly basis. So we do monthly pantry filling on a weekly basis, right? So that I think is quite, I would say unique to what Indian styles are. And I think these kind of business models are just started, just scratching the surface. What is actually surprising to us is that the tier 2 markets, where in some of the quick commerce, the tier 2 markets unit economics are much better than tier 1 markets. The adoption of tier 2 markets for quick commerce is much faster than tier 1 market. So that has actually been a bit of a surprise for us, and we believe the runways is likely to stay here for the next 4 to 5 years. So we just scratched the surface in our opinion.
Okay, just scratch the surface in Niket's opinion, but very interesting chat. And I think that one line that if you don't make any mistakes this year, or minimize mistakes this year, which is buying too high at euphoric highs. I'm talking about individual stocks. You're kind of better off. They've reduced the number of stocks in their portfolio as well, and kind of sort of, making the circle smaller and staying within things that they're comfortable with. So that's the view coming in from Niket of Motilal. Well, let's talk about 9-10 calls now. And Sudarshan and Mitesh are back with us. Sudarshan, what do you have?
Well, consider buying BPCL with a stop under 329.
Mitesh, what about you?
Kotak Bank is a buy for targets of 1870.
Okay, Kotak and BPCL are the two names from Mitesh and Sudarshan respectively there. That PNB block, of course, has gone through 1.39 crore shares, 5% equity has changed hands in the block window. And stocks actually in the pre-open absolutely steady at about 827. There's 3 minutes to go for market opening. Let's talk about Cyient and Cyient DLM once again. Rima is here to highlight that. Rima.
Thanks so much for that. So Cyient, which is the promoter of Cyient DLM, is likely to sell about 14.5% stake via a block deal in Cyient DLM. The issue size is likely to be 860 crore rupees. Now, we're going to be watching Cyient very carefully because this is money which will go into the hands of Cyient. And according to JP Morgan, the proceeds can be used for M&A and debt repayment. The company's main business has a debt of about $47 million as of June. And with the money Cyient raises by selling stake in Cyient DLM, that debt can be repaid. Also, the company will have money to invest in the semiconductor business. And in terms of M&A, one segment where Cyient could look at making acquisitions could be the automotive space. So JP Morgan has an overweight call on Cyient with a target price of 2100. Kotak 2 maintains a buy with a target price of 2050.
Okay, all right. Rima will watch out for Cyient for sure. Thanks very much for the heads up over there. Vivek is joining in. Vivek, you're watching out for SJVN. Some brokerage notes here. What do they say?
Well, good morning. That's right. So SJVN is in focus. The company held a conference call after the Q1 results. A couple of key highlights, that I'll just talk to you about. Number one, the company had indicated that they're looking to pair stake in its green energy arm, that is SJVN Green Energy. The company has given more details. They're looking to divest close to 20% stake. They're looking at a valuation of close to 2,000 crore, which will value the green energy arm at close to 10,000 crore. Goldman Sachs says this, compares favorably versus their own estimate of close to 8,000 crore. Now, along with that, some negative news flow too. The company says that the Buxar thermal power plant that the company was earlier looking to go ahead and commission has been further delayed. So the company now expects Unit 1 to be commissioned by end of FY25 and Unit 2 in FY26. The Arun 3 plant commissioning, that also has been maintained at Q3 FY26. But the worry there is that there is no medium or long-term offtake or PPA that has been signed. Goldman Sachs believe positive catalyst for the stock includes new project awards, better renewable energy project wins, positive surprise as far as the renewable energy business ramp-up is concerned, and reduction in cost of debt. However, they believe negative cost stock catalysts are further delay as far as Buxar as well as Arun 3 is concerned, and weakness as far as renewable capacity execution is concerned.
All right. Thanks very much, Vivek, for that. So we're just sort of a couple of seconds away from market open. Indices first, and then, of course, we look at stocks and what's moving. What do we have? Opening bell, first trades. On your screen, the Nifty is starting about 0.1% lower, nothing. 24,674. So 686 is that gap area. We'll see if that is able to be held on. The bigger one, of course, is the 20-day, etc. That's slightly lower, though. The Nifty Bank is down about 0.25%. 50,671 is where the Nifty Bank is opening at. A little low, a little more pressure on the Bank Nifty as compared to the Nifty at the word go. IT index, which has had a fantastic run from last Friday on, is starting about 0.25% lower as well. So that is the Nifty IT index. It's more evenly balanced. Last 2 days, Monday, Tuesday, we had just 5-6 stocks in Nifty starting in the green. But look at the heat map there. I think there are more down than what is up at this stage. 20-point lower on the Nifty. Surbhi.
Okay. By the way, I want to start with the shipbuilders once again. Because there's so much news flow around them because of this one report from ICICI Securities. Mazgaon Dock is again down 3.5%. Just note that. We'll be speaking with the management in a short while from now. But the starting tick is negative on these. Garden Reach as well, 0.5% lower. And the other one, Cochin Shipyard, also 0.5% lower. So let's see how this goes and whether these dips get bought. Anyway, back to the headline indices. Flat trends on the Nifty right now. So the weak hands include actually some of the financials which were powering through yesterday. Shriram Finance, I mean, these stocks were up 3, 4, 5%. So today they are leading on the way down. Shriram Finance, HDFC Bank, Axis Bank, you've got ICICI Bank, State Bank of India, Kotak. So basically, the entire financials universe is on the lower side as we start off with. And then you have a couple of the material stocks, metals, materials, commodities. Tata Steel about 0.25% lower. Grasim is down about 0.25% as well. So is Ultratech. So not too much of a cut here. I mean, which is basically a little shade of a red on some of these names. ONGC as well. So basically metals, materials, commodities on the lower side. On the upside, Bharti Airtel is holding out quite positively. The stock sold off a lot yesterday. It was the weakest performer of the Nifty. There's a bit of a reversal today. The subscriber additions are not too bad. I mean, mild additions month on month for Bharti Airtel. For Jio, there's been a dip. Reliance is actually slightly lower right now as we speak, just about 0.2% lower on Reliance Industries. But yes, some of the life insurers, they're still catching the attention. So HDFC Life is still up about 0.5%. SBI Life is a little more quiet, but otherwise very, very flat on the index. Not too much moving, at least as of now. DRL, Nestle, HUL, Titan, that gives you the drift. That's the green side. So again, it's a bit of a morning that starts off with some of the perceived safe havens, some of the defenses in the green.
Well, that's right, Surbhi. And in fact, there are a couple of stocks that are doing very, very well. So the headline index, we're as flat as can be, but you have two stocks that are advancing for every one stock that's declining. Tell you there's plenty happening actually in the broader markets. A few stocks to note. Genius Power, the big order win, second one I think in the last 1 week or so. The stock is in upper circuit, up closer around 5%. So big up move is what we're seeing on that one on very, very large volumes. Reliance Power, well, that one as well has been moving circuit to circuit. The street believes there could be a deal in the offing, so let's see whether or not that takes place. But that's one of the top volume movers. So Reliance Power is well locked up, 5%. JMR Power, that's another one that's up close on 2.5%, but it's one of the top volume movers today. So that's why just highlighting that stock. Big move is what we're seeing on that. Nuclear Software, well, that initial tick was up close on 6%. So pull up that stock. That one's doing quite well today. Godfrey Phillips, that one's pulling back a little bit. It's down closer on 3% odd. So that one's cooling off a little bit. And DCX Systems, that's another stock here. Influential HNI investors that were picking up stake out there. The stock has seen a correction from the recent peak. But today as well, the stock is a little bit subdued. Another stock that we highlighted earlier in our morning chat was India Mart. It's come out of the F&O ban. Sometimes you see a bit of a move, and that's precisely what's happened. So from the F&O list, India Mart is one of the top movers, up close to around 2.5%. And Nippon Life as well, up close to around 2%. What's not doing too well? Pyramidal Enterprises has pulled back a little bit. So a flat start. The good news is the mid-cap index in the green, and you're way more number of stocks that are advancing than declining. Prashant.
All right. Okay, well, that's essentially the what's up and down. We'll sort of highlight more stocks as we go along. But let's welcome in Sanjay Parekh. He's founder and CIO at Soham Asset Managers, who's here to talk markets. Sanjay, great to have you back on the program. Thank you very much for your time. We're usually chatting in the afternoon, so good to see you in the morning for a change. Just a quick word, Sanjay, on the markets themselves, because it seemed like, at least, that many a theme, especially defenses, we were just highlighting, right? I mean, these are themes where people have stayed long for a while, made a lot of money. But once momentum breaks, then it's kind of hard to stay long, because then you start to wonder whether I should lock in the profits that I have, or and then let's see later, where does it want to settle? Are we entering that kind of a phase in a few sectors, especially areas like defense? Sanjay?
Yeah, Prashant, absolutely right. I mean, good morning to all of you. So, clearly these are area of frauds and valuations. The flows from direct retail or certain passive funds dedicated to these sectors also has, because these are passive dedicated sectoral funds, right? So, so they have to buy in as they get subscription. And that is, of course, the direct participation in this such capital raise has caused fraud in certain sectors, and certainly one should book profits. I totally agree with you.
So book some profits, okay. Hi, Sanjay, great to have you on. So let's explore that in some more detail. Now, where would you look at trimming positions or booking some of the profits? How are you looking at any portfolio readjustments at this point in time? Give us some more color on it.
Yeah, so Surbhi, good morning. So, our approach is we predominantly large cap. Our average large cap holding has been 80%. We always said at least 70% would be large cap. And I mean, even in large cap, we are at fair value plus. So our approach is be very, very selective. There are ideas very clearly across the board, but the filtering has to be very, very hard. So the main filtering criteria is valuations, right? So while there are opportunities, every month you get opportunities, but there are few now. And that's our approach, that be selective, have aggressive filtering criteria. We think larger caps are overvalued, they're going faster, but 3 to 5% lower, they'll get reasonable and maybe some time correction. So we're not so perturbed with large caps. I mean, 3 to 5% or even a little more is fine, and some more time correction. But in mid and small cap, there are pockets of froth. I'm not saying all of them are frothy, but certainly there are pockets of froth, defense being one. Some of the themes in railways are also going berserk. At 60, 70, 80 times, I don't know whether there's money to be made, So, and we know the euphoria on the flow side, So that is also where we are worried, and we are clearly going to stay away from such segment. And selectively, as I said, in large cap, mid cap, small cap, you do get opportunities. And that's what we are looking out for.
All right. Hi, Sanjay. Good to see you in this morning. And you mentioned in the past, I think L&T is something that you like. You prefer them in comparison to the other names that are trading at very elevated valuations. Coming back to you, Sanjay, and I wanted your thoughts on Ola Electric, but I wanted to focus on the stock of the morning, actually, Mascon. We are talking about that stock being lower. Just pull up the intraday chart. The intraday chart will tell you from the lows of the day, in a matter of minutes, the stock is up close to around 8% or thereabouts. At some point of time, the director will put that up for our viewers on the screen as well. But Sanjay, what about Ola Electric? At IPO price, people were debating. Well, the stock has almost doubled.
Yeah. No, it's surprised. To be very honest, we've not participated, but there were few colleagues who were positive and they participated in funds also. And definitely, such a big move, you certainly have to introspect, right? So we've not participated. Having said that, there are comparisons you saw yesterday with Hero versus Ola, and those needs to be kept in mind, Some companies are made in 50 years, and some of these new generation companies, they speed up so fast, and execution is certainly important. Having said that, we certainly not undermining the strength of this new generation companies. They're phenomenal companies with great products, great pipeline, and definitely very, very positive, but just that valuation is discomforting, at least not in our style of growth at reasonable price.
Okay, all right. So you're choosing to give that a miss, but what would you rather play? Because you like the theme. The EV theme is something that's definitely going to take shape in the next few years. By 2030, various estimates suggest that there'll be a far larger, exposure to EVs. So in that context, Ola valuations, well, debatable out there. But what else do you like then from the auto space?
So, we're very positive on ancillaries which are catering to this or transiting them. We have two of them, one of them transiting towards that segment, Sansera, and even Samel, Samadhan Motherson, certainly is very, very well poised when the EV segment takes off, because it's actually agnostic, all the products that it has. So we're very well poised on that side, as it takes off. And then overall renewable also, we are on the power space, we are there. On the EPC space, we have Solar Wilson. So we like the theme and we have participated, but we would want to participate in a stocks where they are reasonable price and reasonably valued at our end.
Hey, Nigel, just to go back to the shipbuilders, we've got to fire those stocks up because the classic bull versus bear playing out on a Mazagon dock, on a Cochin shipyard, on a Garden Reach right now. These stocks open slightly lower. Let's get the stocks up on the screen if we can. They opened slightly lower. Yesterday, the declines were as much as 9% on some of the stocks. And today, the start was lower and the dip is getting bought. We're going to be in conversation with the management of Mazagon Dock in about 15 minutes from now. The contention in a report that was put out yesterday, it was a report by ICICI Securities, And it caused a flutter because their target prices are substantially lower, 50, 60, 70% lower from where the stocks are trading at right now. Now, the contention in that report was that for a company like Mazgaon, for instance, the best of the revenue recognition will play out over the next 2 years. And after that, margins and EPS, it'll all sort of, peter out and it'll become very range bound. And therefore, ICICI Securities felt that the valuations are simply not justified. Classic bull versus bear, and right now the bulls are snapping up that stock. Yes, we'll ask the chairman and managing director about the business. Of course, he's not going to talk about the stock and the valuations, but the business really. Can the growth momentum continue? That's coming up at about 9:50. But Sanjay, weigh in on this debate. I mean, whether it is some of these shipbuilders or some of these other, for instance, look at a stock like GET&D today. There's some reorganization by the global parent. They might be selling some stake and, simplifying their holding structure. That stock's on down circuit right now. But again, I mean, whether it's shipbuilders, whether it's these MNC capital goods plays, they're fetching top dollar in terms of valuation. Where do you think it still makes sense to hold, if not buy fresh?
I think, the government, which is the largest owner of this, should provide the supply. I think, they understand the valuation. We saw the whole PSU basket at 13-14 lakh crore. Today it's 65 lakh crore. So I think the government should suffice this demand or euphoria by providing supply. That would be a very good thing because it will mean monetization by the government and then giving the supply where there is hunger, either through passive funds or through direct. And that, I think, is a very, very smart strategy that government should do of providing supply in all the stocks, because the valuations are really good for them to monetize. And that should be, at least, I think, because, at least, as I told you, right, 60, 70, 80 times just doesn't fit in our strategy. We would not be participating, and that's our approach. But government clearly can monetize.
All right, interesting. Yeah, I mean, could make sense for the government to take some money off the table. But talking about government taking money off the table, they didn't do it. Vedanta stock, I think that you've been fairly positive on, and the promoter's been making the right moves. They went ahead and they took some money off the table in Hindustan Zinc. What's the view on that one? Because, this one has been a very, very dicey one and tricky to play with the promoter, mostly not making moves in a linear manner. But now the street is quite excited. Your view?
Yeah, Nigel, so you all have covered it so well, and I think they're making all the right moves. We luckily got it way early. And then we participated even a little lower than current price as well. I think here the worry was the parent's leverage at 6 billion was discomforting. And, the promoter is consistently doing the right things. And I'm very, very confident that, they will get it to $4.5 billion of debt as a first milepost. And once they reach there, then, the risk significantly reduce, which was a hangover for the stock. And then, the business, we always, in terms of their execution, the way they run the business is absolutely impeccable. And then it will be towards this business. And the ZL monetization, I think, is a very smart move because, ZL we pay the dividends to Vedanta, and Vedanta in turn should effectively pay 13 rupees. They've already paid, I think, 15 rupees. So 28 rupees dividend in the last 6 months you got. Which at least we were looking yesterday, it's 9% on our cost as a yield. So, and then you also getting growth. So I still feel that it is undervalued. The promoter has to make the right moves towards creating value, which it is doing.
Sanjay, so this is not about what you own, but what you don't own. And correct me if I'm wrong, you don't have exposure to insurance as a space. That's cited by a few investors as a combination at this stage of the market where there is some valuation comfort and there is growth visibility as well. Not very high growth, but there is growth. And the other is healthcare. I think pharma, etc. I think you don't have any exposure. You know, of course, you can't own everything, but I just wanted your thoughts on these two areas.
Yes, so we have Sun Pharma and Aurobindo on the pharma space. We don't have hospitals and the healthcare space. That is what we have. And the earlier one you asked, I missed it. Sorry. The other one.
Insurance.
Yes, so insurance, we genuinely looking at both SBI Life and HDFC Life. They are good defensives. They come out of those low growth phase. And now, there, of course, the growth is more from ULIPs, but I think they are now reasonable on valuation. We don't own in our AIF, but we own in our PMS. We're looking at it very positively to buy at the right price, one of them.
All right. That's the view coming in from Sanjay Parekh at Soham Asset Managers. We've got the market, which, by the way, is down about 17 points or so. And we've got, lots of stuff moving around as far as overall market is concerned. Just too early to look at the overall market breadth. We'll do that in a bit from now. But be rest assured, I mean, the index can tell you whatever. There is a lot of stuff moving up. I think more up than down by far. On your screen, 1600 to 600 advances to declines ratio. Guys.
All right. Well, let's focus on our next company. Then we have All Cargo Logistics. The stock is in focus. It was buzzing in trade yesterday. Well, it reported the highest ever monthly volume growth for the month of July. To discuss this and more, we have Mr. Ravi Jakar, the Chief Strategy Officer at All Cargo Logistics. Hi, Ravi. Good morning, and thanks a lot for joining in. Well, give us a couple of details then. Tell us what's the average freight rate in quarter two if I compare it to quarter one, and also what are the volumes you're building in for quarter two and for the remainder of this fiscal as well.
Yeah, so I think, last 4 quarters or a little more than a year, the global trade was in a phase of, a subdued economies in Europe, and the overall trade was down. And we had been anticipating that we'll be coming out of it with inflation easing, with interest rates likely to soften. And we are now witnessing that people are restocking the inventory. So inventory levels are moving up. And typically what happens is, when you move from 3 weeks of inventory to, say, 5 weeks of inventory, you're essentially providing a 4% sort of a growth on the overall annual volumes. Now, that's the kind of trend we are witnessing right now. And with all the disruptions, the Red Sea crisis continues. We are also finding that the supply-demand imbalances, which had happened in the last 12 months, have also been balanced out. So we are finding that the freight rates are now more consistently in the higher range. The volumes are rebounding. As a company, both driven by this market improvement as well as our own initiatives, we have reported for the month of July 818,000 cubic meters in LCL, which is almost 5 to 6% higher than last month. It's almost same as the highest ever we reported a couple of years ago when the trade was in a very different cycle. So we are witnessing that this trend should sustain from here, and right through the remainder of the calendar year, we believe the volumes should remain strong. And the good part about this growth is this is not specific to any geography. We have found for the month across the board, be it Americas, parts of Asia, including China and Vietnam, and even European markets have seen an improvement in the LCL volumes. So that's on the LCL trade. On the FCL trade as well, we have seen almost 6% increase over the last year, same month, July to July comparison. So overall, there's a clear sense that markets have confidence that consumption would come back. People are building up inventories, whether it's in US or other parts of the world as well. There are some bright spots, call it out, Indonesia, Vietnam in Asia, India, of course. And then you have some of the Latin American countries like Brazil seeing some growth in trade. So overall, the trade was in a very subdued situation over the last 12 months. But now, since mid of June, we have seen there's a good sharp rebound in trade, and we expect the momentum to continue for the months to follow.
Ravi, if you look at some of the macro-ish data points, what you guys are doing and what many analysts have highlighted is, cost-saving measures and efficiency drives, etc., which is great news for the company. But overall, many are pointing out that we are actually now entering perhaps, after a long time, a synchronized kind of slowdown, especially in terms of global trade. You're telling us actually it's the opposite. You look at what's happening in Europe, you look at what's happening, fears a slowdown in the US, China is where it is. Of course, there'll be hotspots in smaller regions, but just wanted your thoughts, if you can clarify that a little bit more, especially on the container side.
Yeah, so I think, what happens is many a times the global view is more connected to the view of the Western Europe and China. And we know that supply chains have been diversifying. So China hasn't really been the bright spot for the global markets. And Europe in particular is still in a bit of a subdued demand. So, if you look at exports out of Europe in particular and some of the overall consumption, it's still low. But what's happening on a global basis, and we kind of represent global trade with our breadth of presence across the world, we are clearly witnessing that there are good pockets of growth, and they are more than covering up for the lack of growth in Europe, for an example, compared to what it used to be 2 years ago. And of course, there's diversification. So, India, Vietnam, Indonesia, some of these countries are eating into the share of exports as compared to, what China used to do a couple of years ago. So overall, I mean, and, if you look at the freight rates, because they reflect the supply chain imbalances, I think if you look at just this year, we had almost 1.5 million TEUs of new ship capacity on the container shipping, which came into global trade. And despite that, we have freight rates which have continued to increase from April until about June end, and now they've kind of stabilized in a range-bound manner. And freight rates have remained high. The cargo which was being booked 1 week in advance 6 months ago now requires 2 to 3 weeks of planning at least. So there are clearly on-ground situation which is happening, that there is a rebound in trade. The only caution is this rebound in trade at this point in time is also linked to the inventory rebuilding. Now, inventory rebuilding is often on the forecast and assumptions of consumption growth kicking in, and that's something which is expected. And we are seeing some green shoots, but for this growth momentum to sustain, say over 12 to 18 months or longer, it will need to come into that territory wherein interest rates continue to come down. There's more disposable income in the hands of European and the American consumers. They're in a position to increase consumption. So all of those factors will have to continue to play out. But at this point in time, they're clearly seeing elevated freight rates, and that's an indication of renewed global trade demand.
Ravi, hi, morning. It'll be really helpful if you can put some numbers to it, both on the revival in freight rates. I mean, what is the increase you've seen so far in Q2, in the last couple of months? If you could just give us some numerical indication. And also, as you're talking about volumes being buoyant for the remainder of the year, again, some rough range that we can work with. What kind of volume growth across both the segments that we can perhaps look at?
So if you could look at the long-term range, we had been talking about LCL industry globally growing at, let's say, 5 to 6%. And on the back of that, company growing double digit. That's been the aspiration. Now, what happened in the last 12 months was industry was perhaps degrowing by 10 to 15%. And that 5 to 6% delta on the company meant that we also saw a decline of 8 to 10% from our peak numbers. Now, what we are seeing that there's a bit of a growth kicking in, which means that instead of a decline, now we're in a phase of marginal growth in the industry. And with our ability to outperform the market, we are now witnessing, like I spoke about, a good 7 to 8% growth, whether you compare last year or last month. So we believe that the growth should be in the range of 2-3% for the months to follow, and should gradually pick up from there as the demand sustains. And we would continue to outperform the market, and therefore we could potentially look at growth numbers going back to where we were aspiring, say 15 to 18 months ago. That's how I would put it in a broad range.
Okay, and just a word also on the international supply chain revenues, because if I look at the trajectory over the last couple of years, that's where there's been a dip from about 17,600 crores in FY24. You were down to about 11,250 odd crores, with margins also dipping. What's the outlook on that business?
So I would say, in the international supply chain business, a large part of our cost and revenue is ocean freight, which is quite volatile. So for our business on international supply chain, one has to look at the gross profit, and that's the right parameter of evaluating how the business is performing. And as we have been sharing information on a monthly basis, that is driven by volume, utilization, and the mix of containers. And in terms of numbers, I can share that our container utilization has increased almost 10% over the last 12 months. The mix of 40 feet containers has increased about 6 to 7% as well. And the volumes are also up. So a combination of all these things should drive gross profit, upwards. And that's how, with the cost conservation that we have done over the last 6 to 9 months in particular, we should be in a position to improve the profit margin. That's been the broad strategy at play. Conserve the cost, which is in our control, and hope for the markets to revive and then outperform. And we are glad that things are starting to play out over the last couple of months now.
All right. And of course, the market's taking note of all of that as well. Thank you very much for joining us, Ravi. Good luck to you. And we'll speak again. Thank you. We'll take a quick commercial break here with news that the market is still down about 15 points. So it's flattish, like how US was, just a drift. I mean, nothing more than that. It's basically broader markets, which are still looking very good, with about a 2:1 advances to decline ratio. The largest volume traded name is once again Ola Electric with a 3% gain. And of course, there are many others. We'll highlight some of this stuff in a bit. We'll take a break. We'll also have the management of Aug India to talk about their business in the quarter gone by, but more importantly, the outlook ahead. Stay tuned, that's coming up. Okay, welcome back. Let's put the spotlight in the paint sector now. And to sort of talk about this, we have Mr. Rajiv Rajgopal, Chairman and Managing Director at Akzo India, joining in. Mr. Rajgopal, good morning. Great to have you with us here on CNBC TV18. Prashant this side. Let's just talk about, how demand is panning out in the second quarter so far. Did price hikes get absorbed? To what degree? Just give us a color, sir.
Good morning, Prashant. Good morning to you and the viewers. Yes, the price increase happened in two tranches. The first tranche was end of July. The second tranche was around the middle of August, 12th of August. It's too early to really predict because the prices were to a tune of about 1.5%. So it's not really massively significant. But yes, you did see a little bit of a blip during the price increases as you would, which is basically a little bit of stock up. Yeah, but we continue to sort of focus on driving our volume, like in the last quarter where we had a double-digit volume growth as a consolidated paints and coatings company, driven well by both the paints and the coatings verticals. We continue to be making sure that we are driving our key categories, particularly with focus on premium, making sure that we are competitive in our mass and economy offerings in the paint side, and on our coating side, making sure that we are able to give better value propositions to our customer across our businesses. So suffice to say, Prashant, that initial months, I think it's better than the last quarter if you ask me, but we've still got a month and a half to go. So, it's too early days to really give you any projections for the quarter. For the full year, we still remain committed. We are still saying that we will deliver a double-digit volume growth for the year, for the fiscal, and we continue to see a mid to high single-digit revenue growth.
I mean, mid to high single-digit revenue growth. Volume growth in 10% plus?
Yes, volume growth I do maintain, and as we've also demonstrated in the last quarter, will be double digit. It'll be 10% for sure.
This is now the festive season all the way to the end of the year, and this will be a busy season for you as well, right? Is it too early to gauge whether, it's really sort of demand inquiries, etc.? Is it too early?
It is a bit early because really, I think you normally start seeing the uptick in the first week of September. So September, October, this time Diwali is a little early. It's in the end of October. So that's when you will really start seeing the uptick. But yes, it's slightly better than what we saw. And I do think that the consumer sentiment, both across urban and rural, is a little better than what we saw in the last quarter.
Okay, so that's the outlook on the volume growth at the top line, Mr. Rajagopal. Hi, morning. Let's talk about profitability and margins as well. And I think the question on people's mind is whether this price hike has been well digested, whether you'll attempt more price hikes as we get into the thick of the festive season, and whether the margins can be sustained. I think first quarter you were close to 16%. So what's the margin trajectory looking at input costs for the rest of the year?
So we believe at this point, Surabhi, that look, we see approximately about a 2% increase in the raw material. So we are ballpark there on the price increases, and then we obviously will look at some of the commercial excellence initiatives to make sure that we continue to remain in the same band. As I said, our endeavor is now to hold our EBIT margins. We were one of the few players really looking at both sourcing initiatives and cost initiatives to make sure that we delivered a profitable quarter. So we continue to be focused on that journey. Yeah, but I would still say a little early days. The competitive activity is yet to heat up, because the season really, in a way, would start between September and October, and that's when you will really start seeing the next sort of signs. So far, from what we've seen for a month and about 2 odd weeks, I think it's fairly okay. We would believe that we are still on the journey.
Okay, speaking of competitive intensity, I mean, that's been the talking point in your sector, right, sir? So what is the sense you get? And you have your ear close to the ground, close to the business. Again, back to the question on price hikes. I think everybody took notice of the price hike because it happened when so many new big players, deep-pocketed players are coming through. So again, the same question, would you expect some more price hikes to be pushed forward? Or is it too early to say? And also tell us about market share, since we're talking competitive intensity. You want to sort of rise up the ranks on the premium segment side. So what's happening with market share?
So firstly, Surabhi, to the question on price hikes. See, at this point of time, what the sort of inflation on the raw material side we seem to be covered. We'll have to see how the vagaries of the commodity price moves in the next few months, and then accordingly we will have to take the decisions. We want to make sure that we are maintaining our competitiveness while we take the price hikes. We are already a premium brand, as you're aware, and so we want to be extremely careful of the fact that we don't want to. So that brings me to market share. Look, I believe that we are getting market share. We are closer. We in the paint side, we were at about 4.5%. We've all the way moved up to almost 5%. If you look at, we are in the top 2 now over many quarters. If you take a 2 years also, we are in the top 2 in terms of growth, right? And not just growth. Remember, we are a challenger brand. So it's also very important for us to maintain profitability as we start getting those growth. So really a tough act, but yes, we are up to it. We put our strategies in place, and so far, as we've seen in the last quarter, we seem to be on course.
Got that. 2 questions. In terms of touch points and distribution, where are you at, and what's the target by the end of this year? And on market share on the premium side, where are you at now?
So first, on distribution, Prashant, we were at about 22,000 odd outlets. Our first target is to cross 25. You see, our definitions are a little stringent. So when you hear this, we look at outlets with a certain minimum amount of revenue. So our metrics are a little different from how the industry looks at it, and that's only because we want quality outlets, given the fact that, as I mentioned, we are a challenger brand. So it's very important to make sure that your value per outlet, and the same store growth is also kicking in as we start expanding. And your second question was, Prashant?
Market share in premium segment, and what would you like that to go up to? I think you were at about 16-17%.
So I've maintained, I said we'll go up to about 30,000 outlets. In terms of premium, yes, that was your second part.
Yes, yes.
17% market share. Look, we are continuing. Our premium is really growing, and that's born from our contribution margins. You see, we've got one of the highest contribution margins, gross margins in the industry, and that's what has also sort of been accretive to our margins that we've delivered. So we continue on the track. What have we done? We've launched, for example, a super premium, uber premium product called BT Eterna very recently. We've just put it in Delhi and Kolkata. We'll be coming to Mumbai and some of the other markets very soon. It is, it's going to be a paint with a stroke unmatched. I can tell you, because we've tested it enough, and this is really for consumers who are very discerning taste, and making sure we continue to serve the high-end customers in a manner that they would like to. So that's really the focus, Prashant, if I've answered your question.
Prashant, are you painting your house this Diwali? It's for discerning consumers, so there's some thought.
I'm hoping that all of you paint for food.
With 2 kids, I've decided I should do it once every decade. There's no point. Otherwise, I've been doing it every year. But Rajiv, it's a pleasure. Thank you very much for joining us, and great conversation and great speaking with you here on CNBC TV18. So that's the perspective coming in from AkzoNobel. 15 points lower on the Nifty, 24,685, 90, so basically bouncing around. but not very much in that sense. The big mover is PNB Housing. PNB Housing is up 7%. That block got done in the window, and it's surging as we speak right now. There is Cyient, which is looking up. Nucleus, after yesterday's 20% move, is up another 8.5% right now. And there is something like a HG Infra, which is coming up with strong gains as well. But I think we've got the management of Mazgaon with us.
Absolutely. And before we get to the management, let's pull up the stock price, because there's an interesting tug of war that's been taking place in the market since yesterday between the bulls and the bears on this stock. The stock started off a little soft. It's recovered quite well. Mazgaon is actually down about 25% from the peak. And yesterday, the decline was a little more pronounced because of a note that was there in the market. ICICI Securities put out a report. The target price was substantially lower than where the stock is trading at right now. The target price is close to 1,100. And, there's a contention there by that one brokerage that perhaps as the execution of a lot of the large projects gets underway, after FY26, the surge in margins, the EPS, that will all sort of cool down. It will become range bound. And then the stock will have to perhaps contend with valuations which perhaps could be out of whack. So just summing up that view, which led to a big decline on the stock yesterday. But we want to get an idea about the business ahead and whether any of these concerns are well-founded at all. Sanjeev Singhal, Chairman and MD of Mazgaon Dock Shipbuilders, is with us. Mr. Singhal, thank you so much for joining in. So, of course, your business always gets a lot of attention and attraction in the listed markets. And we want to start off with exactly that. You had a fantastic first quarter. Your margins moved up to 27%. You've been delivering ahead of schedule on a lot of the marquee deals and the marquee names. But the concern is really that whether you will be executing most of your order book by FY26 and what happens after that. So let's start by getting the order book picture. Where do you stand? What is the addition? And how much will you grow the order book by this year? And what is the execution timeline?
Yeah, good morning, everybody. With respect to the company fundamentals, we would focus only on the fundamentals. As far as the order book is concerned, we have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the order, the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. And apart from this, I have mentioned earlier also in a very transparent manner that we are poised to receive one more order with respect to additional 3 Scorpion submarines, for which costing committee has had 2 rounds of evaluations, and we believe that they are close to submission of their report. And subsequent to the submission of the costing committee report, there would be, if required, any technical or financial negotiations. And we expect this order to be placed on Mazgaon Dock anytime soon. Apart from this, there is an order for P-75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazgaon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. Apart from this, also,
sir, if you just allow us to interrupt you, sorry for that, just to understand the nuances. Some questions, one step at a time. You said the order book right now is 40,000 crores. That includes the delivery of 30 ships over the next couple of years. You will execute this order book over what period of time? And in terms of revenue recognition, what should we expect in FY25, FY26?
I'll not be assigning any numbers for FY25 right now, but yes, we are looking for growth over 23-24. And this order book, we plan to execute over a period of next around 4 years. And then there would be certain pendings with respect to the D448 liabilities and the warranty executions. So maybe 4.5 years, 5 years, this order book would be liquidated. But at the same time, we are expecting substantial orders in next in a short while.
Yeah,
I would say.
Okay, let's
maybe next 2 to 3 years. So before we execute the order book, the fresh orders should be in place.
Yeah, no, absolutely, Mr. Singhal. Good morning, Prashant here. And I mean, it's been such a wealth creator, the stock over the last couple of years. But we'll talk, of course, only about the business. So let's talk about that P75I submarines, right? Six in total. You've submitted bids. You're saying that what you've submitted has been found to be satisfactory. I think you told us that the order value there is about 43,000 crores. By when can we...
the AON value as on 2018 is 43,000 crores.
Yeah, absolutely. By when will we see something this year, or you said the final award will only happen next year?
Yeah, we are expecting next year.
Next year, first half, second half?
Such fine timelines would be difficult to define because a lot of procedural issues are there, a lot of agencies are involved. These are mega projects. Yeah. But yes, positive developments in the right directions are happening. So if things are moving as per schedule, then we expect sometime next year before December, order should be in place.
And how many? There is a private player in a JV also in the fray, right? What would your expectation be? You've submitted for all 6, but typically, how does this happen? I mean, if there are 2 players who submitted bids and both are found satisfactory,
As far as the RFP is concerned, the entire lot of 6 submarines will be awarded to only one of the consortiums. Of shipbuilders, considering its strength, is very positive about it.
No, absolutely. Get that. Before we spoke about the submarines, you were talking, you started with another large value sort of bid.
For 3 submarines, just clarity on that, sir. So P751 is separate.
That is next year.
That's next year. You said that there is another large order for 3 submarines where technical studies are undergoing. Can you tell us more about this contract, the size, the potential, and by when perhaps we can get the final word on it?
Currently, we are executing P75, which comprises of 6 number of Scorpion submarines. We have delivered 5, and the 6th one is scheduled to be delivered by this year, probably by 3rd quarter of this year. And in a continuation of the same P75, there is an additional discussion with regard to 3 more submarines of P75, Scorpion submarines. So these 3 submarines, we have already submitted the technical as well as the financial documents to the ministry, and this has been evaluated by the costing committee twice. And we believe that the costing committee is close to finalizing their estimates and assessments. So this is likely to be finalized, and this could happen very soon if things go as per schedule. So this is on nomination basis and likely to happen very fast.
And this is and what's the value, sir?
A1 value would be something around 27,000 crores.
And that should happen. I mean, the award should happen this year. Over the next couple of months.
Yeah.
Okay. It's possible that by when we are speaking with you same time next year, of course, that's not the next conversation we'll have. We'll have hopefully many between. But you will have, that 43,000 crores and this additional, which is expected to be awarded in the next couple of months. I mean, we're looking at a sizable accretion, possible.
With respect to the first 3 submarines, we are absolutely positive that should definitely
that's nomination.
To that. With respect to P75I 6 submarines, I said we are hopeful by December next year, things should be in place.
Okay, things should be in place.
All right. So now that we've understood the way the order book is shaping up, just a word on revenue recognition, because I'm going back to market concerns and the concerns could be based on stock valuation. But just to understand the business mechanics, one of the contentions is that as you go on executing this order book, revenue recognition is based on certain milestones. So maybe the pace of revenue recognition will slow down. Maybe the margins will come off. I mean, you're at 27% in Q1 of FY25. So just tell us, as you execute these large orders, what is the revenue recognition and what happens to margins? Can you sustain 27%?
We have never said that whatever margins are there, these will continue as it is. It will depend upon the order profile. But yes, what I can say is that currently the position is reasonably comfortable. And because these projects, with respect to destroyers 15 Bravo, this is coming to a fag end. We are out of 4 destroyers, we have already delivered 3, and we are scheduled to deliver the 4th one also this year. So this project would be closing. So any cushions which are kept with respect to liabilities that may arise, the cost to completion, this is reworked on a quarterly basis and every year in a much elaborate and granular manner. So if any cost savings are there, they are released as profits. So this kind of a scenario would continue. Whenever a new project is there during the initial stages, normally the cost estimation is on a conservative side. It may not be absolutely accurate until the orders are formed up and placed. But as we progress into the project, a greater clarity emerges, and we are more aware with respect to at what cost we'll be able to complete. So revenue recognition in case of large projects normally happens in this way. So I don't see, I'm not saying that the margins at the rate of 27% are going to continue, but yes, I definitely see whatever projects we are participating in, a reasonably healthy margins are catered for.
So what is healthy, sir? What is a realistic expectation to have? Not 27%, you've clarified that, but what could be reasonable, sustainable on a full year basis on margins?
See, it would depend. We are a cash surplus company. There are no working capital concerns, and there are no liabilities in the form of debts or any loans. So, with respect to the investments, also there is a sizable accrual in the form of interest income. And as far as the projects are concerned, projects may reasonable margin would be something around 10 to 12%. And taking the repair verticals, the offshore projects, which we have now started in a significant manner, without assigning any numbers, I would say that anything about 10%, 12% would be a reasonably healthy margin.
The offshore project, you're referring to the ONGC one, right? So we're running out of time. But just to understand, I mean, the large chunk of the order book, obviously it's all naval right now. Is there a conscious sort of effort to go beyond naval projects as well? Will we see more of these ONGC type projects? What's the what's the revenue mix that we can expect, say, 2 years down the line?
Yeah, definitely. MDL was in offshore business around 22 years back. So this is one vertical which we are now revisiting and reviving once again. So this would be a separate revenue stream in addition to the naval projects as well as the commercial ships. We are also looking at the repair and maintenance sector. Although these sectors, like repair and maintenance, we don't target more than 8 to 10% of our total revenue pie. And similarly, with respect to ONGC, of course, with respect to offshore, this can be a significant contributor to our revenues going down the line. Because we see a lot of potential in this, and there can be a long-term, we see a long-term engagement in this area.
Okay, and so just checking, I know you won't really tell us much on this, but in case you've heard anything, in New Delhi, anywhere around you, any talk of any stake sale by the government? Anything from DIPAM that you may have picked up in conversations?
That would depend upon DIPAM only. So whatever the directors from the DIPAM side, we'll abide by that.
All right, Mr. Singhal, we'll leave it there. Thank you very much for your time. Appreciate you joining us and running us through all of that in a detailed fashion. That's Mazgaon Dock with Perspective. We'll take a quick commercial break here. We are back with more. Markets, I think, also swung back into the green. I think last I saw flattish, but off the lows. Manisha puts the focus on commodities. Stay tuned.
investing.
Welcome back. Well, let's now turn the spotlight to the market once again. Very, very range-bound and choppy in a narrow range. That's what we've seen so far. Mitesh is back with us. Mitesh, what's the advice and what are the trades now?
Yeah, so we're still looking at stock-specific trades. Alchem Labs, Alchem is something which is on my focus. It's been consolidating sideways for the last many days, and today showing signs of continuation on the upside. So keep a stop at about 57.15. Look for targets of 5,900 plus here. I think the stock can do even higher because it's at all-time highs. So it looks very positive to me. And the other one is Naukri Limited, which is Info Edge, which is also gone into sideways consolidation for the last 3-4 days, and this can now be bought at a stop below 73.60 for targets of 75.80.
All right, Mitesh, thank you very much for that. So those are individual trades coming in. Commodities in focus. Manisha is here with what she's tracking. Manisha, good morning again.
Thank you for that, Prashant. Well, I'm looking at the soft commodities. Well, the agriculture commodities have been quite volatile as well. In the Indian markets, we're, of course, looking at festival demand, the monsoons and the sowing numbers and various measures that the governments have taken. In the international markets as well, it is pretty much the same, the kind of measures and the weather concerns that we have seen for many of them. So I have a couple of gainers on my radar right now. I'll talk about Arabica coffee, which the prices are trading at almost 2011 highs. This is after drought conditions in Brazil, which has concerns about yield there. And also because of the strong Brazilian real, you have discouraged exports coming in for that one. So this is one thing that has been surging up. The other industrial commodity which has picked up in recent few months has been the rubber prices. 2-month highs on this one. There are supply concerns on production. Logistics have continued to be expensive and delayed as well. Thailand has seen challenging weather. Malaysia production has increased, but only by 0.2% as compared to the previous year. And then you are looking at strong global demand for rubber from whether it's automotive as a sector, healthcare and construction as well. Well, that's exactly where the gainers end, because there are a couple of agricultural commodities which have seen sharp declines also. Sugar, for one, is now trading at 17.5 cents a pound. It's a 2-year lows. The weak demand from China, decline in crude oil prices, and then, of course, the fact that Brazil is producing more sugar than ethanol this time around. You are looking at record sugar production coming in from Brazil. Strong crop expectations in India as well because of strong monsoon and higher acreage areas is something that continues to weigh in case of sugar there. Soybean is yet another one. So overall, the edible oil pack has continued to decline. It's a zero duty import that Indian markets have been looking at. So we are looking at soybean prices at a 4-year lows. Palm oil prices at a 6-month lows as well. It's a record US harvest this time around, and the global ending stocks also expected on the higher side. So when you look at the charts for the last 1 year, you will see that decline for edible oil prices. Soybean is down 14%, palm oil down 6%, and sugar prices have declined by 4% in the last 1 month. But then there are gainers as well, as we spoke about. So rubber is up 7% and coffee up 2%, and cocoa has continued to surge, up 14% in the matter of last 1 month.
All right, Manisha, thank you very much for that. A lot of the commodity action summarized there. We'll take a break. We are back with my colleague Lata, getting you a CNBC TV18 exclusive. She'll be chatting with the SBI chairman, Dinesh Khara. That's a special conversation you're going to miss. Stay tuned. Coming up.
In a very constructive meeting with Prime Minister Netanyahu today, he confirmed to me that Israel accepts the bridging proposal, that he supports it. It's now incumbent on Hamas to do the same.
In 1972, a fearless black congresswoman named Shirley Chisholm.
Welcome to a very special conversation. Mr. Dinesh Khara would have completed 4 years as SBI chairman when he ends his term next week. The numbers show it has been an exceptional 4 years. The bank's margins, which stood at 2.9% when he took over, now stands at 3.3% and even touched 3.6% a year back. The bank's NPAs, which stood at over 7% when he took over 4 years ago, is now just 2.2%. Of course, net NPA is much lower. As a result, credit costs have fallen from 2.06% to just 48 basis points today as he signs off. We have with us the man of the moment, Mr. Dinesh Khara himself. Good morning, sir, and thank you very much. Many congratulations for an illustrious 4 years at State Bank. But let me start with the first or the last battle that you are fighting. You began fighting bad loans. Now all of you are fighting for deposits. Just what was the message from the finance minister?
First of all, thank you very much, Lata, and for saying all these positive things about the bank. Well, as far as the finance minister's review was concerned, it was on, we have got a system of at least having 2 reviews with the finance minister. And she invariably comes out with the contemporary situation which is obtaining. And of course, we have the privilege of her guidance during that review. And on the top of it, she allows us to speak our ground level situations as well. So I think it's a good way of interacting and also knowing what is happening on the ground and the steps being taken by various banks to tide over the challenges which are there in the ecosystem. So this was the broad theme of the FM's review. And I would say that it was quite encouraging review which took place.
Okay, well, primarily it has been a war for deposits, and Soumyakanti Ghosh, your economist, has written a brilliant report on the state of deposits. He says the divergence between deposits and advances normally lasts for between 2 to 4 years once it starts. So he forecasts that by June next year, it would be all over, June to October. You agree with that assessment, or it could be over even earlier?
Between deposit growth and loan book growth. I think growth is one part. At what price and cost that growth is happening is the other aspect which cannot be ignored. You know, while in financial institutions and more so in the banks, it's more like it's a trinity. One is, of course, margins. Second is asset quality. And third is a growth. So this is a trinity which needs to be balanced out. So I think depending upon the credit deposit ratios, each of the bank is probably coming out with their own strategies. And those who are in a credit deposit ratio which is quite on the high side, they are trying to garner deposit by all means at whatever cost they're in a position to raise.
That's right.
But there are a few others who are in a position to calibrate the deposit interest rate. Because what is happening is that of late, when it comes to allocation of anybody's saving, and more so particularly after the financialization of savings, what we have seen, that there are multiple options which are available, deposit being one of them, markets being others.
Yes.
And it all depends upon the when it comes to the liquidity, what is the preference for the liquidity, what is the preference for the returns, and what is the preference for the safety. It differs from age group to age group. It differs from geographies to geographies. So that is why, these are the micro markets which have evolved of late.
Yeah. No, I agree with you. Actually, yeah, we have those numbers. You even told us a few days back that CDs are always an option. And bank CDs have now reached 9 lakh crore. So everybody's dipping into the market, the yields being low over there. But Soumyakanti makes another point, which I'm sure may have come from you to him. The tax advantage which capital markets have, Now the difference is too biting. Was that part of your discussion with the FM? Do you see anything happening on that count?
No, I think as bankers, this point was raised, and of course, see, essentially, when it comes to various financial instruments, how tax efficient are they? Eventually, will decide their acceptability with various savers groups. So it depends upon the target customers. So that is something which was brought out. But yes, of course, it was deliberated, debated. Of course, these things take its own course before any final view is taken.
Yeah, we have just put behind the budget, so we can't expect tax changes anytime soon. But I'm sure you all made your point there. But therefore, Mr. Khara, coming back to the business of the day, do you think deposit rates can rise further and margins can dip a little more in the current year? Would you want to change your guidance on margins at all?
No, of late, when it comes to the loan book is majorly linked to either to MCLR or to EBLR.
Yeah.
And of course, when it comes to EBLR, there is a particular set of the benchmark. In fact, all benchmarks are behaving a little differently. When it comes to T-bill, thanks to the government plan for borrowing, that T-bills are now trading low. So that is something, all such advances which are short-term in nature, which are linked to T-bill, so naturally they are priced much lower. But if at all it is linked to, EBLR, which is, or maybe MCLR, which has got a component which comes from the cost of deposit. So cost of deposit again will differ from bank to bank. So it's very difficult to predict whether it will have a overall increase in the loan rates and will it have any dip in the NIMs? Because NIMs, all said and done, is eventually an outcome of the interest earned and interest expended expenses and interest expenses. So we are also seeing that the loan book is going well, and that also helps us in generating much better interest earnings. So that is also a reality. But of course, I would also like to mention that entities like us, where we have got excess SLR, so when we are growing our loan book, we are actually diverting part of the investment to the loan book growth. So which eventually means that when our yield on investments being low as compared to our average yield on advances, so it actually helps us in generating better revenue also. So that's how it works. So I think it will actually differ from bank to bank. Very difficult to generalize how it will differ for the industry as well.
But for your own bank, do you think you will run down your loan deposit ratio because of the LCR? Why do you have to maintain such a high loan to deposit? You can come down even to 105 or 110, right?
LCR, as LCR is concerned, of course, we're at about 130. As of now, the discussion paper which has been introduced by RBI, I would say that they are still evaluating the responses from various institutions. It's too early to jump on what is the likely outcome from this LCR related debate. But nevertheless, we, as a bank of our size, we have normally been taking some kind of prudent measures to ensure that our liquidity should be comfortable. So we will. It's more of it's more board mandated guidelines which are there. So I think and board always keep in mind what the situations which will be obtaining in the market.
Okay. Well, just to look back at the last 4 years, Mr. Khara, what was your toughest moment? What was your happiest moment?
Well, I would say that toughest moments were the time when actually I took over charge during the peak of COVID. It was the second wave which was getting introduced. We were getting into the second wave of the COVID, which actually turned out to be quite lethal too. So ensuring that, more than 20,000 odd branches should remain functional, the morale of the people should remain high, and we should be in a position to ensure that the wheel of economy keeps on moving. So that was the most toughest moment, and I'm very happy when I look back and reflect on that situation, I would say I'm very happy and thankful to the fraternity, SBI fraternity, because they ensured that the wheel of economy continued to move. And secondly, I must also compliment here the pragmatic policies which were adopted at the material point of time by Government of India as well as by RBI, which helped us in ensuring that the critical sectors of the economy like the SME, etc., they could be provided the required support. You know, people have got very short memories.
Yes.
People would have forgotten what the COVID was. But since it is very green in my mind, I can perhaps never forget what all we went through during the period of COVID. The human aspect, business aspect, all those aspects. But yes, of course, I always believe that we should not allow the negativity to cloud our mind. I tried to stay positive, not the COVID positive, but positive in terms of thinking.
I get that.
Yeah, so
No, I
I
get that.
tried to stay positive and ensure that the whole of the machinery should stay positive. And that is something which helped us in navigating those difficult times.
I have to slip in a last quick question, sir. On the sidelines of that meeting with the finance minister, were you told what is your next position? I don't think they let you go off that way.
No, I think the exposition was, of course, you know, I could really relate to what they were talking about, and I could integrate and synergize my experience into what we should really go forward, what we should do going forward. So that is my own little experience which I could contribute. So I did that.
Of course, I don't think they let you off. I'm sure there are some plans that they may have for you. All the very best, Mr. Karao, for your next innings, and many congratulations for a very, very successful stint as chairman.
Thank you very much, Lata. Thanks a lot. Thank you.
Okay, well, that's Mr. Dinesh Karao, and August 28th is when his term ends. An illustrious career indeed. Wrap up on that note. Chartbusters coming up.
She ran for president. And her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women fighting for reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. My friends, when a barrier falls for one of us, it falls. it falls and clears the way for all of us.
Dr. Reddy's Laboratories is in focus as the company signed a non-binding agreement with Kenomix, which is for an anti-malarial drug. Cyient climbs more than 1.5%. That's after 14.5% equity in Cyient DLM worth almost 900 crore rupees changes hands at 766 rupees a share. Cyient itself is likely to have sold the stake via a block deal. Genus Power climbs nearly 5% after the company gets 3 letters of award worth about 3,600 crore rupees to design, install and supply smart prepaid meters. Nucleus Software rallies for the second straight day, this after the company announced buyback plans earlier this week. The stock up around 5%. You have India Mart and Chambal Fertilizers both up by about 1% and 3% each. That's largely on account of their exit from F&O ban. Good morning, you're watching us here on Chartbusters. I'm Manglam Malu. Joining me shortly will be Nigel D'Souza. Just keep an eye out on the markets, though. It's been a steady start for the frontline indices. The Nifty's moved towards the high point of trade, and this despite the weakness that we're seeing on the Nifty Bank itself. The Nifty Bank, after having done well in yesterday's trading session, having crossed the 20-day moving average, has come in for a wee bit of profit-taking once again, currently sitting at the cut of almost 220 points, a cut of almost 0.5%. The broader markets, no real problems. We have nearly 2.5 stocks advancing for every stock which is declining on the National Stock Exchange. So those advanced decline lines come up for you. For the third day running, they have been parallel with the green line much above that red line itself. What are the stocks which are supporting the Nifty in absence of the Nifty Bank today? The biggest of them all has to be Reliance. Reliance has been the key supporter in today's trading session so far. It's been a bit of a breakout at the high point of trade for that stock. The second one we're looking at is ITC. ITC too has moved higher and has moved to the high point of trade itself. So it's the FMCG pack, a couple of these oil and gas names, including the likes of Reliance, and no further sell-off that we've seen in the IT space, which has led to this up move on the Nifty despite the weakness that we're seeing on the Nifty Bank itself. So the IT index, yes, it is down, but it's not out, as a result of which we are seeing that support. Let's welcome Sony Patnaik of JM Financial Services for a quick technical check on the market. Sony, we've been in this consolidating funk, so to say, with an upside bias every once in a while where we do break out. It's typically the Nifty Bank which determines whether we break out or not. What are your thoughts on the indices right now and your individual stocks?
Good morning, Mangalam, Nigel. Thank you for having me on the show. I think, yes, rightly you've pointed out, Nifty, it is looking, or definitely it's holding a very strong support of 24,600, 24,550. On the higher side, we feel that Nifty can test 24,850 from current levels. So maybe another 80 to 100 points more from current levels. That will be quite crucial to watch if it's able to cross above that 850 resistance and, it can head towards 25,000 mark or not. So I think that's the structure for Nifty from current levels. Bank Nifty, you've quite rightly pointed out, the breakout yesterday we saw it happened above 51,000. Of course, it did not sustain. So I think that level is still holding quite crucial for Bank Nifty, and a breakout only above 51,000, maybe 51,050 or maybe 51,100 in cash levels will confirm that Bank Nifty is also giving you that range breakout. So I think out of both the indices, Nifty is holding quite stronger. Bank Nifty a bit of an underperformance. Let's wait for the levels to cross. Then only we can say that above that breakout, we can see high levels of 51,500.
No trade zone on the Nifty Bank and maybe a bit of a long bias on the Nifty with 80-point upside. Is that correct?
Yes, absolutely, Nai.
All right. And individual stocks, what are you looking for? Because, I mean, there are a bunch of stocks which are doing quite well this morning, despite the consolidation that we're seeing in the market. Case in point, from the FNO pack itself, Berger Paints has moved higher, moved to the high point of trade. Delta Corp has moved higher. Glenmark Pharma, we're seeing decent traction on a bunch of these stocks. Strides Pharma, for instance, for the second day running, has done well as well. So, actually, yesterday saw a bit of profit taking, but right now has moved, bounced back once again. So, individual stocks, what's on your list?
Definitely, I think, Mangalam, you've highlighted well. Pharma stocks are looking quite strong for the momentum. Beats and Pharma, Dr. Reddy's, Lalpath Lab and Alchem. But right now, the stock that is looking quite attractive would be Lalpath Labs. It's continuing quite strong in that momentum. The upside is still intact, and it has given a fresh option chain breakout above 3,300 level. So at current levels of 33.15 futures, one can buy Lalpath Lab, keeping a stop loss of 3,310 and a target of 34.20, 34.50 can be seen in Lalpath Labs. The second stock would be in Escorts. There's a bit of a conditional buy in Escort. Escort is bouncing back from good support of 37, 37.20. If it's able to cross the level of 38.20, it will give you that option chain breakout above which a sharp short covering move can be seen in Escort towards 3900, 39.40. So one can keep a watch in Escort, and a buy above 38.20 will trigger the short covering for targets of 3900, keeping a stop loss of 37.20.
Have you looked at some of these cash stocks? PNB Housing Finance, for instance, after the last trade has moved higher. It's up around 8%. Just Style is the other one, which is surging up around 8%. We've been talking about the innerwear space and how demand is increasing out there. Yesterday, we had the management of Dollar Industries and Rupa. Lux is one of those stocks which has seen a consistent rally. In fact, this year itself, Lux is up around 83% odd. Castrol is the other one, which is up 7.5% too. So there are a bunch of stocks which are buzzing around the non-cash, rather non-FNO related stocks, cash stocks. Do you have any picks in that? Any chart that looks good?
Certainly, I think PNB Housing Finance is something that was looking quite good even in the morning charts. This breakout has come quite clearly. It is back with very strong volumes. The breakout on charts has come above 850. So from current levels, one can still enter, reinitiate the longs, keep a stop loss of 845 in cash. The stock can test higher levels of 910, 920. So I think above that, you'll see a fresh round of a breakout again on charts. The extended targets above that will continue towards 940 plus. I think the stock is quite attractive, very strong volumes, chart, fresh breakout, 850 acting as a good support. So I think definitely one can reinitiate the longs in PNB Housing.
All right, take that point. Thank you, Shilpa, for joining in and giving us, Sony for joining in and giving us all those calls on individual stocks as well as the index. Just before we move on, pull up the intraday chart of Nykaa. You'd see that stock having done fairly well as well. The results weren't too bad. In fact, they did showcase some sort of improvement in their beauty and personal care vertical. The stock at the high point of trade. Let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Bharat Jinani joins in with a stock that he's been tracking.
Senco Gold Limited. The company posted mixed Q1 results. Revenue growth moderated to single digits owing to lower wedding dates, election cycle, and increase in the gold prices. However, the EBITDA margins improved by 250 basis points YOY. This is mainly owing to the low base of the corresponding quarter last year. Steep reduction in the customs duty on gold witnessed in the Union Budget last month has led to a significant surge in the jewelry demand. The company has witnessed strong demand in Tier 2 cities and towns where it primarily operates and has seen increase in the footfalls. Despite a relatively softer Q1, the company has retained its growth guidance of 18 to 20% for the current fiscal. However, there is going to be a near-term impact on the margin due to inventory loss post-reduction in the gold prices announced in the Union Budget. However, the step is positive in the long term as it reduces the pricing differential between organized and unorganized segment, thereby benefiting organized players like Senco Gold. Mandatory hallmarking regulations which require purity certification for jewelry is another regulatory positive for the jewelry industry and will benefit players like Senco Gold. At the current market price, the stock is trading at a PE of 30 times FY26 earnings projections. Investors can add this strongly. Thank you.
All right, with that, we'll simply do a short break. Come back on the other side. There's an exclusive conversation lined up for you from the sidelines of the Motilal Oswal conference. The CFO of Ambuja Cements, Mr. Baheti, joins in with Nigel, who is with the management out there at the conference.
good to be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will come together and declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us. Let us fight for the ideals we hold dear, and let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Again, what her appearance is just a preview of coming attractions of Thursday night. You could feel the electricity. It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created because it's all about the future, and she embodies it.
Oh, I think it's great. You know, people really get excited when something happens they didn't expect, and it makes them happy. So we're a happy group.
Welcome back. You're watching us here on Chartbusters. Let's toss across to my co-anchor Nigel, who is currently at the sidelines of the Motilal Oswal conference. With him is a special guest, a special conversation lined up for you. Take it away, Nigel.
Well, thanks a lot for that, Mangalam. Indeed, a very, very special guest. We have with us Mr. Vinod Baheti, the CFO of Ambuja Cements. Thanks a lot, Mr. Baheti, for finally speaking to us here at CNBC TV18. Well, before we get company specific, let's talk about the industry. The last few days, there has been this buzz that finally we're seeing some kind of cement price hikes. From an industry perspective, it's a little bit confusing, right? Because in the monsoons, we don't normally see a price hike. But has there been a price hike? And by when do you expect this price recovery to actually take place? Because that's been fading away in the last few months.
No, thank you, Nigel, having me on the show. So, of course, industry is in a very exciting phase, and we have seen lots of good consolidation happening here. First, on the volume part, Nigel, we are seeing a good volume uptick now, and June quarter was a little dull given the rains and given the election seasons and all, but we are now seeing a good volume uptick. Coming to the price part, it is still on the modest journey, but we see that coming quarters from September past, we will see a good improvement on price as well. Industry is overall in a good momentum. Price will be driven by the market factors, but of course the market factors are looking positive from September onwards.
All right, but in the last 5-6 days or so, we have heard that particularly in South and East India, there's been an attempt to push prices by around 10 to around 20 rupees. Can you confirm that, and how much of that will get absorbed?
Industry keeps doing those attempts as of now, but we haven't seen any material improvement over there. So when you try for 10 or 15 rupees, you may get, say, 20-30% improvement over there. But the real, as I said, momentum will come post-September, hopefully so.
Okay, all right. So you're optimistic on pricing. But what you said is that volumes are picking up, which is encouraging. What kind of industry growth are you working with, for the coming fiscal? And given the kind of volume push that you all are seeing as a group, how much can you outpace the industry growth?
So in terms of the fiscal, let us say we will discuss about the balance part of the fiscal. The balance part of the fiscal, I believe that it should grow between 7 to 8% kind of thing. So far as Ambuja is concerned, I strongly believe we should be closing more than 8%. So we will be that way outpassing the industry. So far as if I look at the larger horizons in next 5 years or 10 years, this industry I strongly believe should be growing above 8 or 9%. The two important drivers of the industry, both say infra and the real estate. So real estate almost is 60-65%, infra is 20-25%, rest is commercial. These major industry drivers are in a very good phase of expansions.
Okay.
And on top of it, industry is also getting younger.
Yes.
Like if you see, for example, industry is going to put another 200 million tons of capacity. As of now, we are, as an India level, say almost 600 million tons. And this 200 will make the industry much younger. Industry is becoming more cost conscious, ESG conscious. So the industry is getting younger. So I always say that now this is like a 100-year-old industry getting younger in this next coming decade. So you will see a good momentum.
Indeed. On capacity, you know, y'all are around 89 million tons odd, and you've drawn up that roadmap that by 2028 you go to around 140 million tons odd. What kind of, industry capacity would you like to have? I think you're currently mid-teens, and you'll have been talking about 20% odd. Tell us the outlook.
Yeah. So as of now, our market share is overall around, say, 12 to 14%, and we will be moving to 20%. And if I see an interesting situation here, that we are the ones with an expansion of our capacity to 140 million tons, we will have an improved market share compared to others who are also expanding, but they will be retaining their market share. So when I look at, say, from 14 to 20%, I have a 6% improvement in terms of my market share at 140 million tons capacity.
Got it. Since you're talking about, growth and about capacity addition, what about Penna Cement? You know, that came out of nowhere. You all went ahead, you all acquired an asset that people speculated was on the block for years, but you all managed to close that out. Now, how do you see the ramp up of this asset? Because utilization levels were low. You had, it was not making too much of money. So, say in the next 2 years, how do you see this asset ramping up?
So, in fact, Nigel, Penna has been a great acquisition for us. As you know that we announced on 13th of June, and we achieved the closing on 16th of August, almost like in, say, 10 weeks' time. And as we speak, already productions have started and dispatches have already started. The assets are great. And while we did a thorough DD, but when we are actually now live running the plants, we see that the assets quality are really good.
Okay.
Our marketing and sales people have given us a commitment of almost achieving 8 lakhs volume per month, which is almost like 9.6 million tons. But without giving much optimism over there, I am strongly believing that 60 to 70% we will be achieving capacity utilization in this year. And as I said, that next year we should be hitting almost 80%. Penna, as of now, we have 10 million tons, and under construction is the Krishnapatnam GU, which will add another 2 million tons.
Okay.
And then the Marwad integrated unit, which is now the whole capex cycle for both these projects. Penna was struggling on those financings, but now with Ambuja's strength, this should be achieved much earlier than expected closing. So we should be hitting 14 million tons for Penna, another, say, 12 to 15 months' time.
Okay, so 60-70% utilization levels in this year
itself,
and 80% next year.
Absolutely.
When does the EBITDA per ton try to catch up with what you're doing as of now?
So in good times, Penna used to achieve EBITDA of 700 rupees a ton.
But that was a long time ago.
That was, let us say, 2.5 or 3 years back.
Yes.
And with the strength of investment, because we see some areas of improvement, like in form of, say, WHRS or the AFR or the debalancing in terms of the overall capacities and all. So we see that this 700, which was, say, 3 years back, we should be first achieving that, because in last, say, 2 years, they have been achieving less than, say, 400 rupees a ton.
Yes.
So we should be first hitting that 700 rupees a ton, and then we should be getting closer to 1,000 to 1,200 rupees a ton. And then that we should be achieving in, say, almost in 26, 27 kind of thing. And then our desired levels of 1,500 with the power of investment. So we are already working on green power coming to Penna and so on and so forth. And the sea logistics, for example, we will be able to optimize given the ports and overall, say, synergies what we have in the group.
Yeah.
So I think we should be hitting 1,500 our desired levels. We have anyways given by 2028, that is the overall, say, EBITDA we want to achieve.
Yeah.
But the first level is to achieve 700 rupees a ton, and then followed by 1,000 rupees a ton.
Got it. And there's cost saving you're working with is around 500 rupees, I think, for the next few years, right? For the entire group.
For the entire group, in fact.
500.
We are looking at almost like 550 rupees a ton.
For it to save it. Got it.
Yeah.
All right. A couple of quick questions before we let you go, Mr. Bayati. Now you have 3 assets, right? 3 cement assets which are listed. ACC, Ambuja as well as Sanghi. When do all of them come together? First, let's focus on the merger between ACC and Ambuja. And is it on the cards sometime soon, say in the next fiscal?
Nigel, I think so. Whatever when it will be there, we will make it to the markets. But as of now, no such plans. But of course, we have already started our journey of consolidation.
Okay.
The first one was the cement business of Adani Enterprise, which is Adani Cementation Industries Limited, which is under the merger process with Ambuja.
Got it.
But as and when we follow the other steps, we will definitely inform.
Because the street is wondering why do I have 3 listed entities, right? Sanghi should get folded up in one of them, and these 2 as well should come up.
Yes.
In the next 2 to 3 years, do you think that will be the plan, that we'll have one listed company, Adani Cement? Should that be a possibility?
Ideally, that should be the way forward. But right now, with Penna also on the fold, so the whole focus is to optimize the businesses.
Yeah.
Our idea is to hit the volumes and hit the EBITDA. That is the foremost priority.
Okay.
But this corporate restructuring definitely will be also worked upon.
Within 3 years?
Nigel, apologies. But I don't want to put any comments on that. It will be speculative.
All right. You've answered a fair bit of our questions, Mr. Bayati. So let's clear the air on everything. There is this rumor or this buzz that the promoter entity, after increasing stake in the company, that's Adani, they could be looking at going ahead and maybe selling some stake. There is some buzz in the market, so I wanted you to clear the air on that. Either ACC or Ambuja. Ambuja is where the buzz is, that there is potentially a large block. You want to deny it? You want to confirm it? Is that a possibility?
Well, I would not comment anything on that because that will be directly looked upon by the family office. So at the business level, at Ambuja, ACC and Sanghi level, I would be able to answer all your questions.
So I should not take that as a denial or a confirmation.
I would say that I'm not aware of it, and there would be appropriate people to answer that.
Well, Mr. Bayati, before we let you go, final question. Inorganic growth is something everyone is looking at and talking about. Few assets that I'll name, you can deny it point blank if you're not interested. Orient Cement?
I will just generally answer you, Nigel.
Orient, Nuvoco and Heidelberg. 3 assets.
I would be open to all the assets.
Yeah.
We have always said that we are working on many opportunities. But as we always say, we are a buyer at a right price. And as a strategy, both organic and inorganic, we are open to. And good thing is our balance sheet is very strong.
Yeah.
And sitting on a good pile of treasury to consume a transaction.
But Mr. Bayati, give us some more insight. Is it going to be, could you give us geographically what will be the preferred location?
Okay, in terms of geography, see, we are fairly well balanced.
Yes.
But when these are known in the investor publications, whatever we do,
Central
India is something which we are 8 or 10%. So obviously that would be my choice to look at say Central India to improve that. South was somewhere we were lagging, and we bought Penna and we increased our capacity share over there also. So as of now, but having said that, all regions, right from eastern to northeast to center, we are open to at a right price.
All right, Mr. Bayati, thanks a lot for speaking to us here on CNBC TV18. We wish you well, and we'll hold you to those numbers the next time we chat as well.
I look forward to.
That's it from us here at the conference. Mangalam, back to you.
All right, incredible conversation out there, Nigel. When they're talking about trying to put all the Adani cement companies under one basket itself, not speaking much about when they will try to restructure, but the eventual strategic roadmap is lined out. Also looking for some assets, while in all geographies of the country, a particular focus in the central part of the country with the right price as well. They do have the balance sheet for the same. Let's see how that pans out. Take a short break, come back, get you more stock-specific action on the other side.
What kind of thing we accumulated at sub 100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today, but significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in trend has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really...
Welcome back. You're watching us here on Chartbusters. There's been some bit of further sell-off on the Nifty Bank. When we started the show, it was down by about 200 points. Now it's down by 270 points. So incremental sell-off has led the Nifty a little lower as well. The Sensex has turned into the red. No problems with the broader markets. We are seeing a fair amount of traction in the mid-cap end of things as well. Z Entertainment is one of the stocks that one should keep on their radar. Up around 5%, a big mover that we're seeing this morning itself rather. And a decent traction is what we're seeing on names like Jubilant Foodworks as well as RBL Bank as well. So those are a bunch of stocks which are doing well. What we'll do is we'll wrap up on this edition of Chartbusters for now and leave you with the team of Trading Art to take all the market action forward. Thank you for watching.
The formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are two other factors. One is technology.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonia Shenoy, and it's a quiet Wednesday morning. Benchmark indices are trading sideways, absolutely flat on the Nifty and the Sensex. Asia is a bit more down than up right now. So Nikkei is down about 0.25%. Taiwan is inching towards a 1% loss. Hang Seng itself is down nearly about 1%. And banks are struggling today. The Nifty banking index is down close to about 0.5%. And both PSU and private sector banks are under pressure. So frontline banks like ICICI Bank, Kotak Mahindra Bank, HDFC Bank, State Bank of India, all of them down anywhere between 0.5% to 1%. Another stock, which is weak is LTI Mindtree. And this is a stock which is, it's down about 0.25%, but from the beginning of the year, it's down about 10%. And the expectation is that in the Nifty rebalance, which will be effective September, LTI Mindtree could be on its way out and replaced by Trent. So LTI Mindtree is a stock which is under pressure, but pharma is doing well, right? Divi's, Dr. Reddy, Cipla, all of them looking smart.
Absolutely. And it's just one of those days, right, Reema, where the market is doing nothing, but you're okay with that because of the kind of gains that we have under our belt and the kind of move that the Nifty has seen. So I think today is just one of those days of consolidation. Even globally, all eyes will be on the US, cues that come in later in the day. And of course, the interpretation of what the Fed would do. But I guess over 90% respondents in a CNBC global poll believe that the Fed will be cutting rates in the September policy. So in that sense, even that is something that the market is prepared for. But in some market opinion, MK in its recent India strategy note highlights that the Q1 FY25 earnings season was weak, with a negative profit growth and muted top-line momentum across the board. But despite the rising share of negative surprises, the earnings forecast for the Nifty and the wider universe remains stable. So to discuss more on this report, we are joined by Seshadri Sen, the head of research and strategist at MK Global, who joins in. Seshadri, hi, good morning, and thanks for joining in on CNBC TV18. It's very interesting because this was a bit of a sort of mixed earnings season that we had. But you tell us, what has the key takeaway been? And are there any sectors where you see both valuation as well as growth headroom now?
Thanks for hosting me, and pleasure to be back on the show. Yes, it was a mixed season, and the aggregate numbers, I think, hide a lot of interesting details. I think the key takeaway was that top line continues to be a challenge for most sectors. Top line growth, it was not particularly exciting. The numbers are a little skewed by oil and gas or energy, but even if you strip that out, there were some top line challenges for a lot of sectors. Margins, on the other hand, the aggregate margins looked a little poor, but if you strip out energy, then the rest of the sector actually did okay in terms of margins. So the trend that we've seen for the last few quarters, that margins are holding up earnings, but the top line is disappointing. That is what broadly continued. If you see the sectoral performance, I think one standout performer was staples and FMCG. That is where we saw, and you have to look at it in context. Staples and FMCG are not going to give you 30% earnings growth. But there was an acceleration in EPS growth from in staples from the fourth quarter to the first quarter. From I think 8% growth, it went up to 13% PAT growth. For very few sectors, actually, we saw the earnings growth actually accelerate over quarter on quarter, meaning that you didn't have a higher earnings growth in the first quarter than you had in the fourth quarter. But in general terms, this is relative, but in absolute terms, industrials continue to be one of the strongest earnings growth sectors at 27%. Durables and financials continue to perform. Durables includes autos, continue to perform strongly, though, vis-a-vis the first quarter, the numbers were a little soft. So that's the overall picture. I would say, the notable performances were from industrials and FMCG or staples.
Okay, so industrials and staples. Seshadri, thank you for joining in. So Q1 on expected lines was muted, and that's in the rear view mirror now. The question is on the earnings growth going forward. Now, MK recently concluded their conference where you had in-depth conversations with corporates across sectors. What is the feedback? Because so far, FY25, FY26 earnings estimates were unchanged. But is there a risk that this muted earnings growth will continue even in Q2, Q3, Q4, putting at risk FY25 or FY26 earnings estimates?
Yeah, let me answer that in two parts. Let's answer the second part first in terms of the risk to earnings. We did note in our report that there was no material change, and we don't just look at Nifty earnings. We look at a disaggregated analysis of about 350 top companies as to where their estimates are moving. And there also we found no cause for concern. And that is a much stronger because that's a disaggregated number. There's a law of large numbers that kicks in there. And we don't see a cause of concern that this quarter led to mass downgrades. What we did note, however, there was the pace of upgrades also has slowed. So there's stability in earnings forecasts. In terms of, so I don't think, in short answer, I don't think we need to worry about a major downgrade coming up. And that's a feature of the India's post-COVID rally that, typically you start with high earnings in April and we end up with a much lower number in the following March. That trend has been broken and I don't see that trend coming back at least in FY25. The feedback from our conference was very positive. Overall, we would say that despite some of the pressures that have come up in recent times, managements remain very confident, especially in the small and mid-cap manufacturing space. Managements continue to be confident of future growth on a multi-year basis, not just in the coming quarters. Two, are not changing their long-term plans. So the long-term plans include increasing capex. We've noted that even more conservative companies are continuing with their capex plans and are incurring new capex plans. Some of them are diversifying, entering new business areas, allied but new product segments. Some of them are still looking at M&A. The cash-rich ones are still looking at M&A, and none of those plans seem to have changed in the last 6-8 months, and that is something that we take a lot of confidence from. The other notable feature from the conference is that as far as consumption is concerned, premium and urban consumption is slowing down, while rural and mass consumption is picking up. This is a reversal of a 4-year trend. As you may know, the post-COVID market has seen rural and mass consumption do badly while premium and urban has done well. That seems to be reversing. It's too early to say whether that's a long-term trend or a medium-term trend, but something that we are keeping an eye out on because that will mean a lot of implications on which stocks investors should hold.
Okay, so slowing consumption at the premium end remains a bit of a concern for you. But mass consumption recovery is a significant tailwind. I want to delve a little deeper into that. When you talk about mass consumption recovery, what is it exactly? Because now we are seeing, a lot more urbanization as well. So perhaps stocks like, say, something like a Zomato, Nykaa sitting at a fresh 52-week high today. Then, of course, you have, stocks like Ola, etc., which are doing very well. Are these niche consumption stories something that you like? Or would you want to stick to the traditional consumption, guys, whether it's, traditional auto sector or FMCG?
A mixture of both. So let me talk about traditional. So we prefer, say, two-wheelers to passenger vehicles. We prefer staples to discretionary consumption. right? Though that is the way we would play. Within the retail space, we would look for particular mass consumption, lower end retail chains rather than the premium retail chains. Especially as some of those names may have underperformed in the last 3-4 years. So that's at the traditional end. As far as the new trends are concerned, yes, we are very excited about that area overall. But one will have to pick and choose. One will have to look at which companies are genuinely, innovative, making an impact, and are demonstrating ability to show long-term growth. Versus some of the companies which maybe sort of showing a short-term growth, etc. But there's a risk that penetration will soon die. It's a tricky area. It's high risk reward. If you get it right, then there is a really serious long-term upsides to be made. But as we've seen, if you get it wrong, then some of these companies can. Valuations are not really comfortable, and there is no underlying profitability. So, sorry, that's a sort of not a direct answer, but one has to be careful of that space because it's high risk reward.
Fair enough. So, if you had to construct your portfolio today, Seshadri, how would you do it? What would the constituents be?
So we are, we've published a lot on this. So our views are very, very clear. We are underweight on financials because we think that financials, the derating that we've seen post-COVID is still yet to be done. The sector is entering a new low growth phase and valuations are yet to adjust. So we are underweight financials. We are overweight at the moment. We are overweight staples and IT. We did that, post-elections because we found valuations to be attractive. Now, some of the valuation comfort has gone, but we are seeing, an upgrade cycle start to kick in there. So we wait and watch that space, but we continue to retain our overweight there. We are overweight durables, which includes autos. Now, one has to be selective, but overall as a sector, we think that the auto cycle CVs we remain confident of, two-wheelers we remain confident of, and the auto cycle will continue for some time, and we will continue to play that. One may have to do some nifty stock picking there, but that sector we continue to like. Industrials, from a fundamentals perspective, is one of our favorite sectors. We think from a 3 to 5 year perspective, that is where we will see the maximum growth. But we thought valuations ran well ahead of themselves, and therefore there is some valuation sanity which needs to return before one can dive into that sector. Having said that, there are plenty of it's a really large sector with lots of small and mid cap stocks. So as long as valuations remain, we are not out of whack, there is still ideas to be harvested there. But as a sector, we'd be a little cautious.
Okay, well, we will leave it at that. Thanks a lot, Seshadri, for joining in and speaking to us on CNBC TV18. Appreciate your time here and speaking to us about your report as well. That's MK with their latest India strategy note and the way forward. Let's step into a quick break. On the other side of the break, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned.
Study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle, all right? And people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we are number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Welcome back to Trading Hour on CNBC TV18. Let's shift focus to the commodity space now. Manisha Gupta joins in, and today we are focusing on the metal space. Manisha, over to you.
Thank you for that, Sonia. Well, a couple of metals on my radar, and one is aluminum, where we have seen strong gains over the last week or so. We are trading at a 6-week highs right now, and this is because of the increased fund buying that the sector really seems to be looking at right now. Remember, many of those commodities and metals essentially were on the shorter side with the kind of sell-off that we saw in the month of June and July, and then some part of August as well. But for aluminum, the Chinese aluminum imports have increased by 11.5%. The cost of alumina also seems to be rising in Australia. So all factors really supporting aluminum prices there. When it comes to copper, well, that also saw some gains in the previous week. We did see prices trading at around 2-month highs, and there are some gains right now as well. But the street also is looking at various reports from Wall Street banks and brokerages suggesting that you could be looking at a surplus in case of copper, not just this year, but the next as well. The one interesting one comes in from Macquarie, where they say that this year could be 265,000 tons of a surplus. Next year could increase to 305,000, and by 2026 could increase to almost 436,000 tons there. There's a similar report from PNB Baripa which says that for this year, 150 to 200,000 tons of surplus could be seen. There also is a report from International Copper Study Group which says that the first 4 months, or until from Jan to May, they have seen 416,000 tons of surplus already. So these are the numbers that continue to keep the prices under check rather.
Thank you very much for that. Banks, by the way, have sold off a little bit more. When we started the show at about 11 o'clock, the Nifty Bank was down 250 points. Now it's down 370 points. But life insurance companies are coming in for some buying. So SBI Life is inched up a little bit more, up 1.25%. Today, there's that Bernstein note coming through on life insurance. They've got an outperform call on SBI Life, HDFC Life and Max Financial. They say private life insurers in India present a good way to get exposure to high-income households, and private life insurers also have stable growth. So they're sounding the bullish note on life insurance companies, and these stocks are doing quite well. In the mid-cap end of market, there are big movers. So Updata is the one which catches your attention, moving up on good volumes. You've got Edelweiss Financial, which is up another 6.5%. This week, it's seen an 18% rally. Shriram Properties, oil marketing companies like HPCL, BPCL continue to inch up. We will get into a break. We'll come back and continue to put the spotlight on individual stocks that are buzzing on the back of fresh brokerage commentary. Stay tuned.
discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
Welcome back. Let's talk about Tech Mahindra because that's down nearly 0.5% in trade. Now, CLSA has downgraded Tech Mahindra from an outperform to a hold rating. And remember, the Tech Mahindra was one of CLSA's top bets. It was their anti-consensus call and their top pick since January of 2024. But now CLSA has downgraded Tech Mahindra. One, because the stock has outperformed. So year to date, Tech Mahindra has given a return of 26%. It's outperformed the Nifty IT, which is up 18%, and the Nifty, which is up 14%. Also, CLSA's estimates are lower than consensus expectations. Now, the reason why CLSA has lower than consensus expectations in terms of earnings growth, they say, one, the global telecom companies' capex has largely remained unchanged in this calendar year. And historically, there is a very large correlation between the global telecom companies' capex and the telecom vertical revenue growth for the Indian IT companies. And this year, there hasn't been any change in the global telecom companies' capex plan. So therefore, the telecom verticals for the Indian IT companies are likely to give you a mid to high single-digit kind of returns. That's reason number one. And two, there is a possibility that competition is also picking up because peers like an Infosys, Wipro, they've all announced large deals in the telecom vertical. So keeping all these, fundamental factors in mind, and plus the fact that the stock has outperformed with a 26% return on a year-to-date basis, CLSA today has downgraded the stock. Their target price stands at 16.25, pretty close to where the stock currently is.
Okay, thanks a lot for that, Reema. That's on Tech Mahindra. But Varun Beverages has been gaining on the back of positive commentary from a BofA Securities report. Mangalam tells us more on that. Mangalam, over to you.
Good morning. So there is a note that has come in from BofA Securities on Varun Beverages. They see the current pullback in the stock price as an opportunity to buy. The pullback was shallow because, the recent high in the stock was a little over 1,720 odd rupees. From there, the stock saw a bit of a correction and today is doing extremely well. Why is that? Because BofA believes that the business fundamentals of the company are fairly strong. In fact, they actually see some upside coming in from two different things that the company is seeding. One, they have increased their distribution beyond carbonated drinks. So, new products like dairy beverages, energy and sports drinks are doing extremely well. The energy drink Sting is one of the biggest volume drivers over the last couple of years, and that's been, leading the turnaround for the company itself. So that's something that could give further upside. And add to that, geographical diversifications as well. New territories like South Africa and Congo can also be seen as an upside for the company. They had made an acquisition out there, so scaling up of that and increasing the share of Pepsi out there would be extremely crucial. And the third thing to watch out for would be their foray into the snacks business, which will increase the total addressable market for the company. Remember, beyond beverages, going into snacks is a big market for Pepsi itself. Over 50% of the PepsiCo revenue actually comes in from the snacks vertical. If that were to happen, then that would add another diversification opportunity in the stock, understandably higher by about 4%.
Thank you very much for that. Get into a break. We'll come back and talk about the market technicals with Mitesh Thakkar.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Welcome back to Trading Hour on CNBC TV18. Well, today everyone's talking about Mazgaon Dock. It's actually a stock that people have been tracking for a while now because it's fallen about 15% from its all-time highs. But the company actually, came out and allayed a lot of concerns about the slowdown in terms of orders, etc. So let me just quickly take you through what they said. They spoke about how the order book continues to be very strong at about 40,000 crores. That order book will be executed over the next 4 to 5 years. They expect additional 27,000 crores worth of submarine orders over the next few months. And they also spoke about how their balance sheet is intact. They are a cash surplus company and they have no working capital concerns. Let's not forget that despite the 15% fall from the top, the stock is still up 94% this year. So the big question that we're asking is, will the stock resume its buying after the management allayed a lot of the concerns on the company? Let's in fact listen to what the management had to say earlier on, key excerpts from our conversation with Sanjeev Singhal, who is the chairman and managing director of Mazgaon Dock Shipbuilders.
We have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the order, the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. There is an order for P75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazgaon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. We are out of 4 destroyers, we have already delivered 3, and we are scheduled to deliver the 4th one also this year. So this project would be closing. So any cushions which are kept with respect to liabilities that may arise, we are a cash surplus company. There are no working capital concerns, and there are no liabilities in the form of debts or any loans. So with respect to the investments also, there is a sizable accrual in the form of interest income. And as far as the projects are concerned, projects may reasonable margin would be something around 10 to 12%. And taking the repair verticals, the offshore projects, which we have now started in a significant manner, without assigning any numbers, I would say that anything about 10%, 12% would be a reasonably healthy margin.
Welcome back. There is some recovery in private sector financials. IndusInd Bank should come up for you on your screen. Now it's back in the green. And the other one is Axis Bank, now up 0.5% from the day's low. It's been a recovery of more than 1.25%. And even the Nifty Bank has trimmed some of its earlier losses, though it's still in the red. Mitesh is now back with us for a quick technical check on the markets. Mitesh, any thoughts on this Nifty Bank recovery and the individual stocks? And what would your top ideas be?
See, I'm still positive on the Bank Nifty. What I'm waiting for is to get past the 50,800 to 820 mark. And once that happens, you can be slightly more aggressive in buying. But I do have Chola Finance as a buy recommendation. Keep a stop below levels of 1372 here and look for targets of around 1420, 1425. And then Alchem is also on the buying side. Keep a stop at about 5720 for targets of 5950.
Okay, thanks a lot for that. Well, getting you an exclusive now, we learned from sources that tightening the noose around tax evasion, the Income Tax Department in its Central Action Plan for FY25 has asked all its officers across the country to keep a close vigil on IVF clinics and medical colleges, apart from the usual hotel and luxury retailers. Timsy joins in to get us the details. Timsy, over to you.
Tightening the noose around tax evasion, the Income Tax Department in its recent Central Action Plan for the current fiscal has asked all its field formations to keep a close vigil on IVF clinics and medical colleges, apart from the usual hotels and luxury retailers. Income Tax Department in its plan says, and I quote, Section 139A requires PAN for certain transactions, but there is no mechanism to ensure compliance. To address this, high-value expenditures should be verified using departmental data. Identifying and verifying potential circumvention sources such as hotels, luxury retailers, IVF clinics and medical colleges is crucial with this information. According to the taxman at the helm of the Central Board of Direct Taxes, there's an urgent need to address widespread circumvention of income reporting requirements for cash transactions over 2 lakh rupees. It is essential to identify high-risk sectors like hotels, luxury retailers and medical facilities. That's what this particular section says, and that's what the taxman has said. So let's see how soon taxman begins to keep a close vigil on IVF clinics and medical colleges and medical facilities, and what is the final outcome of this particular drive. Back to you.
Thank you very much for that. Get into a break. As we do that, we'll get you some views from the Motilal Oswal 20th Annual Global Investor Conference. Niket Shah, CIO at Motilal Oswal Mutual Fund, said he's cautious in the markets and has been very selective. He also shares his view on telecom, quick commerce, EVs and the IT sector.
This quarter, Nifty earnings growth has been about 4 to 5%, which is probably slowest in the last 16 quarters. Mid-cap earnings growth has been about 5 to 6%, again slowest in the last 16 quarters. And we have been slightly more cautious on the markets, being very, very selective. Our focus of this year is to do less mistakes, right? So when we started this year, we could clearly see, earnings growth kind of slowing down. And we want to ensure that we don't do, significant mistakes this year. If you don't do mistakes this year, I think you will end up in a very good outcome at the end of the year. So from a 25, 26 stock portfolio, we're now actually down to about 16, 17 stocks. We're trying to make the portfolio more and more sharper by the day to ensure that, there's no mistake. So that's broadly, I think, what we have been up to. IT hasn't done well in the last 3 years, right? I mean, some of our IT holdings within the mid-cap and the small-cap space have done extremely well. But overall, from an industry standpoint, I think it has gone through some challenges in the last 2 years. We believe post-US elections, some of those challenges are likely to go out as, the pipeline of the IT in terms of the funnel or the deal pipeline that most of the corporates have been talking about is very, very healthy. So that continues to remain healthy. I think most of the corporates or enterprise in US or Europe are waiting for some clarity on US elections to get over, and that the spending will, I think, in next year should come back in a meaningful fashion. Initial part of the year, we did highlight that telecom looks like the sector of the year. And the key thesis was that India has actually seen no major ARPU increases if you take a 10-year backtrack record, right? So our view was that every year from here on, India needs to take a tariff hike, because from the second half of the next year, most of these telcos have to start paying to government for the spectrum that they had bought 10 years back. And for me to pay and for some of these enterprises to go and pay to the government, you need earnings, right? And there is no way you can get earnings without a tariff hike. So I think we will see a tariff hike even next year and in the following year. So we might see a tariff hike every year-on-year basis, which essentially means a very strong growth for the sector. Food delivery becomes a cash cow over the longer term. The real excitement is quick commerce business. In our opinion, for the next 3 to 4 years, you should see at least 125 to 150% kind of a top line or a GMV growth for some of these companies, which is quite staggering, right? And this kind of model is only, at scale is likely to happen in India. Because of the way our supply chains are there, the way our auto penetration is there, and we all have, a budget that we run on a monthly basis. So we do monthly pantry filling on a weekly basis, right? So that I think is quite, I would say unique to what Indian styles are. And I think these kind of business models are just started, just scratching the surface. What is actually surprising to us is that the tier 2 markets, where in some of the quick commerce, the tier 2 markets unit economics are much better than tier 1 markets. The adoption of tier 2 markets for quick commerce is much faster than tier 1 markets. So that has actually been a bit of a surprise for us. And we believe the runways is likely to stay here for the next 4 to 5 years. So we just scratched the surface in our opinion. I think EV penetration has to move up in India, but I think both of them will coincide, whether it's ICE and EV both together. But within EV, I think we have very clear understanding that whether it's 4-wheeler, 2-wheeler, there is no major profit pool to be made, at least over the next 2 to 3 years.
The profit pool is actually in the three-wheeler LCV side because the vehicle tends to run for a longer duration of time in the same day, and hence it makes unit economic sense if you take a 5 to 7 year view for that vehicle. So, you know, the LCV market, the tractor market, and the three-wheeler market is where we continue to like within the EV space.
In a very constructive meeting with Prime Minister Netanyahu today, he confirmed to me that Israel accepts the bridging proposal, that he supports it. It's now incumbent on Hamas to do the same.
Welcome back. Well, just one update on the market. It is getting, I mean, it's been choppy, no two ways about that. So as you can see, there are some jagged edges on the screen. It's flat with a bit of consolidation, but now some of the indices like the Bank Nifty, etc., are starting to give up a little bit of their gains. So let's see which way it goes from here. There's a large trade on delivery at the moment. So just keep an eye out on that as well. A couple of stocks, though, continue to hit fresh 52-week highs. So just wanted to get that on board. Nykaa is at a fresh 52-week high today, 6.5% higher on that one. PC Jewelers at a fresh 52-week high. So there's plenty to look at this morning. There's something like Patanjali Foods that is at a fresh 52-week high. Just Dial, ICICI Pro, Voltas has been doing very well. And a couple of others like Glenmark Pharma as well. So despite the market consolidating, there's plenty of stock-specific action. But GET&D India is under pressure after the stock snapped its 3-day gaining streak. Vamakshi is joining in for more details. Vamakshi, over to you.
Well, yes, the stock is reeling under pressure today after GE Grid Alliance, BV and Grid Equipments, who are the promoters of the company, announced that they are in process of reviewing their shareholding structure. Now, keep in mind that GE Grid Alliance holds nearly 6.5% stake in GE T&D and Grid Equipments holds nearly 68.5% stake. The promoter group said that they are looking to simplify the holding structure. They will evaluate and assess their current shareholding in the company and evaluate the possibility of a minority stake sale as well. In fact, they also said that they have a strong intention to continue as the majority shareholder of the company. But that said, there are a couple of factors to look at as well. We will be watching out for number one, what is the percentage stake that they are looking to sell? There has to be some more clarity on that, which will come from the company as they finish this assessment. And secondly, we will also watch out for the interest level from investors, given that the stock has already rallied by almost 240% on a Y-to-date basis and is up nearly 380% in the last 1 year. Not just that, even the valuations are quite elevated as compared to the historical averages. So overall, we will have to be watching out for a couple of factors, but given the development that we have right now, the stock is reeling under pressure.
Thank you very much for that. The other one we're looking at is Cyient. Because earlier today, Cyient sold about 1.2 crore shares or 14.5% stake in a company called Cyient DLM. Earlier, Cyient DLM was a part of Cyient. It was into design-led manufacturing. Then the two companies, they delisted Cyient DLM and Cyient had about a 66% stake in Cyient DLM and they've brought it down by another 14.5%. Now, Cyient DLM is under pressure by 2.5% because of the large block that's taken place. But pull up Cyient stock price. Now, they're going to be getting in close to about $100 million because the total value of the transaction was about 860 crore. Now, it's positive for Cyient because, one, they're getting $100 million and that the company has said will be used for M&A and debt repayment. According to JP Morgan, the company's DET business, their main business, has about $47 million of debt and that can be partly repaid using the sale proceeds. The company has also said that they plan to invest in their semiconductor business. And according to JP Morgan, even auto is a space where the company could be looking at making some acquisitions. So JP Morgan has an overweight call on the stock, target price 2100. Kotak too is bullish on Cyient. The Cyient has been an underperformer. Its numbers have been a bit patchy, but Kotak too maintains a buy and their target price is 2050.
Okay, well, PNB Housing is also in focus on the back of a block deal. Abhishek joins in with more details on that. Abhishek, over to you.
Finance is up in trade today. Now, sources do tell us that General Atlantic Singapore Fund has sold stake in PNB Housing. So, a large block took place today, about 1.39 crore shares, which is more than 5% of the equity in PNB Housing Finance. So, floor price was set at 775 per share, which was at a discount of 4.5% to yesterday's closing price. However, the trade took place at 803 per share, which is 3.5% above the floor price. This is a clean out trade because more than 5% equity was what General Atlantic was holding in PNB Housing Finance, and they have sold their entire stake. It's a clean out trade.
Okay, we've snapped that connection with, Abhishek, but PNB Housing Finance is up close to about 8.5% because, as he pointed out, for General Atlantic, it's a clean out trade. So that supply overhang is out of the way and the stock is surging close to about 8.5%. It started open trade about 850 on the flattish side, but since then, it's added on more than about 25 rupees in today's trade. It's been a bit of a drag. It's not been a big outperformer. Year to date, it's up 12.5%, and most of the gains of that year-to-date move have come through today. Outside of that, just a quick check on the markets. Just Dial is also a big mover. So these internet-related stocks continue to gather steam. So Just Dial has hit a fresh high, 8.5% up on that, and this stock is up close to about 80%. In the last 1 year and 70% since the beginning of the year. And Nelco, this is a company which provides telecom infrastructure related services. Nelco is up 20%, locked in an upper circuit, and on the way down, Unicommerce gives up a little bit of gains after the blockbuster rally over the last 2 days. Still up quite a bit, 231 compares with an issue price of 108, but Unicommerce is seeing some profit booking. Get into a break, we'll come back with more.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president. And her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women fighting for reproductive health care are saying, keep going. Together, we put a
Welcome back. Well, for now, the market is very, very quiet. There's not too much to update actually on the index itself, just that Mazgaon dock is building up in terms of both volume as well as price action. And a couple of other names, some of these jeweler companies, PC jewelers, etc. are doing pretty well at the moment. But former RBI Governor Raghuram Rajan has said that the US Fed Chair Jerome Powell should display masterful uncertainty at his Jackson Hole speech later this week. Speaking to CNBC TV18, Rajan also said that the US Fed Chair should not guide the markets on a rate cut. He also warned that China's slowdown is serious and structural. Let's listen in.
I suspect that in his Jackson Hole speech, Chairman Powell will, try not to lock himself into a course of action in September. The prediction is there will be a cut, but the question is how big a cut, and a lot of that depends on the, jobs report for the month of August. To paraphrase Dr. Reddy, masterful uncertainty is what I'd leave it at. I wouldn't try and guide the market more than I have to. The Chinese slowdown is serious. It's a structural slowdown because their basic growth supporters, the real estate sector is in deep trouble and still hasn't found a bottom. So there will be price falls are significant. Since 2021, housing starts are down 65%. So this is an economy which depended a lot on construction. That has been taken out of the equation. I would not focus too much on what those growth numbers are. It's important they look healthy, but I would look at the quality of that growth, and that is why the jobs issue becomes really important. We've had a very capital-intensive growth in our manufacturing sector. If you look at the segments of the IIP that are doing particularly well, they're typically the more capital-intensive segments, and the labor-intensive segments are not. We are getting the China plus one flows. Why is it that they're not creating many more textile jobs, many more leather jobs?
Well, with that, it's a wrap on Trading Hour from the entire team. Thank you for watching. We leave the Nifty flat, but it's above that 24,700 mark. Mid-caps outperform a bit and banks underperform. Thank you for watching this show.
In the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. Because, my friends, when a barrier falls for one of us, it falls. It falls and clears the way for all of us.
To be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will come together and declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us. Let us fight for the ideals we hold dear, and let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Again, what her appearance is just a preview of coming attractions of Thursday night. You can feel the electricity. It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created because it's all about the future, and she embodies it.
Oh, I think it's great. You know, people really get excited when something happens they didn't expect, and it makes them happy. So we're a happy group.
Range-bound day of trade with the Nifty moving in a 100-point band. Pharma stocks gain while banks come under pressure. Broader markets outperformed with the small cap index rallying close to 1%.
Shipbuilding stocks see recovery after yesterday's fall in a CNBC TV18 exclusive. Mazgon Docks management tells CNBC TV18 the company's order book is around 40,000 crores with another 27,000 crores of potential submarine orders likely to be awarded over the next few months. The company adds that Q1 margins of 27% may not be sustainable, with full-year margins likely to be around 12%.
A merger of all cement businesses under one listed entity, Adani Cement, would be an ideal way forward. That's the word coming in from Ambuja Cement CFO Vinod Baheti in an exclusive conversation with CNBC TV18. The management says pricing is expected to pick up post-September, and Ambuja will look to increase its market share from 14 to 20% as it looks at more acquisitions at the right price.
PNB Housing Finance gains close to 8% after nearly 5% of the company's equity changes hands in a block trade. Saya DLM sees 14.5% of its equity traded in a large trade worth around 883 crores. Parent company Cyient is believed to have sold a part of its stake in the deal.
Tax efficiency determines which financial instruments are most attractive. Dinesh Khara, SBI chairman, tells CNBC TV18 in his exclusive exit interview. His parting advice: bankers will always have to balance margins, asset quality and growth.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, it is a quiet day in today's trading session. It's largely range bound, you'd have to say, but the bank Nifty is under pressure, so it's been flitting between red and green this entire week, to be honest. Separately, we have pharmaceuticals and healthcare stocks which are bucking the trend today. Dr. Reddy's, for example, is at a fresh 52-week high, so that stock is doing well. Glenmark is at the best levels that we've seen in a year, and stocks with a good amount of turnover because of news and because of a buzz around it is the likes of Mazgon Docs, Angel One, Ola Electric. So all of these stocks continue to garner attention. Separately, it's a quiet day for the indices. Hi, Mangalam.
Hi, Ekta. Quiet day for the indices, but a couple of sectors doing extremely well. The consumption sector really stands out today, both staples and discretionary. So, case in point, something like Titan, it's moved to the high point of trade. Remember, gold prices are at record high, telling you about the demand, underlying demand as well. And with the duty being cut, Titan as a stock has rallied a goodish bit from the lows as well. Off the 52-week low, the Titan stock is up nearly 17%, and that is the rally that started on the budget day itself. We also have HUL, which has done extremely well. Alongside that, we have Page Industries and Bata, which is picking up pace, along with Jubilant Foodworks. So consumption, consumer, discretionary, all these are picking pace ahead of the festive season and the more important third quarter as well. But let's talk about this space in further detail. We have Raymond, the first management on the show, joining in from, to discuss their post-first quarter earnings as well as discuss the demand and business outlook as well. Amit Agarwal joins us from the sidelines of the Motilal Oswal Global Conference, the investor conference that is underway. Thanks a lot, Amit, for joining in. Always a pleasure speaking with you. There are two ways to look at Raymond now that we're looking at it. One is obviously the textile business. The second part is the real estate business. Increasingly, the real estate getting a lot more dominant when it comes to headlines. On both those fronts, what are your targets for this year and the next, if you could give us a sense of aspiration?
Yeah, thank you for having me on your show. Obviously, if you see that we have announced the various corporate actions which enabled the demerger of the lifestyle business, which is gotten probably listed in the next 2 to 3 weeks. And we will have a pure play net debt free lifestyle business, which is again very, very attractive. And very clearly, you see the first quarter is always a weaker quarter, seasonally weak. And this time more so because of the weddings, no number of weddings, as well as you had very significant heat and the election impact. But we, from our dealer channel network, we are hearing that as soon as the Dussehra, Diwali, the festive season onset, post that, a very good number of wedding dates, which will enable the business to drive on a very stronger growth. And similar is a story when we are hearing even in the export market. If you look at it, we are also a big garment exporter. We are seeing good opportunity as the recent challenges faced in the Bangladesh market. We have got some customers coming on our way and saying that we want to shift some of the Bangladesh productions to you guys in India. And I think these are both very well and firing well. As far as the real estate is concerned, I'm sure you would have seen that we have already done exceedingly well in the Thane Land Bank, and we continue to get new projects in the JDS side and outside of Thane and Mumbai, which is also progressing very well. We are very good in terms of the response from the customers, as we have sold more than 50-55% of the inventory which we launched in the Bandra, which is outside of Thane, in the first 45 to 50 days of the launch. So that is again very interesting. And the third piece of the business, which is our engineering business, which is in the auto components as well as aerospace defense, is again doing extremely well, as we see the aerospace defense business is continuing to grow at a minimum of 20-25% a year-on-year basis. So overall, as we have already told, that all our businesses across the group, we are a net debt free, poised for a free good growth, considering that businesses have a free cash flow.
Okay, all right. Amit, welcome to the show. So important update coming in there where you are going to relist your lifestyle business in the next 2 to 3 weeks. So that is something that we can expect from your company. Just wanted, some more details with regards to, yeah, is my voice reaching you?
Mr. Agarwal,
Amit, is my voice reaching you? Okay, we'll just reconnect Raymond and the management from the sidelines of the Motilal conference. But important updates which have come in from them where they are relisting their lifestyle business in the next 2 to 3 odd weeks. They are seeing some amount of traction coming in from Bangladesh. So maybe the textile business could probably benefit for them in terms of, the disruptions which have taken place in Bangladesh. So customers are probably inquiring a little more. In fact, we do have Amit back with us. Amit, if you could just give us an update with regards to this incremental business that you're seeing from Bangladesh at this point in time. How much have you seen in terms of business coming through? Is it just inquiries at this point in time? If so, how much has it risen? How much do you think it'll probably turn into when it comes to tangible business, and by when?
So look, the Bangladesh was exporting roughly $50 billion worth of garments, and in the sector which we operate, it was more in the range of $8 to $10 billion. And we were supplying the fabrics which were getting garmented, made the apparels and sent exported out. So I think the first bit is that what we were exporting, the fabrics which were getting converted into garments, that is the first piece which we expect to come. But at this stage, any garmenting facility would not happen from today to tomorrow. It is a process because they want to go through this whole process, how the shift can be made, because there is always a WIP with these guys. So over the next 6 to 8 months, we would see. But I think very clearly we are seeing an opportunity that from our 1100 odd crore of garmenting business, somewhere in the range of 7 to 10% of that business, 80 to 100 crore can be shifted from a garment export out of Bangladesh, can come easily to us.
All right. The other part on the real estate business itself, you said that 50 to 55% of your Thane inventory has been sold. Could you give us a sense of what is the current unsold inventory in terms of value that you're sitting on? By when do you realize that? And what are the other projects in the pipeline?
Yeah, so if you look at it, our Thane, we have a land bank of 100 acres. And in that 100 acres, 40 acres is under construction as we speak, which is approximately 9,000 crores. And of which, as I said, around 4,500-5,000 crore worth of inventory we have sold, and balance 4,000 crore of inventory will be sold over the next 3 years. But the remaining 60 acre would deliver another 7 million square feet, which is almost 16 to 18,000 crores. So overall, we believe that the full potential of 25-27,000 crore of Thane land would be realized over 7-8 years. However, since we have signed 5 JDA projects, which is outside of Thane, of around 5 to 6,000 crores, which is also in the process, one JDA project in Bandra we have already launched, and over the next 12 months, we would be launching another 2 to 3 JDA projects. So I think broadly you can consider our real estate business in the next 3 to 4 years would have easily a pre-sales booking of almost 4,000 odd crores, roughly 50% from Thane and 50% from non-Thane. And that should be able to drive the business thereafter 15 to 20% year after year in that kind of a range.
Okay, all right. You also mentioned that your aerospace, segment is seeing around a 20 to 25% growth, the aerospace and defense segment. You're also demerging both of these segments. I understand the auto and the aerospace segment. Can you tell us what is the order book looking like specifically for defense and aerospace, and what can we expect going forward in terms of execution? You mentioned 20 to 25% growth. Is that sustainable through not only FY25 but FY26?
Yeah, absolutely. So if I look at it, the aerospace defense, the 24 was growing in the range of 270 odd crore business. In the next 3 years, we are very confident that we will double this business. So there's a great journey for Indian aerospace defense, and we are into the engine critical components. So therefore, once you are in with a customer, then you are in for a very long period of time, unless until you mess up with the quality, which we are very careful at. So I think that is a unique thing which we have got, that we are into the engine critical components, and for the two largest in sort of aircrafts which we have, the Boeings as well as the Airbus. So that's a big advantage, and the overall engineering sector, which is Make in India, is doing extremely well. And our auto components business, we supply almost 65-70% export markets and to all the top 15 OEMs globally. So that is also picking up very, very fast. We are investing also money in that area in order to grow our capacities. So overall, our business of engineering is 1,900 crores, which can easily become double itself in the next 5 years.
All right, and final question before we let you go, Amit. The balance sheet saw a fair amount of improvement post the stake sale of the consumer business. As you are investing in newer businesses, if you could give us a sense of where debt would peak out and what are the further deleveraging plans that you have, if at all?
Yeah, sure. No, absolutely. We are today as a group absolutely net debt free. We sit on the cash, and all our businesses are significant cash flow generating business. For example, Lifestyle last year delivered an EBITDA of 1,100 crores and it has no net debt. Even if you see the real estate, on the real estate side also we are sitting with 450 crores of net cash. And because we are in a JDA-led model, we are not buying land, so there is no question of taking debt in terms of, it is a project-specific construction debt which is required for more than 2.5 years, but we are very careful in leverage so that net cash remains positive. Similarly, on the engineering side also, we are putting the capex from the free cash flow generations of that business. So overall, as a group, we are continuing to be a net cash positive, and we are not anticipating any significant amount of debt to be there on the group. As far as Lifestyle business is concerned, which is going to be listed in a short order, I think I want to give you the perspective that in terms of the wedding play, which we are going to see over the next 2 months after, it's a very large business. If I look at it based on the recent reports, that the Indian menswear market in wedding is roughly in the range of 75-80,000 crores. And because there won't be a wedding in this country where a Raymond suit does not get stitched, we have also launched the ethnics. Overall, we have a market share from a retail value of approximately 5% in that segment in the wedding market, which is very important, and we continue to grow because of our distribution reach and the presence across the country. And that will be a very keystone, and being a pure play business will help us to further boost our penetration into the wedding market.
Okay, all right, fair enough. Well, very bullish outlook coming in there, Mr. Amit Agrawal. Thank you very much for joining in and speaking with us. So that's the outlook coming in from Raymond. They're expecting growth coming through in their lifestyle business, which is going to be listed separately in the next 2 to 3 weeks. And besides that, they're quite bullish in terms of the real estate space as well as the defense and aerospace segment. Well, on that note, we need to take a short break, but a lot more on the markets, lots of stocks lined up. Stay tuned.
What kind of thing we accumulated at sub 100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today, but significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in trend has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts.
Welcome back. Well, for the markets, it's holding up okay. We have stocks such as Nykaa, which are buzzing today, so up around 10.5% currently for Nykaa. Just want to point out that Aurobindo Pharma is in focus because the warning letter has been uploaded, which was issued to UGR Unit 3 on the US FDA website. So just a couple of important details, which was uploaded last evening. So it just points out to the same issues which were pretty much, pointed out during those in the Form 483, which was issued post the inspection in Jan-Feb earlier this year. So that particular stock is under pressure on account of details of this warning letter now becoming public. But the other stock which is in focus is Mazagon Docs, which is shrugged off turbulence today. The stock, in fact, has snapped a 3-day losing streak after the brokerage firm ICICI Securities issued a note giving it a sell call. In fact, earlier today, we did catch up with Sanjeev Singhal, who is the chairman and MD of the company. Listen in to some key important points.
We have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the order, the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. It is an order for P75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazagon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. We are out of 4 destroyers, we have already delivered 3, and we are scheduled to deliver the 4th one also this year. So this project would be closing. So any cushions which are kept with respect liabilities that may arise. We are a cash surplus company. There are no working capital concerns, and there are no liabilities in the form of debts or any loans. So, with respect to the investments, also there is a sizable accrual in the form of interest income. And as far as the projects are concerned, projects may reasonable margin would be something around 10 to 12%. And taking the repair verticals, the offshore projects, which we have now started in a significant manner, without assigning any numbers, I would say that anything about 10%, 12% would be a reasonably healthy margin.
All right, so interesting move out there on Mazagon, dock up around 5% after a big cut that we saw yesterday.
Yes, I just, want to point out that I'm going through the warning letter, and I just want to point out one particular thing which is spoken about by the US FDA, and maybe we can pull up the Aurobindo stock again, where the US FDA has said that quality system does not adequately ensure accuracy and integrity of data to support the safety, effectiveness and quality of the drugs. So I think that's probably what is breaking the camel's back at this point in time in terms of the stock, because if you do mention data integrity in so many words within a US FDA warning letter, then the street is going to assume that the remediation is probably kicked down, kicked down further for Aurobindo, which was confident of a remediation to probably take place in the near term.
All right, interesting. That explains why the stock in an otherwise decent market for the pharmaceutical pack is struggling at the lows of today's trading session so far. Because if you look at all the other pharmaceutical stocks, case in point, something like a Strides Pharma from the broader markets up at the high point of trade. We're seeing some traction in names like Ipca Labs as well as Alembic Pharma as well, both of them sitting with gains of about 2.5% to 3% as well. Take a short break, come back, focus on the markets, get you some trading ideas with Pritesh Mehta of Yes Securities on the other side.
Dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we will number 2 in terms of diabetes. And diabetes is a bigger problem than obesity alone, because that...
Welcome back. You're watching us here on Halftime Report. The market is consolidating right now. Even if you look at the Nifty, the Sensex, as well as the the broader markets, the Nifty is just about 33 points in the green right now. The Nifty Bank is the one which is pressurizing it a little bit, and the broader market, the health of the broader market's actually been in very good shape over the last couple of trading sessions. The market breadth being much in favor of advances than the number of stocks which are declining. Why is the Nifty Bank in focus? Just look at the 50,754 mark, which is the 20-day moving average on the Nifty Bank. It crossed that, closed above that in yesterday's session. But come today, it fell once again below that 20-day moving average itself. And it's an important index to track in the second half of trade, largely because it's the weekly options expiry on the Nifty Bank as well. And to that extent, 50,550 is where the Nifty Bank is at right now. 50,600 call, fairly active with a premium of almost 100 rupees, telling you 50,700 thereabouts. As we move towards the 20-day moving average, there could be a lot of resistance. At the lower level, though, there is support around 50,400. Why do I say that? Because the 50,500 put has seen a writing of almost 61 lakh shares in open interest with about 100 rupees available for premium. What about the Nifty? Because it's consolidating, people are tempted to write straddles, which is both a call and a put together. What is the straddle all about? It's 24,700, which is being used as a fulcrum for expiry tomorrow. So 50 rupees available on 24,700 put. The 24,700 call comes up for you as well. That has around 85 rupees available. So together, it's about 150 rupees between the 24,700 call and put, telling you that at lower levels, there would be support close to around 24,550, and at the higher level, some sort of resistance above 24,850 itself. A lot of long positions added in a couple of names. Ipca Labs, we spoke about that. Fair amount of open interest built up on the long side. Muthoot Finance is the other one. Remember, gold prices are at near record high, so maybe gold financiers also being bid up in trade today.
Okay, all right. Thanks very much for that, Mangalam. Well, we do have Pritesh Mehta joining in to tell us what he's tracking today. Pritesh, well, it's turning out to be a day where we are seeing consolidation, but, the Bank Nifty is a bit nervous today, and it's been off and on this entire week. So how would you approach the Bank Nifty in specific, and a couple of these stocks which are under pressure as well within the banking space?
So see, we tend to be fixated with benchmark index or even Bank Nifty, but real action is taking place in broader markets. With mid-cap and small-cap 100 indices whiskers away from its previous peak. I think this is the space which is buzzing right now, and this should be a focus of attention. As far as bank is concerned, a couple of days back, we did a very extensive studies. In fact, the ratio of Bank Nifty versus the leading sectors of the last couple of months, that is auto, IT, realty, the ratio studies tells us that Bank Nifty has been a big laggard compared to these outperformers, but now it is reversing. So the way I look at it, Bank Nifty is now trying to make a comeback. Yes, it is down today's trading session, but I think it's a matter of time. Bank Nifty goes towards 50 to 500, and in fact more higher also. So I think Bank Nifty is the one which we need to focus on, at least if you have a longer term perspective. Something like HDFC Bank, Bank of Baroda, they are the one which is throwing buying opportunities. When I talk about these stocks, I'm expecting 20% upside each in both these counters.
Okay, and what about stocks in specific today?
See, since it's all about mid caps, we need to talk about something like BBTC, Bombay Burma. These kind of stock we don't talk often about, but the way I look at the chart formation, we are witnessing series of bullish anchor column and then follow through moves coming in. So I would say buy BBTC for a target of 3,000 and stop loss would be 2350 levels. Second stock that has caught our attention is Persistent Systems. Again, this stock is outperforming our mid-cap tier customers index, mid-cap tier IT index. And the way I look into it, a bullish trade to break out a second place, a target of we can see target of 6,000. Stop loss would be around 4600.
All right. Pritesh, thank you so much for joining in and giving us your views on individual stocks as well as the index. Take a short break, come back. We'll connect with Rajiv Juneja, who's Vice Chairman and MD of Mankind Pharma. He joins in to discuss their business outlook and more importantly, the BSV deal.
Affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to
Welcome back. Well, from the sidelines of the Motilal Oswal 20th Annual Global Investor Conference, I caught up with Rajiv Juneja, who's the Vice Chairman and MD of Mankind Pharma, and began by asking him about the recent BSV deal that they've struck and how exactly is it going to be funded. Listen in.
This work is in progress.
Things will happen by the end of November, hopefully, once we sign this, the complete deal. But hopefully, 4,000 crore rupees would come from internal accrual, and rest 70-30. And also, we have some non-core business that we would be putting on the block. So some kind of money would come from that business as well.
Okay. Can you just tell us?
So let's see what happens going forward. That's a rough idea.
All right, that's a rough idea.
Basically, is this only that?
Sure, but what are these non-core businesses? Can you just throw some light in terms of what are we talking about? A segment of the company? Are we talking about certain products?
No. Not the products. We have some property by the name of Western. This basically initially was a training center, and later on it was given to this Western group of hotels, and they were running it. This particular property will come on the block, and we will offload that.
Okay, but is it under
the company? Every product in mankind, every company in mankind, every product in mankind is in core business. Hospitality side, we have some one hotel, two hotels, one big hotel, one small hotel that would be sold off.
Where are they located, and how much do you expect to garner?
These are under the mankind's properties. Okay. One in Rishikesh, one is in some place in Gurgaon.
Okay, so you'd probably look to sell both of them, and how much would you garner?
Hopefully, 600-700 crore rupees from these two properties, and that really shows our kind of a confidence in our new acquired company.
Okay, and by when?
Let's see when it happens, when we get the right value. We are not in a hurry. By the end of November, let's hope that this deal gets finalized, and next couple of more months till we get the right value for these properties. We are not in a hurry to really offload these properties.
Okay. All right. So, what component will then reduce in terms of what you would be taking on? Would you be taking on less debt, or would it be less equity?
We said in the starting only that, say for example, out of say approximately this is a deal of 14,000 crore rupees. Out of that, 4,000 would go from the company side, because we would be having this much cash in our books. 7,000 approximately again would come from the debt side, and 3,000 from QIP. I don't know this will become 2,500 QIP or 3,000. The time will tell only.
Okay. When can we expect this QIP to take place by?
Once we close this deal, and let's see in December, January, hopefully.
Okay.
Because
all right.
Nothing can be done before we sign the final agreement.
Your India prescription sales in this quarter were up around close to 10%. It outperformed the India pharma market again. What are you guiding for the entire year?
The guidance has been given. It's around 15% as a whole. Never forget that 37% sales come from the chronic side. We are still a acute heavy company. In the last couple of years, our chronic share has increased from 28% in 2018 to 37% now. So we are continuously increasing that. Plus, there's always a seasonality which plays a role. Rain is also, sometimes it comes in early, sometimes late. Let's see what happens in future, but we are very, very confident that whatever guidance has been given would be done. We always say that we'll be doing 1.3 to 1.4 times to IPM, and that we still stand.
So this 37% share that you have of sales coming in from chronic, once the BSV acquisition closes, how much would you think that the chronic percentage would rise to, and what is your target as well?
See, BSV should be seen not from a pharma lenses. It's a super specialty kind of a business. So it's in critical care, it is in fertility side. These are some of the products. BSV offers some of the products which are very unique in nature. Anti-D, which is their hero product. The patent is there till December 28. Thymogam, it's only one brand. Their snake venom, snake bite products, they're also quite unique. So these, you cannot call them only chronic, but these are very unique kind of a portfolio, which should be not seen from the lenses of pharma side.
Okay, all right. Well,
high entry barrier, super specialty business.
Correct. The consumer healthcare segment, your run rate improved last quarter. It was up 32% on a Q-on-Q basis, but it's still been sluggish year on year. What are we expecting going forward in terms of growth rate there?
This consumer business is closest to our heart because it has given a lot of name to mankind. We said many quarters back, 2-3 quarters back, that we'll hive off this business, make it an independent entity. We have done that. And during this process, we have cleaned up number of things. Earlier, it was being run pharma and consumer mixed way. I'll give you some example. Earlier, it was being run on 6,500 distributors. And now it is running like just a consumer division with only 1,900 distributors. We hope that we'll be getting double-digit growth and high-teen profits from this company, this particular division.
Your export segment did very well last quarter. It was up 62% year on year, but it's still a small part of your overall business. How much importance are you giving your export segment going forward, and will this kind of high growth continue in the coming quarters as well?
We always said that in export side, we will just give focus on certain things. We'll export difficult to make products, complex products where entry barriers are there. Vanilla, tablet, capsule syrups will not be exported by mankind. We hope that going forward we'll have a double-digit growth. Earlier, because the base was smaller, so the growth was quite big. But again, we are a India-focused company, domestic company. The focus would always remain towards India side. Only in the case of some opportunities where we can command profits and respect for a longer period, we'll go for export side.
Okay. All right. And, just wanted your view on the margins. On BSV, you all have indicated that eventually you all will probably hit margins of around 30% versus that 28% which was adjusted. By when do you see that taking place?
See, this year will be gone by the time we'll take BSV, so we can talk about the next year. We hope next year, if right now the margins are 28%, if we take off one-offs, going forward we hope that 100 to 200 basis points increment would be there each year, next year onwards on BSV margins.
Okay, and as
so 28-30% next year we can expect.
Okay, and as a consolidated entity for Mankind, you're expecting 25 to 26% in FY25.
Correct.
Own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself. as India's longest-running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Welcome back. Some of the stocks are actually taking your breath away. They belong to the non-ferrous metal space. So Hindalco is among the top Nifty gainers right now, has moved to the high point of trade. Again, you have some other non-ferrous names like Nalco, which has moved to the high point. Again, Nalco entered the F&O band. Despite that, it's continuously moving higher. And Vedanta, just look at Vedanta. Through the intraday chart that you see, most of today, it was absolutely flat. And thereafter, just the last 15 minutes or so, it's a big up move that we've seen on Vedanta itself. Then the consumer discretionary names continue to do well. Jubilant Foodworks has moved to the high point of trade. Restaurant Brands Asia, the one that operates Burger King restaurants across the country, has also seen a spike of nearly 6 to 7%. And Nykaa, a stock that Ekta pointed out earlier, has now extended its gain beyond that 10% mark to about 12%. So just keep an eye out on all these stocks. Even as the frontline indices are consolidating, the broader markets are abuzz. Take a short break, come back, focus on the commodity space. Manisha Gupta, as always, joins in.
Joining us on the show now is Sabyasachi Ray. He's Executive Director at Gem and Jewelry Export Promotion Council. Mr. Ray, hi, thank you so much for joining us. And let's start with the good news first. And the recently gone IIJS Premier 2024 was a record success. We've seen very strong numbers. What is it that you have to share with us in sense of numbers on that one?
See, Manisha, as you have followed the show for the last few years, you have seen the enthusiasm for this show is something which takes it apart from all other events what happens in the sector. So this year also we have seen huge enthusiasm. In fact, the enthusiasm was helped by the recent announcement of our finance minister in the union budget, where the import duty on gold was decreased to 6%, and that was a huge enthusiasm, because what we understand at consumer level there was a good demand, and based on that in the B2B level also there was good demand. But before this announcement also, we have seen the enthusiasm for IIJS for participants. This year we have more than 2,100 participants, and it was spaced down in 3,600 booths. In fact, the requirement was 5,000 booths, but it went up or we could not give the space after taking both the venues for NESCO and Jio. I think that we are maybe the only show now in Bombay which happens in both the venues. The total area coverage is more than 1 million square feet, which is one of the largest maybe in India also. And we are now the second largest B2B show in the world. And if it continues like this, we are very hopeful by the next 1 or 2 years will be the largest. Like every sector in India, we are growing at a very robust pace. And this year we have seen around 50,000 visitors who has come from more than 800 cities. And also we have seen visitors who have come from more than 60 countries. 67 countries to be precise, and 800 cities in India who has come to visit this show and do their business into this show. So overall also we have seen a large number of MSMEs also. The number of MSMEs has gone up by more than 20%. So that in itself also has helped the show to grow to this amount. But also the environment of the show in terms of logistics, in terms of the venue movement between the shows, everything has shown a huge amount of growth. So that way we are hopeful, because
this is ahead of the festival season, so it absolutely does mark a very strong one, especially for the domestic markets. But let's talk about the international markets now, and those numbers have not been very supportive. For the month of July as well, the latest data that has come in from you shows that all jewelry categories, almost all, have seen a decline. Even cut and polished diamond numbers have been on the weaker side. What is it that continues to bother the industry, as we can see via the numbers, and when do you see some improvement coming in for these?
See, Manisha, one of the things, as you know, that what we are facing right now is in diamonds, which contributes more than 50% of the total portfolio of Indian exports, is facing some rough weather. As we have already told, that the main thing what we are facing is the Chinese demand. What we understand is that the demand of diamonds in China, which contributes to around some 25% of the total world demand of diamond jewelry, is not coming back the way we had wanted. And also what has happened, in the US, of course, what we have understood based on what they faced initially in terms of, their some sort of slowdown and etc. what they initially faced, because of that a lot of inventory has piled up in US. I think this will take a bit of a time to move out. And what we can see is that at least this year till March we'll face this type of headwinds. And the main problem what in diamond is happening is the slowdown in demand into the consumer market. And that slowdown in demand, as a council and as all the other components in the world, the miners and all the people, also the retailers, all of us, what we are trying is to, see that the demand gets revived. But this is for every other commodity, how it faces, this cycle. Of course, we have faced this kind of thing in 2008 and etc. And we are very hopeful that by the end of, let's say, this year or maybe by 2025, March, April onwards, we can see an uptick in demand, because we have lined up a lot of activities along with different world bodies, and we are up into it. And in fact, in terms of looking at how the things will be managed to uptick in demand. If you're talking about jewelry, of course, the last. Yes.
Yeah, I just wanted to, there's a shortage of time, but I do wanted to understand that there also is, because of all of this, we've also seen decline in prices of diamond. Is that yet another thing that is hurting the industry?
See, Manisha, one of the things what we have again analyzed with the analyst, one of the analysts has already given a presentation during our exhibition. We have not seen the decrease in the prices of diamonds. You know, one of the things we need to understand is that the price has its uptick and, but the average prices of diamond throughout the last few years has not gone down. So this is one of the issues what we are all hearing everywhere, that the diamond. But if you have understood that just after COVID, the price of diamonds have gone up highly, there may be some price correction from that level. So post-COVID, you have also reported, if you can look into your previous report, the prices have gone up by more than 20-30%. There is maybe some correction, but average over the years, the price of diamonds have not gone down. That is one big notion, because in the short term, what do you understand, everywhere it gets reported and it gets, of course, a lot of traction.
It does. Mr. Ray, thank you so much for joining us and answering all of those questions there. So, of course, going forward with the festival season here and the season in the international markets as well, the numbers are anticipated to be on the stronger side. But with that, that's all the time that we have on the show. Thank you for watching. Business Lunch will take all the action ahead.
In a very constructive meeting with Prime Minister Netanyahu today, he confirmed to me that Israel accepts the bridging proposal, that he supports it. It's now incumbent on Hamas to do the same.
Range-bound day of trade with Nifty moving in a 100-point band. Banks, pharma stocks gain while banks come under pressure, and the broader markets outperform with the small cap index rallying close to 1%.
Shipbuilding stocks see recovery after yesterday's fall. In a CNBC TV18 exclusive, Mazagon Dock's management tells the channel that the company's order book is at 40,000 crore rupees, with another 27,000 crore worth of potential submarine orders likely to be awarded over the next few months. The company also added that the first quarter margins of 27% may not be sustainable, with full year margins likely to be around 12%.
A merger of all cement businesses under one listed entity, Adani Cement, would be an ideal way forward. That's the word from Ambuja Cement CFO Vinod Baheti. In an exclusive conversation with CNBC TV18, the management says that pricing is expected to pick up post-September, and Ambuja will look to increase its market share from 14 to 20% as it looks at more acquisitions at the right price.
PNB Housing Finance gains over 8% after nearly 5% of the company's equity changed hands in a block deal. Signed DLM saw 14.5% of its equity trade in a large trade worth around 880 crore. Parent company Cyient is believed to have sold a part of its stake in the deal.
Tax efficiency determines which financial instruments are most attractive. Dinesh Khara, the SBI chairman, tells CNBC TV18 in his exclusive exit interview. His parting advice: bankers will always have to balance margins, asset quality, and growth. Hello and welcome. You tuned into Business Lunch on this Wednesday afternoon. It's, as always, Nisha and Hormaz on the show. So, Hormaz, today a range-bound trading session. Midweek only markets have been losing steam, it looks like, but not for the overall market. Let's take stock of the markets at lunch hour right now. Sluggishness as well as a slight bit of volatility in a very tight band when we talk about Sensex as well as Nifty. But, Hormaz, the real action is in the broader market. The small cap index as well as the mid cap index, they both are quite a bit outperforming the key indices. Let's take stock of that. Nifty 50 at 24,722 and absolutely flat at this particular moment. The only consolation is that it has a green bias, while Sensex on the downward tick in the red zone, and Bank Nifty is the one underperforming by a large margin and down 0.65% at this particular moment. Mid-cap index, that is gaining about 0.24% at the moment, and small-cap index is also doing well. And that's particularly the reason why, despite the key indices and some of the blue-chip stocks being down and out, and especially the banking stocks as well as the blue-chip companies from the banking as well as the heavyweights on the index down, but advance decline ratio is still tilted in favor of the advances because of the broader market participation. So there is some strength in the broader market that is reflecting on the screen. And on my screen at the moment, Divi's Labs, Hindalco, Titan, and some of the life insurance companies are the ones which are gaining in trade, while Ultratech Cement, Tata Steel, HDFC Bank, ICICI Bank are one of the, or few of the key draggers on Nifty 50, Hormaz.
There's been a theme all through this week, right? We've been moving in tandem with the global cues. If the global cues have been positive, we've moved high. We continued to grind higher yesterday, even though the last 2 days were also range bound. But then the Nifty has been in this now 24,650, 24,750 range ever since the start of the week after Friday's rally. The global cues were subdued, and hence we're seeing a little bit of a sluggish move in today's session. Of course, remember, today is the Nifty Bank, the weekly expiry today. So the last few minutes or the last hour of trade will be very crucial when it comes to the Nifty Bank and the banking stocks, and that might have an implication on the Nifty as well. The certain pockets that are doing well, as Nisha just mentioned, the action is in the broader markets. Metal stocks are doing well for themselves. On the flip side, the Nifty Realty Index is the top sectoral loser, now down over 1.5%. And the FMCG index, the pharma stocks are also doing well, barring Aurobindo, of course, which is an underperformer in today's session. CNBC TV18 accessed the warning letter that Eugia Pharma just received a few days ago. At the lowest point of the day is Aurobindo. But some recovery seen in shipbuilding names. Mazagon Dock, Cochin Shipyard, Garden Reach, all of them have seen some bit of recovery after the sell-off that we have seen over the last 3 days. Mascot now up 5.5% at the highest point of the day. We spoke to the management earlier in the day. Cochin Shipyard is also up 3.5%, and Garden Reach also seeing some bit of recovery. And it is Mascot that we would want to put the focus on, because we spoke to the management earlier in the day. Chairman and MD Sanjeev Singhal spoke to us exclusively and told us that they are expecting an additional 27,000 crore worth of submarine orders over the next few months. And he also allayed concerns of a slowdown in the orders. Listen to excerpts from that conversation.
We have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the order, the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. There is an order for P75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazagon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. We are out of 4 destroyers, we have already delivered 3, and we are scheduled to deliver the 4th one also this year. So this project would be closing. So any cushions which are kept with respect to liabilities that may arise.
All right, let's get to a CNBC TV18 exclusive from the corporate voices. Expect Ambuja Cement to outpace industry with more than 8% growth, says Vinod Baheti, who's the CFO of Ambuja Cements, in conversation with CNBC TV18. He also spoke about the Penna Cements and on the merger plans with ACC. Listen in.
In terms of the fiscal, let us say we will discuss about the balance part of the fiscal. The balance part of the fiscal, I believe that it should grow between 7 to 8% kind of thing. So far as Ambuja is concerned, I strongly believe we should be closing more than 8%. So we will be that way outpassing the industry. So far as if I look at the larger horizons in next 5 years or 10 years, this industry I strongly believe should be growing above 8 or 9%. As of now, our market share is overall around say 12 to 14%, and we will be moving to 20%. And if I see an interesting situation here, that we are the ones with an expansion of our capacity to 140 million tons, we will have an improved market share compared to others who are also expanding, but they will be retaining their market share. So when I look at say from 14 to 20%, I have a 6% improvement in terms of my market share at 140 million tons capacity. Penna has been a great acquisition for us. As you know that we announced on 13th of June and we achieved the closing on 16th of August, almost like in say 10 weeks time. And as we speak, already productions have started and dispatches have already started. The assets are great, and while we did a thorough DD, but when we are actually now live running the plants, we see that the assets quality are really good. Our marketing and sales people have given us a commitment of almost achieving 8 lakhs volume per month, which is almost like 9.6 million tons. But without giving much optimism over there, I am strongly believing that 60 to 70% we will be achieving capacity utilization in this year. And as I said, that next year we should be hitting almost 80%.
Now you have 3 assets, right? 3 cement assets which are listed: ACC, Ambuja, as well as Sanghi. When do all of them come together? First, let's focus on the merger between ACC and Ambuja. And is it on the cards sometime soon, say in the next fiscal?
Nigel, like I think so. Like whatever when it will be there, we will make it to the markets. But as of now, no such plans. But of course, we have already started our journey of consolidation. Okay. The first one was the cement business of Adani Enterprise, which is Adani Cementation Industries Limited, which is under the merger process of with Ambuja. Got it. But as and when we follow the other steps, we will definitely
because the street is wondering why do have 3 listed entities, right? Sanghi should get folded up in one of them, and these 2 as well should come up. Yes. In the next 2 to 3 years, do you think that will be the plan, that we'll have one listed company, Adani Cement? Should that be a possibility?
Ideally, that should be the way forward.
That should be the way forward. Exclusive views coming in there from Ambuja Cements at the Motilal Oswal's 20th Annual Global Investor Conference. Staying with that, Niket Shah, the CIO at Motilal Oswal Mutual Fund, said that he is cautious on the markets and has been very selective. He also shared his views on the IT sector. Listen into what he had to say.
This quarter, Nifty earnings growth has been about 4 to 5%, which is probably slowest in the last 16 quarters. Mid-cap earnings growth has been about 5 to 6%, again slowest in the last 16 quarters. And we have been slightly more cautious on the markets, being very, very selective. Our focus of this year is to do less mistakes, right? So when we started this year, we could clearly see, earnings growth kind of slowing down. And we want to ensure that we don't do, significant mistakes this year. If you don't do mistakes this year, I think you will end up in a very good outcome at the end of the year. So from a 25, 26 stock portfolio, we're now actually down to about 16, 17 stocks. We're trying to make the portfolio more and more sharper by the day to ensure that, there's no mistake. So that's broadly, I think, what we have been up to. IT hasn't done well in the last 3 years, right? I mean, some of our IT holdings within the mid-cap and the small-cap space have done extremely well. But overall, from an industry standpoint, I think it has gone through some challenges in the last 2 years. We believe post-US elections, some of those challenges are likely to go out as, the pipeline of the IT in terms of the funnel or the deal pipeline that most of the corporates have been talking about is very, very healthy. So that continues to remain healthy. I think most of the corporates or enterprise in US or Europe are waiting for some clarity on US elections to get over, and that the spending will, I think, in next year should come back in a meaningful fashion.
All right, on that note, let's slip into a short breather on Business Lunch. But when we return, we'll get you an exclusive story on IVF clinics that are now coming under the tax scanner. That story after a very short break. Stay tuned.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president, and her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women fighting for reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. My friends, when a barrier falls for one of us, it falls and clears the way for all of us.
Back with us here on Business Lunch. Now getting you an exclusive. We're learning from sources that the IVF clinics and medical colleges are now under the tax scanner as the income tax department has asked officials to keep a close vigil. Timsy is joining in with more details. Timsy, what are your sources telling you?
Tightening the noose around tax evasion, the Income Tax Department in its recent Central Action Plan for the current fiscal has asked all its field formations to keep a close vigil on IVF clinics and medical colleges, apart from the usual hotels and luxury retailers. Income Tax Department in its plan says, and I quote, Section 139A requires PAN for certain transactions, but there is no mechanism to ensure compliance. To address this, high-value expenditures should be verified using departmental data. Identifying and verifying potential circumvention sources such as hotels, luxury retailers, IVF clinics and medical colleges is crucial with this information. According to the taxman at the helm of the Central Board of Direct Taxes, there's an urgent need to address widespread circumvention of income reporting requirements for cash transactions over 2 lakh rupees. It is essential to identify high-risk sectors like hotels, luxury retailers and medical facilities. That's what this particular section says, and that's what the taxman has said. So let's see how soon taxman begins to keep a close vigil on IVF clinics and medical colleges and medical facilities, and what is the final outcome of this particular drive. Back to you.
All right. Important story there. Thanks, Timsy, for all those details. And on that note, let's slip into a short breather on Business Lunch. But up next, remember, we will get you excerpts from an exclusive conversation we had with the former RBI Governor Raghuram Rajan. Stay tuned for that.
To be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will come together and declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us. Let us fight for the ideals we hold dear, and let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Again, what her appearance is just a preview of coming attractions of Thursday night. You could feel the electricity. It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created because it's all about the future, and she embodies it.
Oh, I think it's great. You know, people really get excited when something happens they didn't expect, and it makes them happy. So we're a happy group.
what kind of thing we accumulated at sub 100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of
Welcome back and take a look at the market. It's seeing some more pressure being built up and largely driven by the large banks. Bank Nifty is down 0.8% and mid-caps have also pared down their gains. Now, talking about an important comment coming in from the former RBI Governor Raghuram Rajan, he said that the US Fed chair should display masterful uncertainty at his Jackson Hole speech later this week. Now, speaking to CNBC TV18, Rajan also said that the US Fed chair should not guide the markets on a rate cut. Listen in.
I suspect that in his Jackson Hole speech, Chairman Powell will, try not to lock himself into a course of action in September. The prediction is there will be a cut, but the question is how big a cut, and a lot of that depends on the, jobs report for the month of August. To paraphrase Dr. Reddy, masterful uncertainty is what I'd leave it at. I wouldn't try and guide the market more than I have to.
And as Raghuram Rajan just mentioned, all eyes will be on the FOMC minutes, which will be released later this evening, and Jerome Powell's speech, which is scheduled for Friday. Now, chief market strategist at Jefferies, David Zervos, said that the US Fed has skillfully maintained inflation expectations. Listen in.
There's going to be a dovish tone. There's going to be a dovish tone to both, and more of a victory lap tone. I think it's we've come a long way. The inflation storyline is a good one for the Fed. They have kept inflation expectations over the long run anchored throughout this entire ordeal, the largest inflation shock of most of our careers. And we're well on the way to getting both core CPI and core PCE back to kind of where we were pre-pandemic. And it's been a long time coming. And it's I think there's going to be a lot of positivity here and a lot of openness to how we proceed with the rate cutting.
All right, staying with global developments, especially United States. Well, the second day of the Democratic National Convention saw the presidential candidate Kamala Harris coasting on the enthusiasm of the supporters. Former U.S. President Barack Obama also showered his support for the vice president. And CNBC's Becky Quick has more on the presidential election campaigns that are in full swing currently in the U.S.
Former President Barack Obama headlined the second day of the convention, throwing his support behind Kamala Harris.
I am feeling hopeful because this convention has always been pretty good to kids with funny names who believe in a country where anything is possible. Because we have a chance to elect someone who has spent her entire life trying to give people the same chances America gave her. Someone who sees you and hears you and will get up every single day and fight for you. The next president of the United States of America, Kamala Harris.
The independent presidential candidate, Robert J. Kennedy Jr., is considering ending his campaign to support Donald Trump, according to his running mate, Nicole Shanahan. And Trump has said he would consider offering Kennedy a role in his potential administration if the independents were to drop out and support him. Kennedy, who has qualified for the ballot in two key battleground states, Michigan and North Carolina, said in a social media statement that he is willing to speak with any political leaders to go further the goals of his campaign.
The drama continues in the United States. But with that, it's a wrap on this edition of Business Lunch from Nisha, me and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in trend has reached a level which is very difficult to understand, but there is a momentum in the company's performance as well as in the price.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein, because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to do.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. A very range-bound market today. It's a 100-point balance that we're looking at on the Nifty. Not major moves, but small caps, they continue to do well. And so do the mid-caps. Not big moves there, but definitely better than the benchmarks.
The mid-cap and the small cap, holding above the green line. But what's actually happened in the last hour of the session is the fact that the Nifty Bank has seen quite a bit of selling pressure now near the day's lowest point. But quite a lot line up on the show. We'll start off with the top headlines. Range-bound day of trade with the Nifty moving in a 100-point band. FMCG and consumer durables gain, while realty and PSU banks come under pressure. Broader markets outperform.
Shipbuilding stocks see recovery after yesterday's fall. Mazagon Dock Management tells CNBC TV18 the company's order book is at 40,000 crore with another 27,000 crore of potential submarine orders likely to be awarded over the next few months.
CESC surges in trade after its subsidiary, Purva Green Power, incorporates a wholly owned subsidiary company called EcoFusion Power, which will explore opportunities in renewable power sector. Stock up over 8%.
GE T&D India under pressure as promoters evaluate shareholding structure and possibility of a minority stake sale. Stock is down 5%.
Aurobindo Pharma under pressure after details of FDA's warning letter to the company's arm Eugia Pharma units emerge. FDA observes that the firm failed to ensure that laboratory records included complete data derived from all tests.
Okay, so those are some of the stocks which are on our radar today. We'll discuss them in greater detail and talk about the mid-cap movers as well. Talking about mid-caps, that space is doing well, at least better than the benchmarks as we've been talking. The small-cap index is also up 1%, but it's very sector and stock specific today. Not all of them in the green, not all of them seeing big moves as well. But the Nifty Media Index, that's up 1%. FMCG stocks have made a comeback. Pharma is doing well, so the defensives are making a comeback today. We have the metal index, which is also surging, so 0.4% higher there. But largely, you have to say the advance decline ratio in favor of the advances, but still continues to be very stock specific.
Absolutely right. So, the bulls continue to make merry. Another sector that's doing quite well is the insurance pack. After the sell-off that you saw on Monday, last two trading sessions, you're actually seeing quite a bit of buying emerge as far as the entire insurance space is concerned. So look at names like SBI Life, HDFC Life, all of them trending higher today. But there are quite a lot of stocks on Hormaz's radar. Hormaz is standing by the wall in our special segment, Mid-Cap Movers, to take you about the mid-caps that are buzzing in the session.
Indeed, it's a sluggish day, and there are enough and more number of stocks, though, in the broader markets that continue to do well in today's session. One such stock that has seen a spike today is Nykaa, and that is the stock we'd begin with in the list of the gainers. 1 point was up almost 19% and marking the best day since November of 2022 for Nykaa. Now back above the mark of 200, crossing 60,000 crore in market cap. Alok Industries, Century Textiles also was up 10.5% at 1 point, and Jubilant Foods at the highest point of the day, now 4% higher as we speak. Shipbuilders are seeing a bit of a recovery in today's session after that 3-day sell-off that we have had. Mazagon Dock has almost recovered yesterday's losses, now 7.5% higher at the highest point of the day, and similar recovery seen in Cochin Shipyard and Garden Reach as well. Stocks that are doing well on the back of strong volumes, and they'll come up on your screen. Capri Global now at the lowest point of the day, 3.5% higher, but off the day's high. Mastech, Just Dial and CESC seeing some very healthy gains on strong volumes. Pharma is a sector barring Aurobindo. Most of the other names are doing well. Ipca Labs, Glenmark, Sanofi, all of them nearing the highest point of the day. And lastly, some losers in the broader markets in today's session. ICICI Securities now down 6% after the NCLT approved its delisting. Nuvama Wealth, Godfrey Phillips seeing some profit booking, and Torrent Power, yesterday's high flyer, also now at the lowest point of the day, 4.5% lower. Back to you guys.
Okay, all right. Suddenly it feels like a void after earnings, right? We don't have movers on the basis of earnings, but thank you so much, Hormaz, for joining us and telling us which stocks are moving around in the broader markets. It's a good time to get a technical check on the markets. Ruchit Jain of 5paisa.com is joining in. Ruchit, good afternoon. Thank you so much for joining in. Well, it's been very, very range-bound today. We did see weakness globally, but that has not really translated into our own markets. Do you think these are the levels we should be watching out for today?
Yes, hi. Very good afternoon, Sonal. Very good afternoon, Vivek. Well, the broader trend for the market still remains positive because, in spite of this consolidation, but because what we have seen that if you look at the F&O data, then the client section has a long-short ratio of around 52%. FIs have long-short ratio around 52%. And last few days of data indicates that there is no selling pressure that is going on. There is no selling data that is coming. So I think it's a lot of stock-specific action which is going on. So market breadth is still positive. It's just that the lower time frame chart momentum readings have become a bit overbought after this recent rally from 23,900 to 24,700. So that needs to cool off either with some kind of consolidation or a minor pullback move. I don't think one should worry much about these consolidations. The market breadth is still healthy. So one can take a stock-specific approach. And as far as levels are concerned, 24,500 to 24,550. I think this is a very strong support range on any kind of dip for the Nifty index. So in case if we get any such decline, one should take that as a buying opportunity. So we are advising our clients to keep a buy and dip approach for the index, and even a stock-specific approach at current levels should be a good idea to trade.
Good afternoon, Richard. So you said a stock-specific approach is what one should look at. So which are the stocks on your radar today? What is it that you're recommending?
Well, with a couple of recommendations on the buy side, since the broader markets are doing well. One will be a buy call in Titan. So the consumer durable segment itself is looking quite positive. And after this entire correction we faced since the month of February, Titan has now resumed its high top, high bottom structure. Today, if we look at the price volume action, then the stock has given a breakout from a falling trendline resistance, which is supported by higher than average volume. So I think this stock can do well. We expect some good catch-up move in the near term. So with the stock below 34.50, short-term traders can go along with potential targets around 37.50. And Alchem Laboratories is another pick that I would recommend. Recently, we have witnessed a breakout. The entire pharma space has been doing well. Technically, there's a formation of a bullish flag pattern on the daily chart. So one can go long here as well, keeping a stop loss below 5,620 for potential targets around 6,100 in the near term.
All right. Okay, Ruchit, thank you so much for joining in. So those are some technical picks coming in from our technical analyst. We'll sip into a break. When we come back, we'll be joined by management of Dhanuka Agritech. We'll discuss company's business outlook and the buyback that they announced recently. Stay tuned for that.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones. People are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we are number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
Invest.
Welcome back. You're still tuned into Midcap Radar, and the stock on our radar right now is Dhanuka Agritech. The stock is up in trade today. The 100 crore rupee buyback opens tomorrow. Remember, the buyback price was announced at 2,000 rupees a share, and it was announced 2nd August, but it opens tomorrow. To discuss this and more on Demand and Business Outlook, we are joined by Mahendra Kumar Dhanuka, the Vice Chairman and MD at Dhanuka Agri-Tech. Mr. Dhanuka, good afternoon. Thank you so much for joining in. We'll discuss buyback in greater detail in just a bit. I just wanted to understand the quarter two demand trends because you had indicated that some of the sales saw a return and that was impacted because of various factors. First, if you can explain what led to that. And second, if it has continued in August as well. So do you see more sales return coming up in coming months as well?
Good afternoon, Sonal. Let me update you that in the recent board meeting on 2nd August, I have been elevated as the chairman of the company, and Rahul Dhanuka, who was the son of Mr. R.J. Agarwal, he has been nominated as the managing director. So for future records, I just wanted to update. You are right that the material, especially the weedicides, which were placed in the month of May and June, which was to be consumed in the month of July, but because of the dry spell from 1st of July till 25th of July, the weedicide consumption was less, and those weedicides has been returned back by the distributors. So that has impacted the growth sales for the month of July. August, it is still mixed bag, not very good because of the continuous rains and the floods in number of states. So because of which the sprays has been missed out by the farmer, because the farmer is afraid that because of the continuous rains, if he spray the pesticide, it will be washed out if the rains come. So he is not basically doing the sprays. So that has been impacted the sales in the month of August also.
So, Mr. Dhanuka, then the guidance that you had given, low double-digit growth and 100 basis points margin contraction in quarter two, does that stay or will you even do lower number than that?
No, we hope that now the rains will stop and the remaining 40 days of the season for this quarter will improve and we will be able to deliver a lower double-digit growth by end of September.
Okay, sir. So Q2, you continue to maintain your guidance of lower double-digit growth, and before we go to the buyback, are you also maintaining your FY25 top-line growth guidance of 18 to 20%? Any tweaks over there?
No, we will continue with our guidance of 18 to 20% in the top line and 100 bips downfall in the EBITDA margins.
That's for entire FY25, the 100 basis points decline in EBITDA margins?
Yeah, for the entire FY25.
Mr. Dhanuka, you've also announced a buyback of close to 100 crore. Now, the price that you've announced it is at almost 2,000 rupees a share. Question number one, will the promoters be participating? We understand it's via the tender route. So will the promoters be participating in this buyback?
Yeah, promoters will also be participating in the buyback.
And what is the rationale? I mean, did you find that to be the best utilization of cash at the current time, or what is the rationale for going for this particular buyback?
Actually, you see, there was some tax advantages in the buyback. We can reward to the shareholder, and this is the, I think, last buyback, because from 1st of October, the total amount received through buyback will be taxable in the hands of the shareholder. So I don't see that in future the buyback should take place. So considering the short time, we decided on 2nd August board meeting, and we hope before 30th September, we will complete the buyback.
Okay, that is something that a lot of companies are doing because of that new tax changes that have come by. So a slew of buybacks which have been announced by companies now. Mr. Dhanuka, what is the balance sheet looking like? If you can give us a sense of the cash that you have in your books, and is there any more capex coming up? What does it do to any more fundraising plans that you have, if you have it all?
No, we have ample cash available on our balance sheet. More than 250 crores cash is available in the balance sheet. So we don't plan for any fundraising in near future. So we hope some capex will be definitely there both at Sanand and the Udhampur. But capex at the Dahej plant will depend on some tie-up with any of the Japanese company.
Okay, sir. So, what's actually happened as far as Q1 was concerned was that you saw very strong volume growth, almost 39% volume growth, but you actually saw price realizations decline. You've also said in the con call that your new introductions, that are 3 projects, Purge, Lenovo, as well as Mycore Super, are receiving very good response from customers. What prices do you typically sell them at? Are they higher than the current product profile you currently are? And on the back of that, why is it that you're guiding for a slightly lower EBITDA margin in FY25 versus FY24?
You see, prices for the molecules depend on product to product. It's not similar for all the products. Lenovo is around 8,000 rupees a liter, and Pars is around 2,500 rupees a liter, while the Mycore Super is around 125 rupees a kg. So with different products have different prices range, and margins definitely are higher because they are exclusive molecules. Dhanuka has introduced all the 3 molecules first time in India, and we are getting very good response from the farmers and the distributors.
Okay, so from here on, growth, Mr. Dhanuka, will it be volume led or will it be led by pricing? And the growth also, will it start coming in from the Dahej plant in terms of profits this year? By when do you expect break even there?
By FY27, we expect break even from Dahej plant. And the second question was?
The growth from here on, will it be pricing led or will it be completely volume led?
No, there will be variation of 2%. In the first quarter, the variation was 6% between volume and the value. I hope by the year end, it will remain 2%.
Okay, thank you so much, Mr. Dhanuka, for joining us and speaking to us about how Q1 panned by and how exactly is Q2 panning out so far. Now, moving on, speaking at a report launch on net impact of e-commerce on employment and consumer welfare in India, Piyush Goyal, the Minister of Commerce and Industry, says the exponential growth of e-commerce firms in the country is a matter of concern rather than something to be proud of. Listen in.
Are we going to cause huge social disruption with this massive growth of e-commerce? And I don't see it a matter of pride that half our market could possibly become a part of the e-commerce network 10 years from now. It's a matter of concern. But I'm not wishing away e-commerce. It's there to stay. But I don't deny that e-commerce has a role. But we'll have to think very carefully and cautiously what that role is, how that role can be in a more organized fashion. Is predatory pricing policies good for the country? When Amazon says we are going to invest $1 billion in India and we all celebrate, we forget the underlying story that $1 billion is not coming in for any great service or any great investment to support the Indian economy.
Okay, those are some telling comments coming in from the Commerce Minister. We'll keep talking about the story and get greater analysis on this as well. For now, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side, so stay tuned.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to through AI/ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable.
Welcome back to Mid-Cap Radar. As you can see on the screen, the Mid-Cap Index is the one that continues to outperform, trending above the flat line. But one stock in focus is PNB Housing. The stock is fired up in the trade on the back of a large block deal. Abhishek joins us with more details.
PNB Housing Finance is up in trade today. Now sources do tell us that General Atlantic Singapore Fund has sold stake in PNB Housing. So a large block took place today, about 1.39 crore shares, which is more than 5% of the equity in PNB Housing Finance. So floor price was set at 775 per share, which was at a discount of 4.5% to yesterday's closing price. However, the trade took place at 803 per share, which is 3.5% above the floor price. This is a clean out trade because more than 5% equity was what General Atlantic was holding in PNB Housing Finance, and they have sold their entire stake. It's a clean out trade over there, and the sold BRLM is IFS Securities to this block. Back to you.
Thank you so much for that, Abhishek. The stock has fired up in the session on the back of this clean out trade by the private equity investor. Now, one section of the market today that's actually underperforming is the banking pack. The Nifty Bank Index now trending near the day's lowest point, and have a look at some of the heavyweights over there. Have a look at HDFC Bank, have a look at ICICI Bank, have a look at Kotak Mahindra Bank. Remember, yesterday it was these private financials that actually did quite well in the session, and in fact they were the one that actually took the market higher. But today they're seeing quite a bit of selling pressure. The other stock on the radar is Divi's Laboratories. On the back of some positive news flow and a relief coming in on the back of no longer are you seeing immediate entry of a generic in one of the important drugs of this particular company, the stock is higher today by almost 3.5%. So Divi's Lab amongst the top Nifty gainers. The other set of stocks that are doing quite well, insurance stocks, have a look at HDFC Life, have a look at SBI Life. Those are the stocks that are doing very well in the session today. But that's all the time we have on this edition of Mid-Cap Radar. Your stocks when we return.
decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing some amount of consolidation for the frontline indices and the Bank Nifty, which is sulking today, so down around 0.7%. But we have a lot of stocks which are buzzing around within the broader market, so just keep a note of that. The likes of Manika, which is up around 11% Skipper, which is up around 7.5%, Castrol India, which has gained around 9% in today's trade, and even stocks within the pharmaceutical space, Indico Remedies, GSK Pharma, Narayana Health, all of these stocks gaining anywhere between 4 to 5%. So buzzing market, stock specific in nature, but the Bank Nifty continues to sulk. We do have Rajat Bose joining in to discuss all of the queries that we have, along with Sharad Avasti. Sharad as well as Rajat, welcome to the show. Well, before we kick off the queries, Rajat, the standard question to you. The markets, it's largely a quiet day, but there's a lot of underlying movement.
Yeah, good afternoon. Thank you for having me on the show. Nifty at 24,731, that is the current level. It is higher than the 24,686 when Nifty came back from the lower levels and regained levels above 24,686. That means the gap that was created on I think 5th of August, that has been fully taken care of. And once it stays above 24,700, it will gather steam. And once the next level of resistance around 24,865, if that is taken out, then the next target would be 25,080 to about 24,115. So this is on the upside, and unless the Nifty falls 24,300, there would not be much of a problem. Bank Nifty is perennially sulking. Bank Nifty, unless it takes out 50,900, that level needs to be taken out. After that, 51,300. This range of 400 points on the upside will give enough supply. And once it comes down to about 50,100, it can expect some support. So Nifty, Bank Nifty are in a different direction. I mean, Bank Nifty is perennially weak, but Nifty maintains its strength, and so does CNX IT, and also today, pharma stocks are doing pretty well. Divi's, Cipla, Indigo Remedies, a lot of these stocks are doing fine, pretty fine.
Okay, all right. Well, we do have our first question now. We have Shrija, who writes to us from Mumbai, holds 400 shares of Dabur, which is bought at 630, wants to know what to do, whether to buy more or whether to exit at these levels. So 630, just about very close to the buy price, so not much of a loss. So let's get a fundamental view in first. In terms of demand trends, the Q1 update was quite positive from Dabur. So on that note, fundamentally, what would you recommend, Sharad?
Yeah, so given the current profile and the current upbeat mood around rural India, I think Dabur should be the biggest beneficiary of it. Good summers have also aided sales in Q1. So I think as sales grow from here onwards, you would largely be focusing on volume growth. The company is diversifying into a lot of new products, expanding their total addressable market. But in FMCG, it's a slow-moving process for new products to gain market share. But they have entered into 5-6 new segments totally for them. And I think if they can pull it up there and grow it at a substantial rate, it would be very healthy for them. And even the distribution reach has been enhanced on all counts. On the broader aspect, it's around 20-30% increase year on year. So I think that should also start playing out in the numbers. Regarding top brands being there, I think they have a strong brand presence. The only flip side could be that, considering the current numbers, we are expecting about 15-16% kind of growth. And it is already trading at 40 times forward. So I think considering that, it seems fairly valued. If you want to add more add-on dips, and at the current price, I think at best you can continue to hold. I can't see much upside if you're holding for a 1.5-2 year kind of horizon, only market-linked returns. But if you want to look at beyond that, I think as the new products start contributing, and that is the time frame you should be looking at. If your view is just 1.5-2 years, I think it's better to exit at current prices. If you can extend your horizon, I think continue holding this and add more on a dip of, say, anything between 5 to 10%.
Okay, all right. And technically, what would your approach be towards Dabur, Rajat?
You can do two things. Dabur, if it comes down close to about, say, 610, put a stop loss below 598 and buy more. Otherwise, if it were to go up and it crosses 664 or 665 kind of levels, then you can consider buying, because that is a very strong resistance level in my reckoning. And once the stock reaches those levels, you will see supply is definitely going to come. Once that supply is absorbed, then there could be further upswing. As such, I quite agree with Sarath that it is not showing much of attraction and a strong uptrend potential. It is just about catching up. Only above 665, you will see fresh gumption coming.
Okay, all right. So that's on Dabur. In the past 6 months, the stock has given returns of around 16% odd. We now have Krishna Rao, who writes to us from New Delhi, holds 400 shares of Tata Technologies, which is bought at around 1150. So sitting on a loss there, wants to know the future prospects of his current investment. Well, technically, what would your approach be towards this particular stock? It's not done much in the past 6 months. It's given it's down around 12 odd percent and is down 13 odd percent this entire year. So Rajat, your approach towards Tata Tech?
I would suggest holding on to the stock and do not get out of it right now. Wait for medium term, that is at least 6 to 9 months. You are definitely going to see some kind of an appreciation, because this is forming a base between, say, 1050 and 975. This is the range in between. It is absorbing supplies. Once the supply is absorbed, then it will move up. And once it crosses 1125, then it will get more momentum. But here you should buy. It is not the time you should get out.
Okay, so you should buy and not the time to get out. Would you share that view, Sharad, in terms of the fundamentals? The Q1 numbers weren't that, didn't impress too much. So what's your view?
Yeah, I think the Q1 numbers were not there, but I think the type of technologies the company is focusing on, whether it's electrical cars, autonomous cars, these are not things that would show up every quarter on the numbers. The VinFast, one of the concept most probably has got approved, and you would see the result in the next quarter or the quarter after that. You'd see some effect of that numbers. More of the impact would also be visible in the second half. They have done a JV with BMW also. I think the type of businesses the company is into, and the big trigger could be aerospace also, considering that they have major business from Tata Group itself. Tata Motors and the auto business continues to be a major driver. The aerospace could drive it further. So I think it's an interesting bet long term, maybe not priced to perfection at these prices, but around 1,000 rupees, 1,010, I don't think you should be considering to sell it off. Rather, if you have more funds to allocate, you could allocate 50% here and 50% gradually on a 10, 15, 20% kind of dip if the stock does get that. But I think long term, it's a very structurally strong story, and forward numbers could get a lot of leg up from the developments in the aerospace industry, as well as further models being developed on the electric side for companies like VinFast. And I think traction should come into those businesses over the next, 2-3 years. So it's a good hold at these prices. Now there's not as much fancy as much was there during the IPO time. So gradually try to accumulate and build a position here. I think this is a very futuristic company. And once the aerospace business starts kicking in, you could see a lot of re-rating happening to the numbers.
Okay, all right. That's on Tata Technologies. So both have a view that, this might actually be the time to add on to the stock and, long-term positive there. We have some news coming in on Embassy Office Parks. They've leased around 1.4 MSF or million square feet to Commonwealth Bank of Australia and Bengaluru. So positive news coming in on that particular counter. But now we do have Mayank Uttam, who writes to us from Mumbai, who's 13 shares of Bajaj Finance for an average price of 7,000. So he's sitting on a loss. And he's holding it since more than a year and a half. He wants to know what to do. Well, what is your technical view on this particular counter, Rajat, on Bajaj Finance? If you see, it's flat today, but nonetheless, do you think that it could probably get back to the the buy price at least?
One thing that is happening is that Bajaj Finance posted a top around, say, 8,000 in 2021. And after that, it has been range bound. Mostly the range is between, say, 6,000 to about 8,000. And so far, so long as the range continues, you cannot say something like, say, if you look at the weekly chart of Asian Paints, that is also a range bound counter. And here also in Bajaj Finance, when you look at the weekly chart, the same thing is there. So if the horizon is short term, then I would say kindly hold on, because if it were to cross 7,000, then you may see 72.40, 72.50 kind of range being scaled up, then you can think of exiting. Otherwise, if you are a short, long-term investor, put a stop loss below 6,000 and continue to hold on, because this company might be absorbing supplies at these levels, because the instructive chart is Bajaj Auto. There had been several years of range-bound activity, and after that, when it shot up, it gave very good appreciation. And same thing might happen here going forward, but that is for the long term.
Okay, all right. What about you, Sharad? You know, in terms of the numbers, the loan loss provisions jumped this time round. The NBFC is going to focus on collection efficiency going forward. But fundamentally, do you think that this is a portfolio stock to have in your in the long term, and it'll revisit those highs that it saw a year ago?
Yeah, I think might not be as optimistic. Last 3-4 years hasn't done much because, you know, it was largely trading at what, 10.5 times price to book. And right now it's trading at somewhere around 5.4 times. I think the business has done very well for Bajaj Finance, right, since the reorganization happened. And over the last 10 years, they have done very well regarding the business growth, everything. GNPs, NPS have been very much under control. The fee income has been robust. The only thing is that I think maybe that this legacy business that they have grown over the last 8 to 10 years, specifically the consumer finance business, we might be seeing a bit of slowdown there, and new competition might kick in from banks and other smaller NBFCs. And it might not be as easy for them to continue growing. Now, the base is also much larger. But last 3-4 quarters, you don't have any thing to believe that the Bajaj Finance as a company is slowing down. New ventures, whether the asset management business, etc., is also coming in. And I think long-term trajectory should be strong for consumer finance, housing finance. All these should play out very well for the company. And they have largely focused on technology. In terms of valuations, I think if you were to take a generic view and it continues to trade at similar valuations, 4.5 to 5 times, then maybe you're looking at 7,500 kind of targets. But this is based on the fact that earnings has been revised downwards over the last 3 to 6 months. In case the bank's numbers improve, then your optimistic targets could be around 10,000, 10,500. So keep this range in mind, 7,500 to around 10,000. Maybe over the next 1.5 to 2 years, you could get those prices.
Okay, all right. So that's on Bajaj Finance. Well, for the markets, it's still quite quiet at this point in time. So overall for the indices, the Nifty is just about higher by around 42 odd points. The Sensex is down by around 4 odd points. Advanced decline ratio is holding on the advancing side. So that's a positive which is playing out. We'll take a short break. More queries. Stay tuned.
investing.
Welcome back. You're still tuned into Your Stocks. Well, do watch out for a stock such as Dishman Pharma. It's doing extremely well today. It's up around 10% odd. That stock has not done much this year. It's gained only around 10% odd, and it's down 6% this month. But today it's having a good day, so it's seeing a good amount of volume as well as price action on the upside. Dishman Pharma is the one that I'm talking about. But let's get another query now. We still have Rajat Bose and Sharad Avasthi to answer all of your stock questions with us. We do have Sunil, who writes to us from Cochin, holds 200 shares of Cochin Shipyard at 2,721. He wants to know what to do, whether to hold or cut the loss and redeploy his particular investment. Well, he's sitting on a loss at this point, and it's quite a steep one at that. Sharad, I'm going to toss it over to you. What would you recommend in such a case?
Yeah, I think what has happened in the whole space is that, the order books have doubled over the last 2-3 years, while at the same time, profits and revenues have grown by 15%, 50-60%. But the stock prices have gone up by 6-7 times. So I think that's been the case in this also. Cochin has seen a decent correction, but I think if you look at the numbers and the type of order book they're already sitting on, the only thing is that the performance may not be linear. So you might see some slowdown in some quarters or even a year maybe where you don't see much happening in the numbers. But the order book accretion should continue, whether on the domestic side or on the international side, particularly on the oil and gas as well as on the shipping and marine business, submarine side. So I think all this should augur very well for these companies and even for Cochin. Short term, if you're just holding it for 1.5-2 years, I think maybe you might not get much. But I think ideally after this kind of run up, you should extend your horizon to around 3 to 4 years. And there is a high possibility that the way the order book has doubled over the last 2 years, there is a possibility that it might further double up over the next, 1.5-2 years, depending on international as well as domestic orders. And that would certainly give a big fillip to the forward numbers. So there is, if you can hold for that kind of time frame, I think my targets would be somewhere around 4,000, 4,500 on the stock, considering they trade at, 30-35 kind of forward multiples and the order book doubles. But if you have a shorter time horizon, which is say 1.5 or less than 2 years, I think it's better. I don't think you make much money out of this from that perspective.
Okay, all right. And what about you on the technicals, Rajat, on Cochin Shipyard?
Cochin Shipyard on the weekly chart is, it has completed its parabolic run, and the top was around say 3,000. After that, there is a 30% fall, and now there could be a bounce back. In that bounce back, if it doesn't cross 2,450, 2,500, then there would be further fall. In fact, this kind of pattern, when they show completion, after that, you will have to wait for a very long time. In some cases, it could be 7 or 8 years also. And this business, particularly defense business, lumpy earnings. So you get in the last quarter payments or even orders, and then your working capital cycle is very big in some cases if government doesn't have much money. Now the losses are much smaller, so he should exit and look for better opportunities. This is not going to produce major appreciation, at least not before 5 years.
Okay, all right. So that's on Cochin Shipyard. Well, we do have time for another query now. We have Durai Samraj, who writes to us from Mumbai, holds 1,000 shares of NCC, which is bought at 273, is a long-term investor and wants to know what to do, whether to hold or sell this particular counter, sitting on a good profit there of around 48,000 rupees. So Rajat, what's your recommendation on this?
You said the gentleman is making good money, right?
Yes, on NCC, his buy price is 273. He's sitting on a profit of around 40,000.
He should book profits immediately, because even this is already on a parabolic path. And once the fall starts, then he would not be able to exit, because then his buy price will be taken care of by the downswing. So right away, one should book profits.
Okay, so no further upside from here on, but you believe?
Not much upside from here possible. I don't think so. Because currently it is at 322. It would hardly go to 340. Before that, again, some selling pressure will come. And once it takes out 290, 280 kind of support area, it can go down to 240. And at that point of time, this gentleman will not sell. And then it will become it will become a permanent member of the family. That is.
Okay. And what about you quickly, Sharad, on this one?
Yeah, I think the order book growth, etc., has been very good. We don't see any kind of slowdown on the infra spend, etc. Yes, I agree with Rajat that maybe median valuation-wise, this is where he could book profits. But considering the type of mood we have around infrastructure, I think, and the type of order book growth that these companies are looking at, you could expect, very rapid growth in earnings, and that could translate into a slightly higher multiples. So I would think that you could hold on for targets of around 400, which is 20 times. So I think that's a possibility over the next 1.5 to 2 years.
Okay, all right, Sharad, as well as Rajat. On that note, we're going to wrap up. Thanks very much for joining in and taking us through all of those queries. That's all the time that we have in the show. Do remember to email us your questions. We'll address them with our experts. Closing bell up next.
In a very constructive meeting with Prime Minister Netanyahu today, he confirmed to me that Israel accepts the bridging proposal, that he supports it. It's now incumbent on Hamas to do the same.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president. And her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for.
Hang Seng is down 200 points right now. The Taiwanese index down 75 points.
Chairman Powell will, try not to lock himself into a course of action in September.
Reports come in at the 20-day moving average, which is the 24,500 mark roughly. Bank is down about 0.25%. 50,671 is where the Nifty Bank is open.
We have a current order book of around 40,000 crores.
We should be in a position to ensure that the wheel of economy keeps on moving.
The balance part of the fiscal, I believe that it should grow between 7 to 8% kind of thing.
And it's a quiet Wednesday morning. Benchmark indices are trading sideways.
The Income Tax Department, in its recent Central Action Plan for the current fiscal, has asked all its field formations to keep a close vigil on IVF clinics and medical colleges.
Approximately, this is a deal of 14,000 crore rupees.
Small caps, they continue to do well, and so do the mid caps. Not big moves there, but definitely better than the benchmarks.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Well, it's a green screen after a red start in the morning. That's, I think, the best way to put it. We're not up by a whole lot, but it's not small either. From the lows, of course, we're up a solid 70-80 points. On the day, there's 40 on the Nifty. This is Closing Bell, last hour coming up. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, hi, good afternoon.
Hi. It would have looked so much better if the banks had participated, right, today?
Yeah. You know, actually, it's been such a narrow day. The range on the Nifty is all of 100 points. 100 points from the high to the low. We've been ambling around in that range, but there's a lot of action. Actually, if you look at the micro cap index, the small cap index, that's where the momentum seems to be. So it's that broader market, which is where I think the action is.
No, absolutely. And small cap index is up 1%. Micro cap index, I think, is up a bit more. So I think there is no real dearth of single stock action, which is, out there on your screen. The micro cap index. I'll get to that in just a bit, but the Nifty is recovered from the lows, as I said, by a solid 70-80 points. And the good thing is, after dipping briefly below that gap zone, which is 24,686, it's come back above it once again. So, you don't want to get back into that trading zone once again. I mean, you've taken that out, now you want to stay above it. Even actually in the last 30 minutes yesterday, it was looking a little iffy. The adjusted close was above it, was closer to 24,700. Today, again, we broke it briefly, but we are back above it. So let's see. Bank Nifty, of course, under pressure. It showed strength and promise yesterday. Actually, the top 5-6 gainers were all financials on the Nifty yesterday. That's missing completely. On the way down, supports for the Nifty Bank is basically the simple low that we saw earlier this week, which is 50,283. That's about 150 odd points away from where we are now. FMCG, pharma are sectoral gainers. Yesterday, of course, it was IT. IT is taking a bit of a backseat. Real estate and PSU banks are the ones which are under pressure. PSU banks outperformed yesterday. Some of it just feels like flip-flop. Go into it and then sort of go into something else. A lot of rotation, really. Small cap index is up about 1% once again. So broader market is really sparkling and very, very vibrant screen like it was yesterday. Reema.
Well, individual stocks are sparkling in trade, but at the index level, it's been fairly unexciting. As Subhi pointed out, we've moved in just about a 100-point range between 24,650 to 24,750. And within that, the markets have been swinging. Europe, too, is not doing too much. Frontline European indices are up anywhere between 0.1% for the FTSE, going up to about a 0.3% gain for the DAX and the CAC. There's lots of important data to watch over the next 2 days. So whether it's the flash PMI for the US tomorrow, the Jackson Hole on Friday. So the markets are firmly going to keep their eye on that. And ahead of that, things have been quiet and fairly sideways. Banks are dragging their feet. So the Nifty Bank has been an underperformer today, down 400 points, 0.7 0.75% gone on the banking index, with names like HDFC Bank, State Bank of India, ICICI Bank all under pressure. Week to date, though, markets continue to inch up. So slowly and steadily, week to date, the Nifty is up close to about 0.8%. The mid-cap index is up 1.2%. So the march higher continues, though in baby steps.
Absolutely. So, I mean, that granular move on the large cap screen is on. But the big screaming moves in the mid-cap and small-cap market, let me just point out some of them. So if you're looking at interesting gainers, Nykaa really stands out. There were some block trades on the stock today. It's been up 9 to 10% ever since. That's the interesting one. We'll get you the latest buzz on some comments that came in from Mr. Piyush Goyal on the e-commerce policy framework and what the country is looking at. There is a policy that's in the works. We don't know what shape and form it's going to take. But his comments were, they really caught the attention of the market as well, because he's saying that there needs to be protection for the small retailers as well. Let's see the reaction and how it plays out. Zomato has started cooling off since, we put out some of the highlights of the comments. We'll play out the bites. We'll get Parikshit in on that story as well. But look at the sell down on Zomato. Now it's beginning to show up. So that's one active side of the market. Other than that, yesterday you heard from some of the innerwear companies. Today also those stocks are up and about. Look at Lux Industries, for instance, 7.5% up. These companies were sounding quite optimistic when we had them on Bazaar yesterday. Aside of that, some of the other big newsmakers of the day include PNB Housing Finance, 8% after the block trade happened in the morning. And then there are, of course, the shipbuilders, which have bounced back in style and in a big way today. Mazgaon Dock is up 5.5%. Cochin Shipyard is up about 2.5%. So this is where the stock selection is going on. Stock picking is going on. Overall, of course, it's the financials and the bank Nifty that remains a bit of a sore spot. So let's get started with the trades that you could consider now in the last 1 hour. We have Mitesh joining in as always. Mitesh, good afternoon. It's a very range market. It's all about individual stock strategies. Tell us, what are you looking at? And also, if you do have an index trade, do share that with us.
Actually, I was looking to buy into Bank Nifty, but that's hardly managed to rebound from lower levels. So still not buying into the index because, one, the Nifty is not showing any signs of an upside traction. And I think the Bank Nifty coming into play could have added to the strength, but that's missing. So avoid the index. As you rightly said, it's a stock-specific market. Grassing for me, that's one of the buy calls. Recommend here, buying here with a stop at 2635. Look for targets of 2740, 2750 to begin with, and maybe even eventually higher levels. And HDFC Life is making a fresh swing high. So buy here with a stop at about 709 and look for targets of 750.
Thank you very much for that. And it continues to be a season of block deals. So today, two big ones took place, PNB Housing Finance, and the other one is in Cyan DLM. PNB Housing Finance, after this big block deal, is actually higher by nearly 8.5%. There is a clean out trade by General Atlantic. So, at least that supply overhang is out of the way. Abhishek joins in with the details. Abhishek.
PNB Housing Finance is up in trade today. Now, sources do tell us that General Atlantic Singapore Fund has sold stake in PNB Housing. So, a large block took place today, about 1.39 crore shares, which is more than 5% of the equity in PNB Housing Finance. So, floor price was set at 775 per share, which was at a discount of 4.5% to yesterday's closing price. However, the trade took place at 803 per share, which is 3.5% above the floor price. This is a clean out trade because more than 5% equity was what General Atlantic was holding in PNB Housing Finance, and they have sold their entire stake. It's a clean out trade over there, and the sold BRLM is IFS Securities to this block. Back to you.
Okay, thank you very much for that. Prakash Diwan is also with us, joining in on the show. Prakash, housing finance is a very competitive space, and a lot of the big boys, have also entered this space very aggressively. What are your thoughts on PNB Housing Finance and its right to win?
Good afternoon, Rima. So I think it has all the ingredients to make it big. It has done so well. There was a phase of consolidation which has been very healthy. The numbers took some time to kind of move to the next level of growth and then be better than market performance on an average. Where they score probably is the ability to scale up this business now that they have easy access to funds, their balance sheet is strong enough. So I don't see any reason why they can't do what a Canfin Home did in its peak, or what an LIC Housing Finance has always been expected to do. Because see, one of the advantages that some of these companies sit on is the low cost of funds, or at least a short pipeline of funds, which doesn't kind of upset the cost ratio. So that is a big advantage. Where, but there are smaller companies that have come into the fray in the last few years, which also have the right to scale up and win, if you will. You have something like Aadhar Housing. It hasn't got much of history in the listed space, but if you look at what they've been doing, there is enough and more to give you an indication that they at least have a very strong credit model and a distribution reach which meets their expectation of expanding basis of their balance sheet. So, when you look at these kind of smaller companies, you probably have a higher delta. But yeah, PNB Housing Finance definitely is one of the best. And with this overhang of this 5% equity, which was always talked about coming into the market, I think that's kind of also out of the way in that sense for the stock to perform. But I'm talking more from a performance perspective. Most of these housing finance companies should do well as the cost of funds starts kind of diminishing or reducing, possibly early next year, calendar 25.
Okay, all right. So that's LIC Housing and some of the housing finance plays. Let's look at pharma, because in today's range-bound market action in terms of the large cap space, pharma is really finding takers. Divi's been right on top. There's been some buying in Dr. Reddy's as well. The Cipla up about 1.5%. So it's overall looking fairly good. We have Ekta joining in. She's looking at a bunch of pharma companies. Ekta, on Divi's, it's pretty interesting, right? 3.5% of an up move. What's the buzz there? Anything specific with respect to any launches in the US?
Well, yes, I'll start with Aurobindo, which is in focus as CNBC TV18 has accessed the warning letter which was issued by the US drug regulator to Aurobindo's arm, Eugia's Unit 3. Now, Eugia Unit 3 was inspected from Jan 22nd to Feb 2nd earlier this year. It was issued 9 observations. Eventually, it was classified as an official action indicated status in May of 2024, which means that there is a heightened risk of regulatory action on this particular facility. The US FDA has said that they reviewed the company's response, which was given in Feb. Now, Elara has said that the warning letter points out significant data integrity issues apart from other issues in this particular warning letter by the US FDA. Timeline for remediation could be more than 18 months based on cases that they've seen in the past. New products will not be approved until all of the issues are sorted. And it is an important facility. It is estimated to contribute around 30% of Eugia's total revenues and 5% of the total company revenue. Now, the import alert, however, according to Elara, seems unlikely at this stage. And the company is also dual filing products in order to mitigate risk. Besides Eugia Unit 3, it is also being filed from the new Visakhapatnam plant that they have, and hence that is expected to mitigate risk. They have an accumulate with a target price of 1568. Now, Divi's Labs is in focus because there's a Bloomberg Law article indicating that the US FDA's approval of the generic version of Novartis's heart failure drug, Entresto, which is basically a blockbuster drug, has now been paused. Now, it's been paused because the US Court of Appeals has ordered that there has to be a pending resolution of an appeal which is filed by Novartis before things can move ahead. Why does Divi's benefit? Is because they are one of the suppliers of this particular drug to Novartis, and hence it becomes an important drug for them. We don't know the timeline in terms of approval for the generic version, but as of now, what we can say is that there is some amount of temporary relief.
Okay, so that explains it, because I remember the stock was under pressure on expectations that this drug is not going to be as big for Divi's now, but maybe some relief coming in. Thanks, Ekta, for explaining that to us, along with, of course, the other stocks in focus as well. Prakash, hi, good afternoon. Divi's, any interest?
I think very clearly the commentary is fairly positive. I mean, you can expect some of these positive triggers to come in phases, if not all on day one. And that's precisely what happens to a business or to a stock that's seen a bottoming out on most counts. So, what's happened to some of the other names, so be very clearly the largest ones, is likely to be replicated in the ones that have not seen any salience come through. So the Lupin, Ciplas, Sun Pharmas of the world have already seen a fairly significant comeback in the US. And I don't see any reason why DVs will not participate in that. There have been delays. There have been no setbacks otherwise. We've got a lag which is catching up with. So I'm quite positive on it. I mentioned that even at the time of the earnings call, the commentary was fairly robust. So the numbers didn't look very, very promising. But most large pharma names are probably still offering you some space to hide. And then you have the mid-cap pharma also joining the bandwagon, the Dishman of the world, the Syngenes, whether it's Morpin, Copra. There are lots of names that have started kind of looking up in terms of the business metrics. So interesting space, but it's a fairly large space. So, you'll probably have a huge variety of names being thrown up with every trading day.
No, absolutely. And coming back to you, Prakash, for more, but I want to play out an important soundbite. Now, speaking at a report launch of, the report is titled Net Impact of E-Commerce on Employment and Consumer Welfare in India, Piyush Goyal, who's the Minister of Commerce and Industry, said that the exponential growth of e-commerce firms in India is a matter of concern rather than something to be proud about. Listen to that comment, and then we'll bring in Parikshit to put this into context.
Are we going to cause huge social disruption with this massive growth of e-commerce? And I don't see it a matter of pride that half our market could possibly become a part of the e-commerce network 10 years from now. It's a matter of concern. But I'm not wishing away e-commerce. It's there to stay. But I don't deny that e-commerce has a role. But we'll have to think very carefully and cautiously what that role is, how that role can be in a more organized fashion. Is predatory pricing policies good for the country? When Amazon says we are going to invest $1 billion in India and we all celebrate, we forget the underlying story that $1 billion is not coming in for any great service or any great investment to support the Indian economy. How many mobile stores do you see now in the corner? And how many were there 10 years ago? Where are all those mobile phones? Will only Apple or the large retail sell mobile phones and their accessories? Of course, I don't deny that technology will play its part. Technology is a means to empower, is a means to innovate, is a means to meet consumer requirements, probably sometimes more efficiently. But we'll have to see that this grows in an orderly fashion. We will have to see that this connectivity, this convenience is citizen-centric. It democratizes or socializes the benefits to larger sections of society. It ensures that in the race for market share, and a growing market share at 27% a year, we don't land up causing huge disruption for the 100 million small retailers across the country who also serve.
Well, those are very interesting and intriguing comments coming in. Intriguing because it's no less Piyush Goyal making those statements. Now, is it just acknowledgement of the ground reality, or is it a hint to something more? Let's put those comments into some context. My colleague Parikshit from Delhi is joining in to do exactly that. Parikshit, take it away. Well, how should we read this?
Well, this is not the first time that Commerce Minister Piyush Goyal has actually hit out at some of these large e-commerce players in the country. A few years back, speaking at an industry forum, he had said that the likes of Amazon, Flipkart and big global e-commerce firms are not doing any favor to India by investing billions of dollars. In fact, he has been pushing for protecting the interests of small traders, brick and mortar stores in the country, traditional traders whom he believes and the government believes, the traders wing of the BJP also believe will be hurt by predatory pricing, discounting policies and use of data by large e-commerce players in the country. This draft e-commerce policy has been in discussion since 2016. In 2019, a draft was circulated. Since then, there have been stakeholder discussions. There have been more than 80 meetings on the e-commerce policy over the last 5 years or so. We believe that discussions were complete. All stakeholder consultations were over about a year back. The government and officials who've dealt with this policy believe that there is now consensus on how to go ahead with the policy, but a final draft proposal is now pending approval with the topmost levels of the government. Now, when is that approval going to come? No one knows. There is no clarity on that. We do see a very strong statement being made by Piyush Goyal, and that makes one think whether this policy will now receive a final approval. Well, the status is that this policy proposal is ready. It is awaiting approval. When that approval will come, no one knows. But yes, the trader community, which has strongly backed the BJP in the past, the Confederation of All India Traders, whose president is somebody like Praveen Khandelwal, a member of parliament from the BJP, from the Chandni Chowk constituency, they have strongly welcomed the Commerce Minister's statement on e-commerce.
Okay, Parikshit, thank you very much for that. So this has been brewing, festering for a while, but will the government bite the bullet, and will the draft e-commerce bill finally see the light of the day? Prakash is still with us. Prakash, this is going to spark a lot of debate, but where do you stand on Mr. Goyal's statements?
So I think you need to understand that it is a concern that he's voiced, which is fair enough, because we still have a significant segment of a market that's dependent on the mom and pop shops, and that part of the economy is something which could hurt very badly and have a cascading effect. But having said that, you contrast this with the need to set up the ONDC platform. Now, if the government were to keenly do that, that is something which is an enabler for smaller outfits to participate in the e-commerce journey rather than exclude themselves out of that. So, I think it'll probably be, it's a tightrope that the government is walking for sure, but I would believe that they'll come up with a solution that's not, retrograde in that sense, but it'll probably be more progressive, more, mindful of involving everybody, and the other stakeholders also kind of would engage. So I really won't read too much of a concern in that. How do we benefit from the stock market? I mean, it only kind of gets more players in the organized delivery space to be benefited. So, the likes of delivery and all of that, companies that are building a lot of platform and network effects, around their businesses, those are the ones that will benefit. But I wouldn't really read too much as yet till we see the policy and the verdicts thereof.
About 2%. I've got the stock up. Nykaa is its own story today because of the block trades, but delivery is down about 2%. Zomato is down about 1.25%. Prakash, before we let you go, we'll go over the policy and the draft when it comes. But in the meantime, Zomato is about 7% off its peak. Would you buy or stay away?
I think it depends on what your horizon is going to be. As I said, the journey that Zomato has cut out for itself, ahead of itself, in that sense, for the next few years is very positive. It's very constructive, but it all depends on your ability to be able to withstand that kind of volatility that will be there as the news flow goes around. Here you had a trade that happened, it was a significant trade, and there are questions being asked saying if the so-called insiders are exiting when things are looking up, what's a mismatch? So it's a question of conviction. I would definitely like to add more of it at lower levels, and I'm sure there will be lower levels because it still hasn't matured in terms of the price discovery should be. I mean, there's still lots of ifs and buts around it, but the model is, we discussed this the other day, it has its data richness and all those, the qualitative aspects apart from the numbers that will kind of always keep it at a premium valuation. So you don't expect a crash from here, but at least, some softening, and you could probably add that time. I'm not too worried. In fact, it's good if it's retraced a bit, and people who have missed out can also participate in that at lower levels.
Okay, all right, Prakash, we'll leave it on that note. Thanks very much for joining in. You have a good rest of the day, and we'll look forward to connecting again soon. Right now, a break. We come back on the other side, and we'll have Gautam Duggar joining in. It's almost curtains at the Motilal Oswal Financial Services Financial Conference. So we'll find out how the event has been, what the mood is like on India, and of course, the market.
If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women fighting for reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. My friends, when a barrier falls for one of us, it falls and clears the way for all of us.
To be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you.
Investing.
Welcome back. You've got the market, which is up 45 points now, 24,750. Gautam Dugar is with us, Head of Research, Institutional Equities at Motilal Oswal Financial Services, as the Motilal 20th Annual India Conference comes to a close later today. I think, Gautam, great to have you back on the program. Thank you for your time. You know, when we spoke with Ramdevji on Monday when the conference was kicking off, he said, well, he'd be watching on for two things, two main things. One is when will foreigners return, and if they will return or they'll be deterred by valuation still. And second is what is happening on the ground, because post-COVID recovery has been not even, it's been very varied across sectors. Why don't you answer your impressions on, with regards to both those questions?
Hi, Prashant. Good afternoon. Thanks for having me. So we'll focus more on what's happening on the ground, because whether FIs return or not, right now it doesn't seem to have a much bearing on the market. So as far as what's happening on the ground is concerned, I think two important things that I could gather from the CEO tracks as well as some of the company meetings I've had the chance to attend. Rural seems to be turning around now. There are confirmations from many sectors where they are seeing good green shoots pick up in rural consumption after last 2 or 3 years. So there is some impact of a good monsoon which is coming in. and also low base, which is helping. Plus, some of the companies will also benefit from the pricing impact that will come through from September, December quarter. Festive season expectations are building up in sectors like auto, consumer discretionary, consumer staples. So that is one element. Second, there is expectation that private capex will now start picking up. There are some signs of that happening already, gradually though, and the expectations are that they will build up further. That's what multiple corporates representing industrial segment have been talking about, whether it is green energy, renewables, or some of the traditional capex-oriented spending. As far as the first question is concerned on foreigners, yes, they are finding valuations very expensive in India. Relatively, yes, large caps are still reasonably priced at about 20-21 times Nifty, but mid caps and other broader segments of the market are very expensive, and that is what is deterring them, and which is also in a way reflected in the flows. This year's YTD flows from FI side now are down to just about $2.7, $2.8 billion versus a month back that number was about 8.5. And domestics on the other hand is chugging along very well. YTD domestic flows are almost nearing $35 billion. So that's why I said it doesn't matter as to when FI flows turn positive, because right now market is not too bothered about that particular segment of the capital.
Gautam, hi, good afternoon. Good to hear that. Good to hear that. But then how to marry this with your analysis at the end of first quarter, right? Because the fuel of every bull market, apart from money, the other important thing is obviously earnings. And then as one looks deeper into your strategy note after the first quarter, I'm looking at a couple of parameters. You know, the beat to miss ratio, which you say has turned a little more unfavorable, 43 companies missing estimates, 29% reporting a beat. And even the upgrade to downgrade number, that's very, very interesting, because 46 companies' earnings have been upgraded and 107 companies have been downgraded. So just take us through this, because you do acknowledge that earnings momentum is slowing down. Then what about the constant fuel for this bull market, the unending appetite for stocks that we have here with the domestic liquidity?
So Surbhi, if you recall, FY24, the first quarter was very strong. The last year we started at the peak as far as earnings growth was concerned, and then progressively we kept on moderating. And fourth quarter FY24 was the weakest in terms of the growth within that full year, if you compare the 4 quarters. FY25, it is completely reversed. We are starting right at the bottom as far as earnings are concerned for the year, and then progressively we are expecting the earnings to pick up. Overall, we still expect about 11% earnings growth for our coverage and 12% for Nifty for FY25. Last year, FY24, our coverage earnings were up 30% and Nifty earnings were up somewhere close to 25%. So base is quite strong, not just of last year, but last 4 years compounding also. If you see, Nifty profits have more than doubled from 3.5 lakh crore in FY20 to close to 8 lakh crores in FY24. So that's about 23-24% compounding. Yes, on that heavy base, this year's number looks slightly moderate, and it doesn't help that the year has begun on a very somber note as far as first quarter is concerned. But also remember that first quarter also had a heavy drag from OMCs. I mean, if I look at my 269 companies, the growth was just 1%. But the moment I remove those 3 companies and look at the other 266 companies ex OMC, the growth is about 12%. Right. Similarly, for mid caps, our coverage universe of close to 85 mid cap stocks reported a 5% earnings decline, which was in line. But again, in mid caps also, if I look at numbers excluding oil and gas, the growth was close to 25% for mid cap earnings for 1Q FY25, which was better than expectations. So you have to look at numbers in totality, not.
No, I'm so sorry to come in there. I'm doing exactly that. I'm only sticking to the one big number that you gave us, which is 10 to 11% earnings growth for the full year, right? Assuming, like you're saying, that the second half is going to be better. Yeah. But if I look at 10 to 11% earnings growth full year for a market trading at almost 20 times, bordering 21 times, then what are we really talking about? That valuation question which Ramdevji sort of raised, it becomes a huge burning question, does it not?
So Surbhi, 1 year's growth doesn't decide P multiple of the market. Last year we had a 30% earnings growth. Market didn't trade at 30 times for Nifty earnings, right? So 10-year average is 20 times for Nifty. Right now we are trading close to 20.5 times. If this year's earnings growth is about 11-12 and FY26 our expectation is about 18%, then we are talking about a compounding of 14-15%. So I agree that valuations are not leaving too much room for safety, even for large caps. So it is important that market spends some time in this range, consolidates, time corrects. The problem, Surbhi, is in the mid and small cap part of the market, where valuations are just too expensive. So mid cap index, as per our numbers, is trading at 35-36 times 1 year forward. So that is a big premium of almost 75-80% premium to Nifty, which is unsustainable in my view. So that is an index where there is a problem. Small cap index trades at 27-28 times. That is again an index where there is a problem because usually it trades at 20-25% discount to Nifty. Right now it is trading at a premium. So those are bigger concerns rather than just Nifty. And 1 year's earning will not change multiples much. What if the next quarter earnings are of 15%? Right? If the full year average is 11 and first quarter's number is 4%, that basically means that the rest of the 3 quarters markets are expecting the earnings to pick up. You can build the narrative either ways, that earnings are finally picking up after the worst quarter of the year is behind. Or you can say that for the current valuation, one particular quarter numbers are very bad. So these valuations are not sustainable. So that is something which the investor has to grapple with.
Absolutely. Take your point, and you answered, that because next year you're expecting the growth to pick up to 18% FY26. So at an average, I guess the point is that we're still looking okay. Reema.
Gautam, hi. So just want to drill down to individual sectors. So very recently, you all had upgraded IT to an overweight, citing an expected recovery. Now, there is a question mark on the strength of the US economy. Whether or not it goes into a recession, there are telltale signs of a slowdown. So based on your conversations with technology companies in the conference, is there any risk to the expected recovery in IT stocks in the growth rates for this year, next year? Because the IT index has given a 25% return in the last 2.5 months.
Yeah, Reema. So IT stocks have done really well. We've had an underweight for a long time. We upgraded it to overweight in July. Not on the basis of any big pickup in earnings. The thesis behind our upgrade and moving it to overweight in our model portfolio is twofold. The sector has underperformed for too long. So relatively the valuations vis-a-vis other sector in the index were looking relatively better. Second, we were trying to move element of defensive component in the model portfolio slightly higher, given the concerns on the broader market valuations. So those are the two reasons why we moved IT from underweight to overweight. As far as the commentary of IT companies are concerned, I think we've all, again, just recently seen in earnings season also, there's not much change as far as commentary at our conference is concerned for IT sector. Everybody's in a wait and a watch mode. People have a lot of debates that are going on the quantum and timing of the US Fed cuts, as to how that eventually pan out for the US corporate spending on technology and digitization. So there are a lot of moving parts over there. Easy money has already been made in IT. So like you rightly mentioned, in the last couple of months, IT sector, especially the large cap, which were languishing for a very long period of time, they started moving up and now they are taking a breather. I think the next catalyst again would be as we move closer to the 2H FY25, how does the guidances of various large IT companies change? I think that will now decide the next move in the IT stock. I expect them to remain in a very tight range now because the market has rewarded them ahead of the recovery.
Got it. Gautam, thank you for joining us. Before I let you go, let me ask you this, slightly offbeat, but 3 days now you've been there meeting so many people. Tell us something that really sort of, made you go, wow, I didn't know that. You don't have to name who you heard it from, but was there a wow moment? Were there many?
There were many wow moments, especially in our CEO tracks. There were 15 back-to-back CEOs, representing almost all segments of the economy. For me, particularly, the most unique and wow moment was the Zepto CEO track, because the kind of insights our investors gathered from that CEO track was pretty rich. And the sheer fact that they're growing at a pace in quick commerce, within 2 to 3 years, they've reached a size which is unheard of. So there were a lot of granular insights which he shared, which definitely was the highlight of the conference for me.
And we will read about it in a report from you, Gautam, which which would be as insightful. Thank you very much for joining us. Great conversation as always, and a wonderful conference there at Motilal. We'll take a quick, we'll take a break. We'll focus on Nykaa, which is basically up 10%, fresh 52-week high. Mangalam is here to tell us what's sort of behind the move. Mangalam, over to you.
Well, a lot of excitement around Q-commerce and e-commerce. I presume that's something that's doing well. And we were, talking about how skincare as a category has been doing extremely well in the fashion space. The Masstige category, which is a premium, bridge to premium sort of category. And the stock today is at a 52-week high. There were large trades of almost 0.1% equity worth nearly 60 crores between 11:40 and 12 p.m. today itself. And the company is trading at, or the stock is trading at around 12 times average that we've seen. That's about today. It was just last week that they reported their numbers, where there was a 23% revenue growth in the first quarter, 30% EBITDA growth, net profit on a low base actually tripling, almost 14 crores versus 5.5 odd crores itself. The beauty business did well, 23% revenue growth with an improvement in the margins as well, whereas the fashion business grew 21% on a revenue front and also saw contribution margin improve by about 587 basis points. The company's been focusing on operational turnaround out here and increasing the share of revenues that they get from their own brands, along with the scale of their B2B vertical as well. So there have been a lot of triggers for Nykaa going forward. Are all of them falling into place or not is something that we're looking at. But seems like a lot of volume which is being traded on the stock today is betting on things to fall in place.
Okay, thank you very much for that. Now we'll get into that break. We'll come back and get in some technical calls from our experts. Stay tuned.
Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will come together and declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us. Let us fight for the ideals we hold dear, and let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Again, what her appearance is just a preview of coming attractions of Thursday night. You can feel the electricity. It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created because it's all about the future and she embodies it.
Oh, I think it's great. People really get excited when something happens they didn't expect and it makes them happy. So we're a happy group.
What kind of thing we accumulated at sub-100 level after the first correction. I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today, but significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices, even in trend, has reached a level which is very difficult to understand. But
investing.
Welcome back. Well, we are down to the final 15 odd minutes of trade. So let's look at some final strategies that we could consider. By the way, the market's having a nice swing right now. In fact, this is fresh high. Just breaking through that 100-point band that we were discussing earlier on. Mitesh is back with us. Mitesh, I remember we were talking about this. You were saying the Nifty is not making much headway, but this is changing quite quickly. Does it get above any of the critical levels?
Well, 685 was 685 was the gap. We have kind of managed to stay above that, but then there's another gap which happened on Friday, and the higher point of the gap was 850 zone. So maybe we'll head towards that, but I'm not looking again at a big expansion happening. So that is kind of making me slightly quiet when it comes to taking an index forward. And therefore, I think trading the stocks. So a couple of FMCG names are looking good, which is Dabur and HUL. So I suggest a BTST on HUL. Keep a stop at about 27.72 and targets of 2020. And Dabur is the other one. I think that the stock will do well. So BTST has the stop at 629 for targets of 642.
Okay, got that. We actually will have Hormaz, I think, join in on Mazgaon Dock in just a bit. Mitesh, in the meantime, we'll discuss fundamentals. We've spoken to the company as well today. But in the meantime, if you could just give us levels on Mazgaon, because it's gone all over the place. The decline yesterday, the revival today. So, Mitesh, any fresh levels to track? Do you see a trade here, Mazgaon?
See, Mazgaon, in fact, did bounce back very well. And I still believe that the structure is slightly weak. Because after many days of decline, this looks like a one-day pullback. A couple of days of pullback from oversold levels. But the moving averages come in at 4,800, and then there's a gap area at 4,930. So maybe there's some more upside left from a trading point of view, but I think around those levels, which will be much significantly lower than the earlier highs, you will see supply coming again.
Okay, got that. Thank you, Mitesh, very much for that context and the advice today. You have a good afternoon, and we'll connect again tomorrow morning. Speaking of Mazgaon, let's bring Hormaz back in. You remember yesterday on this show, you heard Hormaz talk about this ICICI Securities report, which was raising all kinds of concerns, a substantially lower price target that we heard from the management today. Hormaz, what have you made of all of the up and down on shipbuilding stocks?
Lots of questions that were around Mazgaon Dock, and actually for the entire shipbuilding space as well. The management today was candid enough to answer all of these questions pertaining to the slowdown in the order book, the margins, and all of these aspects of the company itself. And with regards to the order book, it mentioned that the current order book is at around 40,000 crores. It is expecting substantial orders to come in the next few years. And he was also, the CMD mentioned that by the time the current order book is liquidated, by the time they execute this current order book, they will have substantial new orders already in place. So that order book will keep getting replenished as time goes by. He's expecting new orders worth 27,000 crores for 3 submarines that he's confident of winning in the near future, is what he mentioned. But the bigger aspect though was on the margins. And if you know that Mazgaon Dock reported margins of 27% in this quarter, and that is a significant jump from the 8% margins that they had reported in the same quarter last year. But that was also because there was a significant reduction in costs this quarter, and that is what aided the margin jump. And the CMD also mentioned that these margins will not sustain as we go forward, irrespective of the order book mix. But as a healthy level, he mentioned that 10 to 12% is a healthy level for FY25 that the company is working with. And it is similar to what ICICI Securities also said, that the margins will taper off as the order book keeps getting executed. Let's listen in to what the management had to say this morning.
We have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. There is an order for P75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazagon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. We are out of 4 destroyers, we have already delivered 3, and we are scheduled to deliver the 4th one also this year. So this project would be closing. So any cushions which are kept with respect to liabilities that may arise. We are a cash surplus company. There are no working capital concerns, and there are no liabilities in the form of debts or any loans. So with respect to the investments also, there is a sizable accrual in the form of interest income. And as far as the projects are concerned, projects may reasonable margin would be something around 10 to 12%. And taking the repair verticals, the offshore projects, which we have now started in a significant manner, without assigning any numbers, I would say that anything about 10%, 12% would be a reasonably healthy margin.
Well, that's the big stock of the day. Mazagon Ship up 5% for the year. Now it's up close to about 95%. So the bull charge continues. Get into a break. We'll come back with more on the markets on the other side. Stay tuned.
In the company's performance as well as in the price.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So,
Welcome back. You're with us and we're in the final leg of today's trading action. The market is actually looking quite good, 80 points up on the Nifty. So it's been a late surge and a big one on the headline index as well. Let's now get you to another CNBC TV18 exclusive. Expect Ambuja Cement's volume growth to outpace the industry at around 8%. That's the word coming in from Vinod Baheti, CFO of Ambuja Cements. Earlier in the day, Nigel caught up with him to discuss a whole range of issues, including possible consolidation and, of course, whether there's going to be a corporate restructuring within the Adani cement segment. Let's take a look at some of these sound bites.
In terms of the fiscal, let us say we will discuss about the balance part of the fiscal. The balance part of the fiscal, I believe that it should grow between 7 to 8% kind of thing. So far as Ambuja is concerned, I strongly believe we should be closing more than 8%. So we will be that way outpassing the industry. So far as if I look at the larger horizons in next 5 years or 10 years, this industry I strongly believe should be growing above 8 or 9%. As of now, our market share is overall around say 12 to 14%, and we will be moving to 20%. And if I see an interesting situation here, that we are the ones with an expansion of our capacity to 140 million tons, we will have an improved market share compared to others who are also expanding, but they will be retaining their market share. So when I look at say from 14 to 20%, I have a 6% improvement in terms of my market share at 140 million tons capacity.
That's Ambuja Cement for you. Let's invite Mayuresh Joshi, Head of Equity Research at William O'Neill, on the show now. Mayuresh, come in on cement. What you heard from Ambuja Cement, I mean, he's not talking about that there will be a corporate restructuring, but he did say that it's the ideal situation. Where do you stand on cement, and particularly this entire Adani group of cement companies?
Afternoon, Rima. No, I think we remain constructive on the sector as a whole. And our estimates are that in the second half, there should be a significant amount of demand-led volume recovery. And therefore, operating leverage should play out very meaningfully on a lot of well-managed cement balance sheets. And therefore, I think both the Adani Group stocks, ACC as well as Ambuja Cement, are attractively placed within this sphere. Having said that, the expectations in terms of volume growth remains decent for both these companies. The expectations in terms of input cost should be relatively stable. And even if there is some element of marginal increase, it should be backed by demand, which means it should be a good pass-through in terms of ultimate realizations and end product prices as well. The distribution reach that they probably got and the location of their various plants from a geographical perspective also gives them that added advantage. So I think remain positive and constructive on the sector. ACC Ambuja is something that we will remain positive within the cement.
Okay, that's on the cement side of the market. Just taking a look at the up move now on the Nifty in this last leg. Some of the other names that have joined the fray include Titan. Pharma anyway was doing very well from the morning. So Divi, Cipla, they're right on top. Life insurers have had a second good day running on trot. And then you have some other names like Asian Paints, HUL, etc., Nestle, ITC. So a lot of the FMCG names catching up with their pharma counterparts. Mayuresh, hi, good to have you on the show. Life insurance, there's been a lot of buying, especially last couple of days, sustained buying. What do you think of the space, and do you like anything here?
Afternoon, Surabhi. Again, I think we continue liking SBI Life as one of the top picks within this space. With the changes and tweaks that have probably happened in last year's budget, obviously a lot of product mix changes have probably happened. And those product mix changes are now getting reflected in terms of better sales. Having said that, I think the margins of these new products are relatively lower. Therefore, you'll be finding a situation where the VNB margins will be a tad bit lower in the next few quarters because of the product mix. The renewable premiums also should be steady state for a lot of these companies going forward. And the operating expenses, including the marketing commissions, albeit on the higher side for players like an HDFC Life, ICICI Group, should get contained as these products mature over the next few quarters. So I think a good space to be in. SBI Life, however, Surabhi, I think ticks all the check boxes that we're probably looking at in terms of VNB margins, in terms of the product mix, in terms of the bank insurance with a behemoth like SBI by their side. And therefore, I think the operating expenses and marketing commissions are still in higher single digits compared to the rest of the pack, which makes it a little bit more attractive in terms of embedded value growth going forward. EPS rating, RS rating, and satisfies most criteria that we've set out on our cancelling parameters. So I think SBI Life remains and would remain a top pick in this space.
By the way, Tech Mahindra has now moved to the day's low. Remember, there's a CLSA downgrade, and Tech Mahindra is saying that the stock has been an outperformer. It's up 25% year to date, outperforming the Nifty, the Nifty IT index, and plus, the global telecom companies capex has remained unchanged this year, and therefore revenue growth may be a bit muted. And it's not just Titan, even Kalyan Jewellers has seen a spike. So generally, all these jewelry companies are inching up. Kalyan Jewellers is now up close to about 2.5%. Mayuresh, quickly between Senco, Kalyan, Titan, which one would you prefer?
I think we have a hold rating on Kalyan, Viva. The dynamics for the sector, again, looking good. The organized players should benefit significantly with the moves that we've probably seen, both from the regulatory angle and the budget announcements that have now also happened in terms of slashing off custom duties as well. That does augur well for organized players. Kalyan's dynamics, both in terms of margins, performance stability, the ROE improvement, the deleveraging on the balance sheet, and the opening of new stores both in India and South and in the Middle East, and stores outside the South, augurs well in terms of good growth going forward as well. So Kalyan is where we continue our movement.
Got that. Mayuresh, in the afternoon, I was talking to, I picked up the phone, I was talking to an investor, and I sounded a little worried. So I asked him, why are you sounding, you sound a little worried. So he said, well, all my stocks are performing so well. I don't know what to do. I mean, it's that kind of a market, isn't it? It's so broad-based, and it's really quite something. When you look at the screen, just a long list of really buzzing, volume-led movers. It's not narrow at all. So that's absolutely great to see. Mayuresh, stay with us. We're going to come back to you on the other side. But let me just quickly wrap up things here as far as the market action is concerned. Just a minute to go. The Bank Nifty is going to... Actually, it could have ended in the green, but not quite, right? So we'll end about 50 points lower. It was 0.1%, nothing. And the Nifty will end 80 points higher. So it's basically, market in three stages: a gap down, then a pullback, and then, of course, a late surge starting at about 245. That's what really came through. Small cap index about 1% higher. Sectorally, pharma did well. And IT sort of, I think, held back. But it's done very well over the last 3-4 odd trading sessions or so. That's the Nifty IT index on your screen right now, guys.
Okay, taking it to individual large cap action. Divi's Laboratory, top Nifty gainer, 3.7% up. Titan moved up smartly, 2.5% gain. Life insurance names like SBI Life, HDFC Life, FMCG active, with HUL ITC notching up a gain of 1.5%. On the way down, the top loser is Tech Mahindra, followed by Tata Steel, 1.25% lower. And in the banking space, the drag came in from HDFC Bank and ICICI Bank. Those two large cap private sector banks down 0.5%.
Okay, let's talk about some of the mid-cap high flyers. The big gainers of the day included Nykaa, 9.5% up. There's, of course, PNB Housing on the back of those block trades that happened, 9.5% on that stock as well. Lux Industries has had another good day. If we talk about some of the other, main movers, the shipbuilders, we've been talking about them. Recovery on many of the names, including a Mazgaon dock, Cochin Shipyard, all of them on the upside. Genus Power, more order wins being announced, 5% on that stock. Cyient and Cyient DLM were two stocks in focus, with Cyient being the likely seller in that big block that happened today. We'll have, of course, the details later this afternoon. Cyient was up about 4% as it's believed to be getting in that money. Cyient DLM down about 1.5%. But overall, a very good day for the broader markets, with over 1,600 stocks on the advancing side. With that, it's a wrap on this edition of Closing Bell. Thank you very much for being with us. Markets Forward will take the action ahead.
What you have to be careful about.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we are number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings.
A sharp recovery in the last hour helps Nifty and Sensex end in the green. Banks led from the front. Nifty Bank recovers 300 points from lows. FMCG stocks see buying.
Ambuja Cement CFO Vinod Baheti says a merger of all cement businesses under one listed entity like Adani Cement would be the ideal way forward. But adds there are no immediate plans to merge ACC Ambuja. Adds that Ambuja will look at more acquisitions to fuel growth, but only if the price is right. That's an exclusive.
PNB Housing Finance rallies 7% after nearly 5% of the company's equity changed hands in a block trade. Sources say that General Atlantic Singapore Fund is the likely seller. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as you gear up and prepare for the next trading session. I'm Prashant, with me, my colleague Reema Tendulkar. Reema, hi.
Hi, and we're going to be with you, both of us, for the next 20 minutes with all the big news, the big developments in the Lal Street. We'll get you the top corporate voices of the day and what to watch tomorrow. But first, the day's market action. It looked like a quiet, slow day till the last 1 hour when things suddenly picked up.
And everything turned around and looked a lot better, absolutely. But actually, if you didn't follow the markets today, it was, basically there was a gap down because global markets were lackluster. But immediately there was a pullback. So by 10:30, you were in the positive. But then from 10:30 to about 2:45, the Nifty spent, almost at a sort of average rate of about 24,730 or so. Starting 2:45, there was a surge. And there was a 40-point surge. And that's essentially the total 70-point gain that you see by the close of it. So that's essentially the market action on the Nifty. At 2:30, we were looking at the Nifty Bank and saying, well, what if the Nifty Bank also participated? So a lot of that surge which came towards the end came in through banking names, banking stocks. The Nifty Bank, not quite in the green, but ending almost absolutely flat, about 50-60 odd points lower. Small cap index, it gained about 1%, actually over 1%. The micro cap index was higher, the mid cap space was up. And it's a really broad-based rally that we've seen once again here, so many stocks really across sectors, cutting across sectors and all kinds of themes, buzzing with a lot of volume. And Hormuz will be highlighting some of that in terms of, the wrap, stock-specific wrap, which we will put out in just a bit. Rima.
The mid-cap index also, as you pointed out, did well. We had a very strong advanced decline ratio at about 2 stocks gaining for 1 in the red. And in terms of individual sectors, which led from the front, pharma was a big mover. Other than that, FMCG names, so the ITC, HUL, IT didn't do too much, and banks dragged their feet. So that was the action in terms of the sectoral moves. We'll also tell you the individual stock movers and shakers of the day with Hormuz on the show. We'll zero in on individual stocks like PNB Housing, Mazgaon Dock, Aurobindo Pharma and Divi's Laboratory on the show later. And finally, we'll tell you the key events to watch out for tomorrow. But first, it's over to Hormuz now for the big movers and shakers of the day. Hormuz.
It was a sluggish day of trade today, barring the last few minutes, of course, and that was because of the expiry-related moves on the Nifty Bank. But of course, there were plenty of movers within the broader markets, and one theme that did well, though, were consumption-linked names. Not necessarily FMCG, but consumption-linked names. Nykaa ending not at the highs of the day, but still at a 52-week high, 9.5% higher today. And almost all of these companies, Jubilant Foods, Patanjali, Varun Beverages on a positive brokerage note, ascribing a target of around 1850, that ending higher as well as United Breweries having a good day in the office today. What also had a good day were pharma stocks, and some of them were in the pink of health today, barring Aurobindo, of course. That Divi's was among the top gainers on the Nifty today. Granules, Glenmark continues to move higher after its earnings and the management commentary as well for the road ahead. Abbott India ended at the highs of the day, as did Biocon, seeing a sharp spike towards the close of trade. Stocks that moved well on the back of volumes, and as Prashant was also highlighting, Century Textiles was one of them. At one point was up almost 11-12%, still ended 7% higher. Alok Industries, PNB Housing after the block deal, but Just Dial and Castrol making a move again, another 7% today, nearing 270 now on very strong volumes. A couple of other stocks that I wanted to mention, of course, Mazgaon Dock, we'll talk more about it. The management spoke to us today. The 3-day sell-off recovered some bits of yesterday's loss, not fully, but it did snap a 3-day losing streak today. And lastly, the stock that I wanted to mention about that ended on the losing side in today's session was ICICI Securities after the delisting approval that the NCLT Mumbai gave it. 7.5% lower, ending at the lowest point of the day. 67 shares for shareholders of ICICI Bank for every 100 that they hold. Back to you guys.
All right, Hormuz, thanks very much for that. That's a sort of comprehensive wrap of things. Mayuresh Joshi is with us of William O'Neill. Shrikant Chauhan is also with us of Kotak Securities. Gentlemen, good afternoon. Good to have both of you here. Mayuresh, I mean, it's a good-looking market, and you can hold on to what you already own, and it's chances are you're making money on those, or you try to look for more. What are you doing, Mayuresh? And it's a pretty interesting market. We can complain about levels and how fast it's happening, but it's happening.
Oh, absolutely, Prashant. And we are being a little bit more selective now. You let your positions hold on, as you rightly said, and then put your trailing stop losses at higher levels. If they get taken out, so be it. But on the buying side, being a little bit more selective. Discretionary, specifically from consumer discretionary, Mrs. Vectors is something that we like at Markets with India. Our take is that the kind of expansion plans that this company has in place at this juncture and the expectations of reasonable volume growth, both from the HoReCa segment as well as the retail segment, specifically in the premium category that they are present in, should augur well. Margins should be relatively stable going forward as well. The other one that we are also liking at this juncture is Praj Industries. Our take is the entire story that evolves around petrol blending. As it starts evolving even more to diesel blending, ATF, marine fuels, Praj has most ingredients in place. Along with that, their engineering division, both in terms of water management, their high purity segment as well, and the export markets that they cater to, with a very, very strong balance sheet and order book, augurs well for earnings. So very selective in terms of our EPS, RS shortlist that we do at Markets With. But yes, good market, as you rightly said, Prashant.
Okay. Shrikant, very quickly, does the last hour surge open up more bullish opportunities for tomorrow?
Yeah, I think Nifty is doing well, but today the best part that we saw in the end was Bank Nifty, which recovered very well from the lows, and 50,400, 300 was very good support for the Bank Nifty, and from there only we saw recovery. So I am of the view that from here onward for next few days, we are going to see outperformance from the Bank Nifty, and in that I think we can see the levels of 52,000 in the near term. So Bank Nifty is has made a final bottom somewhere close to 50,200 levels, and Nifty is I think heading for the next levels of 24,950 or maybe 25,000. So yes, there is upside, but we need to be more and more stock specific in this market.
There is a lot to be about. The thing is, the breadth of the move is such that you can be specific about lots of stocks. You can choose to be specific about lots of stocks, right? Srikanth, any specific trades are straight out of the way before we ask you about specific names?
Yeah, I think in this market, very selective stocks, they are doing well, but they are doing really well. And in that, if you are there, then you can make killing on intraday basis. In that, we like Bharat Electronics, which is currently around some 305, 306 levels. Today, we saw a buying interest in almost all the defense companies, but this one is was showing some strength in the second half. And based on its closing, I think it is heading for the levels of at least 335, 340 sort of levels in next few days. So Bharat Electronics is a buy at current levels. We also like Biocon. Today also the stock did well it was around some 355, 356 levels. But based on its technical formation, I think the stock is heading for the levels of at least 380, 85 in next 1 or 2 days of time. So here also we have a buy view with a stop loss of close to 340 on the downside.
Okay. All right. So we got a couple of stock ideas coming through. BEL, Biocon, Bector Foods earlier from Mayuresh. We'll talk about more names. Let's talk about some individual movers as well. PNB Housing rallied 7% after a large block deal which took place. A large investors, sort of a kind of a clean out trade as they call it. General Atlantic is the investor and is a likely seller. Abhishek is here with details. Abhishek, over to you.
Well, sources do tell us that General Atlantic Singapore has sold stake in PNB Housing Finance. So the last trade was about 1.4 crore shares, which forms more than 5% of their equity base, has exchanged hands in block trade today. So floor price was set at 775 per share, which was at a discount of close to 4.5% to yesterday's closing price. However, the trade took place at 803 per share, which is 3.5% above the floor price. So as you mentioned, it's a clean out trade. The entire stake has been sold by General Atlantic, and what sources do tell us that there are good names in the buyers list, largely by domestic, and there are not much of slippages in this trade as well. So it's a clean out trade. The sole BRLM to this was IIFL Securities. Back to you.
Thank you very much for that. The sector which was buzzing today and significantly higher was the pharma sector. US drug regulator has issued a warning letter to Aurobindo Pharma's Eugia Specialties unit. So that stock was down 1.5%. But Divi's Laboratory lit up the charts with a near 4% gain after the US court stayed an FDA approval for a generic version of a Novartis' heart drug. Divi's benefits because it is a supplier, an API supplier to the patented Novartis drug. Ekta joins in for both those two details. Ekta.
Well, yes, I'll start with Aurobindo, which is in focus as CNBC TV18 has accessed the warning letter which was issued by the US drug regulator to Aurobindo's arm, Eugia's Unit 3. Now, Eugia Unit 3 was inspected from Jan 22nd to Feb 2nd earlier this year. It was issued 9 observations. Eventually, it was classified as an official action indicated status in May of 2024, which means that there is a heightened risk of regulatory action on this particular facility. The US FDA has said that they reviewed the company's response, which was given in Feb. Now, Elara has said that the warning letter points out significant data integrity issues apart from other issues in this particular warning letter by the US FDA. Timeline for remediation could be more than 18 months based on cases that they've seen in the past. New products will not be approved until all of the issues are sorted. And it is an important facility. It is estimated to contribute around 30% of Eugia's total revenues and 5% of the total company revenue. Now, the import alert, however, according to Elara, seems unlikely at this stage. And the company is also dual filing products in order to mitigate risk. Besides UGR Unit 3, it is also being filed from the new Visakhapatnam plant that they have, and hence that is expected to mitigate risk. They have an accumulate with a target price of 1568. Now, Divi's Labs is in focus because there's a Bloomberg Law article indicating that the US FDA's approval of the generic version of Novartis's heart failure drug, Entresto, which is basically a blockbuster drug, has now been paused. Now, it's been paused because the US Court of Appeals has ordered that there has to be a pending resolution of an appeal which is filed by Novartis before things can move ahead. Why does Divi's benefit? Is because they are one of the suppliers of this particular drug to Novartis, and hence it becomes an important drug for them. We don't know the timeline in terms of approval for the generic version, but as of now what we can say is that there is some amount of temporary relief.
So a bunch of pharma names there in focus. Srikanth, you want to take a shot at any of them? How do they look? Divi's, Dr. Reddy's, Aurobindo?
Yeah, I think so, like in this space, Divi's looks really a strong candidate to buy for because it is in the process of crossing its previous high. Currently, it is around 4,900 levels, but the way there is like volume expansion and price pattern, I am of the view that it is going to surpass its previous high. So it's a buy at current levels. We can keep stop loss somewhere close to 4,700 levels. But if there is a positional view, then I think it is going to surpass its previous high, and maybe we could see the levels of 5,800 or 5,900. We also like Lupin Laboratories. There also we are bullish, and the stock is like very close to its all-time highest levels. And crossing these levels after a period of 10, 12 years, it clearly indicates that the stock is having a lot of strength. And the next level to watch out for would be 2,500. So there also we are bullish, and I think Lupin and Divi's should be on the watch list.
Lupin and Divi's Laboratory. Now let's talk about the shipbuilding stock, Mazagon Dock, a stock which has nearly doubled in this year itself. There was an ICICI Securities note which came last week, which actually slashed the target price by nearly 77%. They gave it a sell rating, and the street was concerned. So earlier today, we had a chat with the management, asking him about the margins, the order book, how the order book will be executed. Hormus is now joining in to tell us what the management had to say and if it allayed all the street concerns.
It did to a certain extent, because the stock did recover some of the losses that it had over the last 3 trading sessions. There were lots of questions around the management over the company, its outlook, the order book, and the management answered most of them. He mentioned, the CMD, in a conversation with us earlier this morning, that the current order book is around 4,000 crores and they are 40,000 crores actually, and they are expecting substantial orders to come in the next few years. And he spoke of that submarine order in particular, where they are expecting orders worth around 27,000 crore worth of 3 submarines in the near term, and that may happen as soon as this financial year itself. But on the margin front, which was the big concern, that they reported margins of 27% this quarter. The management said that these levels of margins will not be able to be sustained, and they will taper off. And there is something that ICICI Securities also highlighted in its note, that they will taper off as the new contracts get executed. And the management said that for FY25, a healthy margin range should be around 10 to 12%. So questions answered on the order book and the margin front as well. And it seems that the street does take cognizance of that, stock seeing some bit of recovery from oversold levels. And listening to what the management also had to say.
We have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the order, the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. There is an order for P75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazagon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. we are a cash surplus company. There are no working capital concerns, and there are no liabilities in the form of debts or any loans. So, with respect to the investments, also there is a sizable accrual in the form of interest income. And as far as the projects are concerned, projects may reasonable margin would be something around 10 to 12%. And taking the repair verticals, the offshore projects, which we have now started in a significant manner, without assigning any numbers, I would say that anything about 10%, 12% would be a reasonably healthy margin.
You know, one of the interesting things which I think there was a bit of uncertainty, and it still is, because that big 43,000 crore order which has to be decided, all of it will go to one person. I mean, there are two bidders in the fray. So there is L&T along with a partner and Mazagon along with a partner. So it will go to either Mazagon or to L&T. I mean, that's essentially the nature of the contract. And that will only be decided sometime next year. And that's, you know, the current order book is 40,000 crores and this bid is for the value is 43,000 crores. So I think that is still there. I mean, as something, although the management, of course, sounded very confident, which they should. But Mayuresh, any thoughts on Mazagon or any of these other defense names from here?
So, Prashant, I think the structural story continues, no two ways about it. All the managements are sounding sanguine in terms of their order books. They're executing well so far. The margins at which these orders are coming will normalize going forward as well. But because of their execution track record so far, I think that has given the street a lot of confidence in terms of earnings being able to sustain. However, I think our take in terms of the RS rating, which has deteriorated significantly, specifically for a player like Mazagon, the concern lies on two counts. One, the order book itself and the execution thereof. You probably need to increase your capacities quite significantly, either through a greenfield or a brownfield mode, if you have to compound your earnings in a significant fashion to probably justify your valuations, and valuations from a 2-year forward rolling perspective. And the second perspective, Prashant, is that if any quarter or two, the execution parameters get missed, I think there can be a huge impact in terms of annualized numbers that come through in terms of the earnings per share. And therefore, I think our take is we're advising investors at our global level as well to probably look out and have some profits taken off from some of these shipments.
Gentlemen, thank you very much for joining us on the show. We need to get into a short break. We'll come back with the top corporate voices of the day and the events to watch for tomorrow.
A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Welcome back. Let's get you some of the top corporate voices that we heard on the channel through the course of the day. And we'll start with Raymond. The management was on and they said that their lifestyle business would be listed in the next 2 to 3 weeks. They added that the first quarter is usually a weak one. The company is expecting good demand over the wedding season, which is over the next couple of months. The management remains optimistic that clients would make a shift from Bangladesh to India for textiles due to the ongoing crisis there.
Meanwhile, the management of Akzo Nobel said they've seen better demand in Q2 versus Q1 so far. The firm also expects double-digit volume growth and mid to high single-digit revenue growth this year. They added that they're gaining market share over the last few quarters and they're targeting to cross 25,000 outlets from the current levels of 22,000 stores.
Okay, well, some commentary coming in from companies that we had today. Well, let's now go across to Mangalam, who's standing by with a quick run-through of the events to watch out for as we return tomorrow. Mangalam, over to you.
Well, tomorrow's the Thursday, so the first thing we watch out for every Thursday is the Nifty weekly options expiry. Then we have the US Fed July meeting minutes due tonight as well, so the market will be reacting to that tomorrow. Powermech, the board meets to mull bonus issue of shares, so we'll keep an eye out on that stock as well. From the Nifty pack, there are a couple of important annual general meetings, the likes of Hindalco and Eicher Motors. Any sort of speeches coming in from the leaders out there is something that we will most definitely stay tuned to. In terms of the US data tracker, you have the initial jobless claims and existing home sales data coming out tomorrow ahead of the big, Jackson Hole symposium speech of Fed Powell on Friday. So those will be important data points to monitor. And then we also have minutes coming in from our own RBI's MPC and the European Central Bank, which we will take cognizance of.
All right, Mangalam, thank you very much for that. So that's essentially stuff in focus tomorrow. It's a wrap on this edition of Market Forward from Rima, me, everyone on the team. Thank you very much for staying with us. News and updates follow in just a bit.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. A late recovery in banking stocks helps the market end with modest gains after a range-bound session. The Nifty gets a firmer grip on 24,770 as the indices end at the day's highs. Ambuja Cement CFO Vinod Baheti says a merger of all cement businesses under one listed entity like Adani Cement would be the ideal way forward, but adds there are no immediate plans to merge ACC and Ambuja. Says Ambuja will look at more acquisitions to fuel growth, but only if the price is right. That's an exclusive.
Are we going to cause huge social disruption with this massive growth of e-commerce? And I don't see it a matter of pride that half our market could possibly become a part of the e-commerce network 10 years from now.
Commerce Minister Piyush Goyal raises the red flag on the rise in predatory pricing and the negative impact of e-commerce on India's retail sector. Questions if investments made by big foreign players like Amazon support the economy. Sources say that while discussions in the draft e-commerce policy have been done, there is no immediate timeline for approvals. Outgoing SEBI Chief Dinesh Khara advises banks to strive for a balance between margins, asset quality and growth. Speaking just days after the Finance Minister asked PSU banks to organize special drives to boost deposits, Khara tells CNBC TV18 that tax efficiency determines which financial instruments are the most attractive. The Income Tax Department identifies IVF clinics and medical colleges as sectors that could see unreported or underreported cash transactions above 2 lakh rupees. The new action plan proposes extra vigil and a verification process to examine such transactions and ensure accurate reporting. Jewelry brand Joy Alucas plans to open over 50 new stores and drive revenues from 25,000 crores to 50,000 crore rupees in 6 to 7 years. The chairman and managing director tells CNBC TV18 the company will focus on organic growth for 2 to 3 years before launching an IPO. That's another exclusive. EdTech giant Byju's founder Byju Sri Ravindran blames litigation by foreign creditors for employees not being paid July salaries, assures staff of prompt dispersal as soon as the founders regain control of the company and its bank accounts. Claims he's already lined up investors to help the company turn around. CBI questions the former principal of RJ Kar Medical College for the 6th consecutive day. May subject him to a polygraph test. Resident doctors continue agitations across the state. Health services in Bengal remain impacted as junior doctors continue their strike for the 13th day. Prime Minister Modi embarks on an official visit to Poland and Ukraine, where he will meet Polish President Duda and Ukrainian President Zelensky. Says he's looking forward to discussing a peaceful resolution of the Ukraine conflict. U.S. Secretary of State Blinken departs from the Middle East without securing a ceasefire deal between Israel and Hamas. Tensions between Israel and Hezbollah intensify. Hezbollah retaliates to Israel, bombing its weapon storage facilities in Lebanon by firing over 50 rockets into Israel-occupied Golan Heights, hitting a residential area.
America's ready for a new chapter. America's ready for a better story. We are ready for a President Kamala Harris.
Former U.S. President Barack Obama addresses a charged crowd at the Democratic National Convention, calling Kamala Harris the next president of America. Says America needs a president who actually cares about the millions of people who wake up every single day to do thankless jobs. He called Donald Trump a 78-year-old billionaire who hasn't stopped whining about his own problems. Well, before we get to all of that, here's a quick rundown of the market action today. Equities remaining in a tight range through the day in the absence of any fresh triggers. Though the Nifty did manage to keep its head above 24,700. That's where it closed for the day, 71 points higher on the Nifty. The Sensex closing about 80 points higher. A late surge in banking stocks in the last hour of trade helped indices break out of the range that we were in, and the indices finally closed at the day's high. Just to give you a sense of the action in the banking stocks, although the Nifty Bank closed lower, down by over 100 points, it did recover more than 300 points from its intraday low. So that was the stock market snapshot for you. Now, shares of PNB Housing Finance surging in early trade after 1.39 crore shares amounting to 5% of equity changed hands on the bourses. The overall deal size stood at 1,032 crore rupees. Sources told us earlier that General Atlantic at Singapore was to offload its entire 5.1% stake in the company. 1.2 crore shares or 14.5% equity of IT firm Cyient exchanged hands in an 883 crore rupee block deal today. The promoters are believed to have sold a part of their stake as of the 30th of June. The promoter holding in Cyient stood at 66%. Well, the big interview of the day, a merger of all cement businesses under one listed entity like Adani Cement would be the ideal way forward, but it's not on the anvil. That's the word coming in from Ambuja Cement CFO Vinod Baheti. Baheti also said that Ambuja will look at more acquisitions to fuel growth, but only if the price is right.
You've drawn up that roadmap that by 2028 you go to around 140 million tons odd. What kind of industry capacity would you like to have? I think you're currently mid-teens and you'll be talking about 20% odd. Tell us the outlook.
Yeah, so as of now, our market share is overall around, say, 12 to 14%, and we will be moving to 20%. And if I see an interesting situation here, that we are the ones with an expansion of our capacity to 140 million tons, we will have an improved market share compared to others who are also expanding, but they will be retaining their market share. So when I look at, say, from 14 to 20%, I have a 6% improvement in terms of my market share at 140 million tons capacity.
Now you have three assets, right? Three cement assets which are listed. ACC, Ambuja as well as Sanghi. When do all of them come together? First, let's focus on the merger between ACC and Ambuja. And is it on the cards sometime soon, say in the next fiscal?
Nigel, I think so, whatever, when it will be there, we will make it to the markets. But as of now, no such plans. But of course, we have already started our journey of consolidation. Okay. The first one was the cement business of Adani Enterprise, which is Adani Cementation Industries Limited, which is under the merger process with Ambuja.
Got it.
But as and when we follow the other steps, we will definitely inform.
Because the street is wondering why do I have three listed entities, right? Sanghi should get folded up in one of them, and these two as well should come up.
Yes.
In the next 2 to 3 years, do you think that will be the plan, that we'll have one listed company, Adani Cement? Should that be a possibility?
Ideally, that should be the way forward.
Well, from one exclusive newsmaker to another, outgoing SBI Chief Dinesh Khara has advised banks to strive for a balance between margins, asset quality and growth. Khara also said that tax efficiency determines which financial instruments are the most attractive. This comes after the Finance Minister asked PSU banks to organize special drives to boost deposits. Khara will retire on the 28th of August after a 4-year stint as chairman. He joined SBI as a probationary officer in 1984. Here's a snippet of Dinesh Khara's exit interview.
Financial institutions and more so in the banks, it's more like it's a trinity. One is, of course, margins, second is asset quality, and third is the growth. So this is a trinity which needs to be balanced out. When it comes to various financial instruments, how tax efficient are they eventually will decide the acceptability with various savers groups. So it depends upon the target customers. So that is something which was brought out. But yes, of course, it was deliberated, debated. Of course, these things take its own course before any final view is taken.
Well, that's the SBI Chief Dinesh Khara on his tenure and, of course, the challenge ahead for banking. Commerce Minister Piyush Goyal has said the rapid growth of e-commerce companies is not a matter of pride but a matter of concern. Speaking at an event in the capital, Goyal singled out e-commerce giant Amazon, saying that Amazon was not investing in India in order to support the Indian economy but to cover losses on its balance sheet. Goyal said that while the e-commerce sector is crucial, its growing dominance needs to be carefully managed.
Are we going to cause huge social disruption with this massive growth of e-commerce? And I don't see it a matter of pride that half our market could possibly become a part of the e-commerce network 10 years from now. It's a matter of concern. But I'm not wishing away e-commerce. It's there to stay. But I don't deny that e-commerce has a role. But we'll have to think very carefully and cautiously what that role is, how that role can be in a more organized fashion. Is predatory pricing policies good for the country? When Amazon says we are going to invest $1 billion in India and we all celebrate, we forget the underlying story that $1 billion is not coming in for any great service or any great investment to support the Indian economy. They made $1 billion loss in their balance sheet that year. They have to fill in that loss.
And speaking of the e-commerce sector, sources tell CNBC TV18 while discussions on the draft e-commerce policy have been completed, there is no immediate timeline for approvals. Remember, the draft policy was released by the Commerce Ministry in 2019, and it seeks to create a regulatory environment for the sector and protect domestic entrepreneurs. Parikshit is standing by now with more details. Parikshit, you know, if you just go by the comments that have come in from the Commerce Minister, it certainly seems like the e-commerce policy could perhaps be pulled out of cold storage.
Well, this is something that had happened 4 to 5 years back as well. Piyush Goyal has made some very strong remarks against e-commerce companies, saying that they are not making any favor to India by investing in the country. And he had asked for a level playing field. Now, we are looking at the third term of the Narendra Modi government. Recently, government officials had indicated after the swearing-in was completed that the e-commerce policy is on the anvil. Now, this is what we have learned, that since 2019, there have been discussions on it. The discussions were completed about a year ago. The final proposal presentation on the draft e-commerce policy is ready. The final proposal is awaiting approval from top levels in the government. So until that final approval comes from top officials, the policy is not going to go through or even reach the cabinet. So we are awaiting some movement on that, but for the moment, there is no immediate movement on the e-commerce policy, and there are a lot of different and very strong opinions on the e-commerce policy. On one hand, you've got the trader community, the Confederation of All India Traders, headed by Praveen Khandelwal, and largely the trader community has been a backer of the BJP, and they have been against some of the practices that global e-commerce companies have followed in India. So the government has been trying to strike a balance between some of the global e-commerce players and also the interests of brick and mortar stores, the MSMEs in the country, making sure they are not harmed. So it seems that Piyush Goyal is once again catering to that sentiment of the trader community in India. Now, whether the e-commerce policy will see the light of day, that remains to be seen. But what we know is that the policy presentation is ready, but it awaits an approval from the government and is yet to be taken up.
All right, Parikshit, many thanks for joining us. Shares of ICICI Securities down 7% after the NCLT Mumbai bench approved its proposal to delist from the exchanges. The bench also rejected the objections filed by Quantum Mutual Fund and Manu Rishi Gupta. Remember, ICICI Securities had presented a plan to delist and subsequently merge with its parent firm ICICI Bank in June of last year. Baiju Ravindran has assured employees that they will receive their salaries for July as soon as he regains control of the company and the bank accounts, even if it means raising more personal debt. In a letter to employees, the CEO attributed the delay to the ongoing legal battles that have impacted operations. Baiju also said that new investors are ready to support the company's turnaround efforts. Further, he dismissed allegations that funds used to settle Baiju's obligations to the BCCI were improperly sourced, adding that it was his brother Riju who took the financial responsibility for the 158 crore rupees that was owed to BCCI. Well, here's a CNBC TV18 exclusive. The Income Tax Department has identified IVF clinics and medical colleges as sectors that could see unreported or underreported cash transactions above 2 lakh rupees. Sources say the Tax Department's new action plan has proposed extra vigil and a verification process to examine such transactions and ensure accurate reporting. Timsy is standing by with more. Timsy, so IVF centers and medical colleges now on the taxman's radar?
Tightening the noose around tax evasion, the Income Tax Department in its recent Central Action Plan for the current fiscal has asked all its field formations to keep a close vigil on IVF clinics and medical colleges, apart from the usual hotels and luxury retailers. Income Tax Department in its plan says, and I quote, Section 139A requires PAN for certain transactions, but there is no mechanism to ensure compliance. To address this, high-value expenditures should be verified using departmental data. Identifying and verifying potential circumvention sources such as hotels, luxury retailers, IVF clinics and medical colleges is crucial with this information. According to the taxman at the helm of the Central Board of Direct Taxes, there's an urgent need to address widespread circumvention of income reporting requirements for cash transactions over 2 lakh rupees. It is essential to identify high-risk sectors like hotels, luxury retailers and medical facilities. That's what this particular section says, and that's what the taxman has said. So let's see how soon taxman begins to keep a close vigil on IVF clinics and medical colleges and medical facilities, and what is the final outcome of this particular drive. Back to you.
All right, Timsy, many thanks for joining us. On to CNBC TV18 exclusive jewellery retail chain. Joy Alucas has deferred its plans to go public by another 2 to 3 years and is focusing on organic growth. Speaking to Shilpa Ranipeta, the group chairman and MD, Joy Alucas said the company is well funded and is looking to double its revenue from 25,000 crore rupees to 50,000 crore rupees over the next 6 to 7 years. Matthew Thomas, the executive director of the India business, said Joy Alucas is doing better than many industry peers who have gone public.
You had, for a second time, filed IPO papers and then you withdrew saying the market conditions were not right. And this was the second time. And after which you had sort of indicated that FY24 is when you will look at an IPO again. Now, we've entered FY25. I want to sort of understand, where do you stand currently with respect to an IPO? Are you seriously considering it in the near term?
Not now.
Okay.
Now we are only focused on our business.
Okay.
And we will think after 2 or 3 years.
Okay.
So just to add to what the chairman is saying right now, we have enough and more funding internally. Plus the bank is more than willing to lend to us because balance sheet is one of the best in the industry. Per store revenue stands at more than 180 crores. So we're doing very good compared to all the competitors who have already gone public.
Right.
So banks and institutions see that valuation and they're more than willing to lend to us. So at this point, the internal approvals is more than enough for us to accelerate for the next few years.
Right.
Well, we'll head into a break, but up next, former US President Barack Obama addresses a charged crowd at the Democratic National Convention, calling Kamala Harris the next president of America. That and more when we return. Access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Healthcare services at West Bengal state-run hospitals continue to be impacted. This is junior doctors' strike on the back of the horrific rape and murder of a 31-year-old trainee doctor, which has now entered its 13th consecutive day. The CBI questioned Sandeep Ghosh, the former principal of RJ Kar Medical College, for the 6th day. Reports say the investigative agency may decide to conduct a polygraph test on him, as there have been discrepancies in his answers. The police has arrested more than 40 people who were involved in the protest over the alleged sexual assault of 2 minor girls at Thane's Badlapur yesterday. FIRs have been registered against 300 people as well. The police have said they will make more arrests after scanning CCTV cameras. At least 17 city police personnel and around 8 railway cops were injured during the protest. Internet services have been shut down in the area and shops have been ordered to remain closed. Russia has accused Ukraine of launching what it called one of the largest ever drone attacks on its capital, Moscow. Russian military officials said that its air defenses destroyed at least 11 drones headed for Moscow and 45 in total across the country. Meanwhile, Ukraine's incursions into Russia's Kursk region has entered its 3rd week. Russian media says that over 122,000 Russians have fled the border regions after the attack. The second night of the Democratic National Convention has seen former U.S. President Barack Obama and his wife Michelle Obama throw in their support for the presumptive Democratic presidential candidate Kamala Harris. Amidst chants of "Yes, she can," Obama lauded Harris, saying that America is ready for a better story, and went on to criticize Republican candidate Donald Trump. Michelle Obama was also critical of Trump's racist jibe, saying doubling down on ugly, misogynistic and racist lies is his same old con.
I am feeling hopeful because this convention has always been pretty good to kids with funny names who believe in a country where anything is possible. Because we have a chance to elect someone who has spent her entire life trying to give people the same chances America gave her. Someone who sees you and hears you and will get up every single day and fight for you. The next president of the United States of America, Kamala Harris.
For years, Donald Trump did everything in his power to try to make people fear us. See, his limited, narrow view of the world made him feel threatened by the existence of 2 hard-working, highly educated, successful people who happen to be black. I want to know, who's going to tell him that the job he's currently seeking might just be one of those black jobs?
Well, that's Michelle Obama at the Democratic National Convention. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV18. Stay tuned. We're back in a moment.
In a very constructive meeting with Prime Minister Netanyahu today, he confirmed to me that Israel accepts the bridging proposal, that he supports it. It's now incumbent on Hamas to do the same.